Check 1 2.
Bakit ko ile board pan?
Check, check. Sound 1 2. Check mic 1 2.
Sorry to interrupt. Labar is my name.
Manja is my name.
Pleasure. Pleasure.
Sound 1 2.
Yes, if that's something.
This justifies release of such episode one. And even try to be more. Not say over 10,000 dollars.
Because no, like my point is that, I mean, you were trying to present a new foundation, okay? And if you don't talk about it, that is on the London Stock Exchange, they will not even change it there. In fact, I'll show you my international sales manager, how many hours we met. Actually, on Thursday, she'll only make the flight. Brenda was with me again. I told her, now we're ready, this is the plan. And then she would be like, because I could leave her alone. I'm sure her next month is gonna be like, so facilitate me for getting X, Y, Z from all the.
She wanted to demonstrate that you can have a party. No, I'm just saying. About to be allowed. That's what it was. I'm very fine.
Yeah.
Those that don't.
Yeah, yeah, yeah. Yeah. Yeah, yeah.
Right now, you know, what do they do?
Right, yeah, yeah. Yeah, yeah.
Down the line.
Yeah, yeah, yeah. 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 Yeah.
Unajua tena
Vibaya sana.
Song 1, 2. Check.
coming to one facility. So the next study that is what about two partners? So that's the general. So there are the same, but there's no report on the plan. It's to look at the challenge. And thirdly, means that the center of who are getting access to this knowledge. A digital plan, this rare from the systems by showing the layout. And it's on the price of the price of this very important. And now we give us plenty of work that we are not and then the thing comes up with so that the member of but one problem is not just to increase the benefits to people is to really put that out on second one's person. Is what I know is that means that the end of the year, so that's kind of what I should have. So that the other they're not seen as any people and negative, which I think they might be, but also in other circumstances. I don't think that it's more difficult in people can know the campus so I think so I think that capacity as initial is an issue. I got to do it. But I do.
One, two, 1, 2.
God, aparte.
1, 2.
Link your, what you want to.
1 2
Mbona hii video sisikizangu?
Affordable funding. This is 26. We want to those deliveries to the first chapter. Also meant that we get to experience them and the building capacity in terms of their sourcing, in terms of their level of long-term rental. That's what I've been done. But the specialty of doing it, but now in terms of home loans, we have another for the so what I think has been delivered is talking about is capacity building the capital to make sure that they are adequately resourced and they have the know-how and how to launch a lot of products. We've also come and make sure that we partner with a wider sector players. In this case, we're looking at players in the supply side, those who are developing the things, and the players on the demand side. So and other value chain aspects, policy makers, the government, other private institutions that are there to help us see the housing space. Specifically, look at partnering with professions such as the solar institute of Kenya, the technical areas, all this. So what we as SMFC have done is provide an avenue for all these work and to have a discussion and identify opportunities that are very affordable opportunities and challenges, the challenges that are there, and possibly identify solutions that will actually work for everybody. Say we need some opportunities to go And not only do we would income to about interaction and not with the income payment between the lot of
Sound of 1, 2. Good morning, everyone. This is just a note that we are getting ready to start, and also just putting our online guests on standby. Thank you all for being here on time as well. I also want to request us, especially those who are right at the back, to try and fill up the seats in front of us, actually the tables, if you're to get a vantage view as well of the two screens right in front of us. So maybe I can move the table right at the back to that on my left. There's an empty table there, please, if you don't mind. And also on this other side as well, we have more sitting space. We'll leave front tables for our guests who are just going to walk in a few minutes. Otherwise, welcome. I'll give you the details as we progress, and also just having the online audience just to be on standby as we're ready to start, and enjoy yourselves as well. So shortly, we'll just be progressing on with the testimonial videos as we go along. Hello, hi. Hi, how is sorry, I know you all well settled. Yes, yes. But kindly ask if I can move to some table. I'm not moving everyone on this last one. That's for the sake of the cameras. The stage looks a bit short. Hello, hi, how are you? Sorry, I'm moving everyone on this road to the front, just ahead of the cameras, because we are live, but it doesn't look good distorted. So we can move to the front. Hello, hi. I'm moving us to the front.
So that's why I think it's got so healthy. So I think anything for many years, many of us people so high, so why so that's the other thing we have today. And if it's a job, don't need to thanks. And then we'll that was formed so that we still it was the partners that is part cycles. And the definition that partners are potential. So we participate for this program, and that they access and the class and
laid out their aspects. So that's how I want.
So I mean, we're all excited to hear a little bit more about how we're able to not to shift from payments into calling out. It's not
Actually, we believe that's once we have markets, because means that the range of are taken monthly. For instance, that's the way because the ways that we have approached this market, we have long term, fixed rates are getting an average rate 9 and 9.5 and fixed for it and update. So that is really you're able to plan and therefore
Yeah.
the event.
Yeah.
What do you expect much comes to get there? That's really see sometimes don't see the interest
Yeah, I wanted to talk about the numbers. And because when we have the conversation with this, a lot of people were thinking, so I added X amount or I found a house where 3 million or 5 million. How much do I get to pay? Can you just break it down?
actually don't that's just every
Then you have monthly.
because here you're talking about this. I think so that creates a very good organization. Every year, so premium has like 5,000.
And who qualifies?
And you don't have the 50,000 actually outside this funds. And the reason why that is so because we are addressing when you look at the mortgage out of a sector by one because they have and when you look at the lowest,
What is it?
We are happy that the each session now we did a lot of so meaning that is now the cost out and because now so the only that is Kenyans who are under 50,000 so that is the because my the only reason they cannot afford because of cost. So they are buying one of and also reality over the short time.
1, 2.
Being long south and
When we say
1, 2. All right, ladies and gentlemen, a very good morning to you and welcome to our Kenya conference for 2023. Good morning. Very well. Thank you all for braving the chilly weather to be here as well, right on time as well. My name is Laban Cliff. I'll be your facilitator for this session, of course, and the panels to go along for today and tomorrow. Thank you all very much for being here. And because I cannot give a hello or a high five, maybe this is a good opportunity to say hello to your colleagues. I don't know how you're seated based off on your colleagues or industry networks. So please pass a warm jumbo and tell your table mates, Karibu Mombasani. Thank you all for being here. Our theme, ladies and gentlemen, is look affordable housing for economic transformation and social inclusion. Welcome again to the Sarova Whitesons Mombasa. We are under 24-hour surveillance, and of your pass to attend this. I see all of you having your badges. That will be your pass and your identification across all this period that you're actually here at the Whitesons. I'm told as well that in case of any emergencies as well, all the lights at the back will go green and we'll follow the queue of the fire marshals as well. This is at the Makutano venue where we are at. So please feel free and comfortable as the day progresses as well. A detailed look of the program, I'll kindly ask you, first of all, log into the Sarova Wi-Fi where you can just go on your browser. This is not to catch up with work, but to get connected. We are being very environmentally sensitive. So once you get online on the Sarova, the code is Kenya 2, and maybe Monzie can project that. We have the code to connect, and that's on the, once you get onto the Sarova Wi-Fi, put that code, that's Kenya 254. That will give you access to the network, pretty fast, I must say. And once you do that, there is a QR code on your table. Now, that QR code is how you'll access the program. There's a QR code there, and that's how you'll access the program. To our online audience, that will be shared to you as well on your chat platforms, and you can be able to follow the same. Now, to make it easy as well, during our panel discussions, we've gone online as well on the Slido. The Slido as well will have a code to access any information you want to share, any thoughts that come to mind, any comments, Q&A. We'll have it under the code 398-9826, or you can just look at the event hashtag, which is KAHC. That's Kenya Affordable Housing Conference 2023. Don't worry, as we go along, I'll keep reiterating that so that we can all be very interactive as we go along. That'll also be a way to know who's in the room. So don't click on anonymous. You might just want to also share your name and also your the company you represent as well. We also live on our social media platforms on YouTube, LinkedIn as well, and X, or on the same hashtag. So ladies and gentlemen, without further ado, it's my absolute pleasure to just make you all feel comfortable and welcome again to this conference. We have an exciting program lined up for you. But before, without further ado, to just give welcome remarks and to ensure that we're all getting ready to start, allow me to give the opportunity now to none other than our CEO and MD, that's Mr. Johnson Ole Tetia, who is also a well-experienced gentleman, having worked in the regulatory authority, that's at the Capital Markets Authority, at the National Treasury, and of course now leading the team at KMRC. But before he comes up, allow me to just recognize the team from KMRC that has done a fantastic job behind the scenes to have us all here. They are all donned in some nice white polos. So please, the KMRC team, please stand. Let's give you a round of applause. Thank you all so much for, I'm going to ask the delegates to please appreciate the KMRC team. Asanteni sana for the great work. And of course, Johnston will speak as the cheerleader and the captain of that ship to begin with the opening remarks. Let's give him a round of applause, please, as he comes up.
Thank you, MC. Good morning. I just want to start by appreciating our guest this morning, Mr. Albert Mwanda, who is the Director General for Budget, Fiscal and Economic Affairs at the National Treasury. He's actually a former colleague, who is representing the CS National Treasury this morning. Welcome, DG. I extend a warm welcome to all of us gathered here this morning, and including those who are actually joining us virtually to the third Kenya Affordable Housing Conference. Now, it's an honor to have such a diverse and esteemed group of policymakers, certainly represented this morning by DG Mwanda, experts, innovators, and advocates in this important conversation. We made this deliberate effort at KMRC to bring all the stakeholders together who are in the housing value chain to have conversations and discuss key issues, challenges, and opportunities that can be optimized to enhance access to decent and affordable housing in our country. I know the issue of affordable housing resonates deeply with all of us. Access to safe, decent, and affordable housing is not just a fundamental human right or need. It forms the bedrock of stable communities and thriving economies. It's a challenge that demands our collective attention, innovation, and collaboration. As we convene here this morning, we acknowledge the multifaceted nature of the affordable housing crisis. It's not solely about constructing buildings. It's about creating homes. It's about addressing social, economic, and environmental factors that impact housing affordability. It's about ensuring that we resolve issues that impact housing. It's about ensuring equity and inclusivity for all individuals and families, regardless of their economic and social backgrounds. In our discussion over the next 2 days, let's delve deeply into these complexities. Let's share insights, experiences, and strategies that have proven successful in different contexts. Let's explore innovative technologies, financing models, and policy frameworks that can revolutionize how we approach affordable housing. I urge each of us to engage wholeheartedly, to listen attentively, and to collaborate openly. Let's challenge assumptions, break down barriers, and foster partnerships that can drive meaningful change. Together, we can envision a future where housing is not a privilege, but a fundamental right for every individual. This year, we have added, as part of the program, on-site visits to affordable housing developments here in Mombasa. We believe this will buttress and showcase evidence of our collective efforts of housing Kenyans, especially those on the lower middle income. We have also included at least one case study of a homeowner who has gone through the process of home acquisition under the KMRC affordable housing product offering. And this is for purposes of highlighting the customer journey, because we believe the lessons learned and challenges highlighted will enable us to refine our approaches. We take note of the challenging macroeconomic environment, which has had the undesired effect of increasing the prices of properties and at the same time reduce the disposable income of potential homeowners. We at the KMRC are working with our funding partners, and very soon we shall be communicating key adjustments to our product offering to make it more attractive without deviating certainly from our key focus of ensuring that the majority of Kenyans can afford housing. I'm confident that the conversations and connections made during this conference will pave the way for actionable solutions and inspire us to redouble our efforts in tackling this pressing national issue. Thank you once again for your presence and commitment. Let's embark on this journey together, empowered by our shared dedication to creating a world where affordable housing is within reach for all of us. Thank you.
Thank you very much, sir. Please, another round of applause to our CEO and MD KMRC as well. And as he rightfully put it, we are honored to have none other now as our chief guest, Mr. Albert Mwenda, who's the Director General, Budget, Fiscal and Economic Affairs at the National Treasury, inviting him now to give his remarks, after which we'll have a plenary as well. Let's give a round of applause to our chief guest as well as he takes the stage.
Thank you. Thank you, Bwana MC. It is audible. You know, I'm a bit challenged in terms of height. CEO of KMRC, Johnson Oltetia. Distinguished guests from the housing sector, colleagues from within government, all protocols observed, good morning. I am here to represent the Cabinet Secretary to the National Treasury, Professor Gunandungu, who has been away. He was supposed to jet in today, but is again required in some other meetings in Nairobi. And therefore, he asked me to come and represent him. But before I share his remarks, allow me to reflect on the journey. I think seeing KMRC where it is and the team gathered here, experts from the housing sector and in the financial sector supporting the housing fraternity, it has been a journey. And I am excited because the team that was behind this is still involved in this process. And I have in mind the CEO for KMRC. When this journey began, there were ups and downs. I think it's the patience of one Johnson Oltetia and other colleagues and other people who gave in their time and effort to ensure that KMRC exists and functions. There would be processes that would be begun to establish KMRC. They would take long, but it's the likes of Johnson Oltetia who saw to it that this happened. And I know also amongst the group here, you have also contributed to what KMRC is today and what we see today in the housing sector. I think point number two, and what gives me confidence and the faith that the housing sector is on the right trajectory, is even the team that is leading in terms of the policy in this sector. You all know that you have a very good support, even from the highest level, from His Excellency the President. He's been a supporter of affordable housing. The PS for housing also has been a great supporter. Even when the policy decisions that were being pushed by a government did not have as much support, he stood, even in rooms, and I've been in rooms where sometimes there is resistance to some of these policy changes, but you want a champion like that heading reforms in a sector, and you have then faith that we are on good grounding. No amount of resistance, even no amount of sweating would stop the PS for housing from pushing his agenda. Why am I saying this? I think it's input or contributions like this that see ideas coming to fruition. And I thought I should mention, I think the reforms in the housing sector is the persistence of a small group that have a vision that drives reforms. And therefore, mine is also to encourage those in this sector that if we all rally around the teams that are leading this, we should see great impact from the housing sector, whether it's the agenda on creating employment opportunities or growing, contributing to growth in this economy. We have a great potential. Having said that, allow me to then share the remarks by the Cabinet Secretary. The CEO KMRC here, representatives from the development partners, distinguished guests, ladies and gentlemen, good morning. I am pleased to join you at this important convention that brings together stakeholders in the affordable housing value chains to discuss and propose solutions on how to accelerate uptake of affordable housing in Kenya. As we all know, affordable housing is one of the key pillars under the Government of Kenya Better Agenda. This is the first time for the CS to attend, and I representing, is the first time that the CS was invited to attend the affordable housing. But I have been briefed on achievements gained because of proposals which came out of the last two organized KMRC. I wish to congratulate KMRC for bringing us together to have this timely discussion and recognize all of you for sparing your time for these important conversations. Allow me to also thank the World Bank and the Habitat for Humanity and the National Treasury for joining hands with the KMRC to make this conference a success. As you may be aware, the Bank Supervision Report prepared by the Central Bank of Kenya that was released in May 2023 highlighted the value of mortgage loans that are outstanding increased from Kenya shillings 245.1 billion in 2021 to 261.8 billion in 2022. This is a 6% increase. And this translates to a mortgage contribution to GDP at 1.96 in 2022, which is still low given the size of the Kenyan economy to our peers. To make matters worse, the outstanding value of non-performing mortgage loans increased from 28.3 billion in December 2021 to Kenya shillings 37.8 billion in December 2022. The report also highlighted that there were 27,786 mortgage loans in the banking sector as of December 2022. These are by far lower given the housing deficit that Kenya is facing. Ladies and gentlemen, I would like to reflect and highlight on the policy interventions, therefore, that we are undertaking to drive the growth of the affordable housing in Kenya. But before I do that, I would like to go I would like to highlight some of the achievements in the housing sector. Courtesy of KMRC, our citizens can now long-term fixed rate home loans at single-digit interest rates through the participating financial institutions. KMRC has already refinanced home loans close to Kenya shillings, valued at close to Kenya shillings 10 billion, to a total of 12 primary mortgage lenders. Through the establishment of the KMRC, Kenyans can now access mortgage loans at single digits. And this is no mean feat, given where we are today and where the interest rates are. We have fixed interest rates and longer tenor mortgages of up to 25 years. This enhances predictability and affordability of the products to Kenyans who want to own more homes. Third, KMRC has so far onboarded 20 primary lenders. This means that the benefits of the KMRC products can be accessed by Kenyans who are customers of several SACCOs as well as banks. And this brings or enhances competition as well as customers' benefits. Ladies and gentlemen, as you are aware, the Finance Act of 2023 introduced mortgage interest relief on mortgage loans by SACCO. This is a benefit that was previously enjoyed by the bank mortgage borrowers only. Through an amendment of the 4th schedule of the Income Tax Act, SACCOs are now among the institutions whose borrowers are entitled to mortgage relief. I urge SACCO members among us to take full advantage of this benefit. The housing development, the National Housing Development Levy was also introduced through the Finance Act of 2023. We appreciate that this was one of those issues which attracted a lot of public participation. We received very useful suggestions as well as critics, which helped to sharpen our thinking on how to use the housing development levy to spur economic development and enhance delivery of affordable houses to Kenyans. As a government, both at the National Treasury and the Ministry of Lands and Fiscal Planning, we are working on regulations that ensure the levies collected are optimally utilized to address the housing gap, as well as spur economic development through creating employment. As we all know, KMRC has government shareholding. that is majorly owned by private sector and development finance institutions. We are aware that many Kenyans have urged their banks and SACCOs who are not members of KMRC to see how they can join KMRC funding program and thus benefit from the low interest, longer term, and fixed rate. This is an issue we have picked and are considering keenly. Ladies and gentlemen, finding opportunities for the lower income segments gain access to housing is a critical issue. As a result, more innovative financing solutions are needed. To this end, KMRC is working on piloting a risk-sharing facility to help to de-risk borrowers who are deemed risky by the banks and SACCOs due to the nature of their income. As a government, we are being faced by difficult macroeconomic challenges that we must address at the moment. These include liquidity challenges that limit the capacity of government to fund the development priorities, the high interest rates, depreciation of the Kenya shilling against major foreign currencies, leading to high cost of businesses, high cost of running businesses, as well as high cost of living, and ultimately also resulting in high cost of debt service. However, I wish to assure you that we have taken measures to ensure that the economy is back on track and retains its resilience. In this regard, investment in better priorities, bottom-up economic transformation agenda priorities, including affordable housing, will support the economic recovery and sustain growth. I am delighted to note that despite these challenges, our economy is reported to have grown by 5.4% in the first half of 2023, largely also due to improved performance of the agriculture sector, but also resilience also in the other sectors, such as service industry. It's also important to note in this sector, it is you to know. So, it should please you to note that the government has recently had successful engagements with multilateral development partners, including the IMF and the World Bank. And we have reached staff level agreements on scale up of financing with both the IMF and the World Bank. These staff level agreements would potentially unlock additional financing at concessional terms, and thereby supporting government's agenda on economic recovery. Besides, these agreements also demonstrate that government policy reforms are on the right trajectory, and therefore we should expect that these will bear fruits in the near future. And therefore, pending the approval of the respective boards of the IMF and the World Bank, we should expect to receive some additional concessional financing. This also sends the right signals both to investors and to Kenyans that the country should get out of the challenges that we are facing currently. In line with this, I also want to give you government commitment that the National Treasury will continue engaging, evaluating, and making policies that will create impact to the affordable housing sector. As I conclude, ladies and gentlemen, I wish to remind us that as we take stock of the achievements made so far, we need to critically review the existing challenges hindering the delivery of the housing and ways of resolving them. I will be glad to see practical solutions coming up from these 2 days deliberations. I wish to reiterate that the government support on all initiatives geared towards achieving the affordable housing agenda. As a key shareholder and as a key shareholder of KMRC, we will continue offering our support to enable these institutions access funding from DFIs, development finance institutions, as well as other funders at concessional rates for the benefit of the end borrowers who should access mortgage loans at even lower rates. With those few remarks, I wish to thank you and to wish you well in your 2 days deliberations. Thank you.
Another round of applause, please, to our Honorable DG. We're grateful that you're here, and maybe at this point in time, and rightfully to where you actually just stopped, where you're looking at the recommendations and deliberations that are taking place here. I know as a policymaker and seeing the experts in the room, this will be welcome. So before I jump into some sort of a plenary session, and in due respect of your time that you've given us today, I would just want to recognize and maybe just give you a feel of who's as we go along. First, I'd like to really appreciate, and you alluded to them as well in your speech, our sponsors, to begin with, of course, yourselves of the National Treasury, the ministry. So please, a round of applause to the team of the National Treasury for facilitating this session. We also have, do we have any other colleagues maybe who come from DG's office and former MD's workplace? Anyone here from the National Treasury, maybe colleagues who have joined us? If you could please stand. I can see you all being vacant to stand. Okay, let's give a round of applause. Wow, 2 tables actually. Thank you so much. It's good to have a feel of who's here, even in the spirit of our networking as we break, and also on slide as we network. The World Bank Group, representatives from the World Bank Group. Any representatives from the World Bank Group? Let's give them a round of applause. I see. Thank you for standing very well. I like that. And I also like that you're all not on one table. So also networking as well amongst your industry colleagues. KCB Group, well represented and branded as well. And thank you so much. Thank you very much. Thank you. Appreciate it. And thank you for the sponsorship. Habitat for Humanity International. Habitat for Humanity International, where you all at? Let's give them a round of applause. Thank you. Of course, some of our sponsors are also exhibiting. Needless to mention, KCB, you'll see their stand right outside. NCBA, thank you so much. Anyone in the room? Of course, they have their tents as well. Thank you so much. Terrian Homes, HFC, Terrian Homes, very well. Thank you so much. HFC as well. Thank you very much, HFC, appreciate it. Fair Deal Properties, there you are. Thank you very much. Appreciate it. Last but not least, United Sacco. Thank you, United. Thank you for being here. It was an absolute pleasure to actually see a colleague, Chief of Staff, and I want to mention Jermaine Omani from the Office of the President, together with Shazia Khan, who's also a venture capitalist. So please give him a round of applause. I think they're on this table, and I must say I'm done with my networking beats on my side. So, ladies and gentlemen, this is more or less an open plenary, and of course, my colleagues will be passing a mic around where we will be asking you a few questions, and maybe if you want to just reiterate, if I could just maybe give you an update on what was actually shared by the DG, looking at kind of the key highlights, calling in for collaboration, especially mentioned by our MD John as well, creating homes and not just brick and mortar. I think in my perspective, I look at it in terms of housing is its dignity. It's creating, giving an opportunity for our populace to really have dignity and a roof over their heads. 6% mortgage uptake, looking at the mortgage contribution on GDP still low. The non-performing loans capped at 7.8 billion. So you're looking at the deficit, what's that creating? There's a conversation about the housing levy. I know we have media represented in the room. Perhaps that will be a key news hook. Looking at the lenders, appreciating the role that the lenders are having. And the SACCOs and banks, the cost of debt, servicing the debt as well. And I think the key call to action here is looking at how can we provide solutions and recommendations. I must admit that this conference also we're having rapporteurs. I think Olive and the team are following this very closely. So this is more or less like an open plenary. Should you wish to ask a question, give a comment, Eric will just put up on the Slido. We have the www.slido.com. As we go along in this conversation, please feel free to introduce yourself there, and if you have any question and comment as you go along. But first, maybe before we do that, let's just have a quick recap. When I MD, I think the charge is on you in terms of KMRC. First of all, and the DG alluded to the great work that you've done, having 20 primary lenders, giving in the single digits over 10 billion of loans as well. So what's the opportunity going forward if you look at it in your crystal ball?
Thank you, MC. So we have a great opportunity going forward. And when you look at what is currently happening in our market in affordable housing, particularly when the Ministry of Lands and Housing is now focusing on structuring the affordable housing levy, there's a great opportunity there. The most significant challenge we've been facing is actually on the supply side. So while we have done a lot, or at least much, in relation to the demand side, the supply side has not been moving much. But now, with financing for supply, which is essentially going to help in the construction, potentially also in laying in the horizontal infrastructure, we believe there will be a lot more units that will be coming to the market that actually qualify for KMRC financing. And so, in our view, we are looking at increasing the scope of our lending. We are also looking at expanding some of the products that we have, or even refining the KMRC products that we have. I think I alluded to earlier about the challenges we're facing in the macro environment that's making it difficult for people to borrow. And we are going to tweak our product to make it possible for people to take up those loans, potentially expanding the bands that we have, potentially just removing some of the challenges we have in relation to the percentage distribution in terms of the affordable and the market rate mortgages. And also potentially looking at increasing the maximum amount in terms of the income threshold that we have. So we're currently having those discussions with a view that we're going to change, and that will mean that we'll increase the number of people who would then qualify to borrow from KMRC. And that means once we have that all done, we'll certainly communicate to the primary lenders and certainly to the potential borrowers on that arrangement. So we are very, very optimistic that this year may potentially be, we have reached, in my view, the lowest point, and that from 2024, we believe we are going to just be focusing more upward. Thank you.
Thank you. All is looking good as well. Bonadiji, from the ministry side, I think you mentioned some bit of the policy interventions. I mentioned about the housing development levy. I think maybe just reiterate on really what this will portend in the affordable housing sector.
Thank you. A good question. And I think being in the financial sector, you all know that the challenge that we've been dealing with, the reason why our uptake of mortgage is low is partly also that we've not been able to sustain supply of decent housing that then can service whatever demand that might be there. But point number two is that on the supply side, the mortgages were tended to have very high levels of variability, so that like now when interest have moved upwards of 15% in the market to 18, then you can imagine if all of a sudden you had a loan and you had scheduled your repayments, you are hit with a bill that you cannot then service. It means there is a threat to foreclosure. The problem with that is not that, or that one isolated event, is when that message now gets to the market that the mortgage facilities are risky, discourages potential homeowners from uptaking. So the solution here is to then ensure two things. One is, as we fix the supply side by ensuring that the markets are able to deliver predictable rates and predictable tenor for the mortgage facilities, we also address the demand side. And this is, the housing sector will not offer efficient outcomes if we don't fix the entire loop, so that we have demand. And the essence of having the housing levy is to ensure that when developers have completed their work, then government can guarantee the up units. Then you will see a scale up of developments, and that's the idea. So you can see the housing levy is trying to address the demands, the supply, while KMRC is addressing the demand side by providing the necessary mortgage.
Well, good, sir. So the conversation here from PM, as is initialed, we seem to be happy that we are accessing funding from IMF and the World Bank. I thought our challenge was our high debt level. Why are we borrowing more?
I think the reason why I talked about the success we've had on the discussions, I think two things. One, the players in this room, the institutions represented in this room operate in the financial realm. So it matters a lot what then is happening on the fiscal and the monetary side, because the fiscal policy will drive, say, the interest rates. They will drive the exchange rates of the Kenya shillings against major international currencies, and the the challenges we are having, we see them as short-term, and they are largely also driven by actions that are taking place outside the country. When developed countries like the US raised their interest rates to manage the inflation rate in those countries, there is capital flows that is against or not in favor of the developing world. That would interest the players in this room, because when, say, you are loans to borrowers, you want to be sure that you will recover. You will recover whatever you disburse. And the capability of the borrowers to pay back is dependent on what we do today. And therefore, what government is doing in terms of containing the interest rates, you know very well, the central bank has been tightening the monetary policy that is intended to address the inflation rate. Of course, interest rates rise up, the cost of borrowing goes up, but we also should be concerned when inflation is going up. We have an impact on, so if we contain inflation, it means the cost of running a business and the cost of living is contained. So the income that you earn then can be stretched. So if you want to buy houses, then you have a higher level of savings that you can reserve for housing. So it's a balance. You don't tighten today, you lose your control on inflation, and you then create other unintended consequences. The other important parameter that we keep an eye on is the cost of debt. Depreciation of the shilling and the high interest rates have an impact on our cost of debt. So the programs we are running are intended also to contain the cost of debt. And we are also, we are on a program with the IMF. And this program is aimed at helping us sustain the reforms that we are pursuing. And what are the reforms? It's fiscal consolidation, for example, and that is to stabilize the growth of debt. If we reduce our accumulation of debt, it means we have lesser exposure when there are variabilities in these parameters. And number two, then we create buffers so that we are able to respond in terms of supporting priority government interventions. If we did not have fiscal buffers, it would be very difficult to, for example, support the housing development agenda, for example, on the spending side. It would not be possible, for example, to pursue investments in agriculture, because we need those incomes, because it's those incomes, when they grow, that our people are able to save, whether it's through pensions, and then unlock those resources to support other government development. They are all interlinked. And therefore, that's the reason why I wanted to mention that we know there are these challenges. We are working on them, and they are not necessarily, they are not imposed on us by the IMF. It's because we believe in those reforms. The IMF and the World Bank are just coming to support us. It is also important to clarify that the problem we are having is not a budget problem or a solvency problem. We have not reached a situation where we are unable to service our debt. What we are dealing with is a short-term problem of liquidity, that we are unable to raise affordable resources from both the international markets and from the local market. So what do you do in such circumstances? Then you reach out to partners who can provide concessional support.
Noted, sir. Thank you. There's good feedback here as well to Johnston as well and the team. Asante Sana KMRC team for putting this conference together. Let's share insights, knowledge, and learnings. Looking forward to the next 3 days. Samson Gishia asks, legislation in 2021 provided for stamp duty exemption. That's for affordable housing program, for first-time home buyers. What is the National Treasury doing to ensure that KRA effects this policy initiative? I don't know if Johnson, you want to take that or DG. All right, great. So it's Treasury, and also lastly, maybe it's what's the Treasury, the National Treasury's position on sectional title provision for the affordable housing units on public land?
I'm not sure I got. Is it a question around what we are doing on the tax policy to support the housing agenda?
So I'll repeat again, there's when legislation in 2021 provided for the stamp duty exemption for AHP, first-time home buyers, what's the National Treasury doing to ensure KRA effects this policy initiative? Samson is in the room. I can quickly pass the mic around for a good banter. Should you want to ask the question in Swahili?
So thank you very much. My name is Samson. I'm a scheme relationship manager for KMRC. Congratulations, KMRC. And I also manage civil service scheme fund at 5%. So my question was, this legislation was passed in 2021 to exempt people who are buying affordable housing, but we are yet to see it being implemented by KRA. So we understand at National Treasury, you really want to have some funds. So we wanted to know, are we going to see this policy being implemented soon, or what is the position? Is it something that you want to implement, or it's no longer there? Second question, maybe so that you can answer them both. We understand that the custodian of the public land is National Treasury. So we have seen affordable housing where units have been built on the public land, but getting a section title on it becomes very hard. So today, I have KMRC funds. I have people who need to buy those homes. I have civil service fund. I need those officers to be able to accommodate that, but I don't have a section title. And so as a banker, I'm not able to facilitate the unit or give a loan to that particular person. Yet I have enough funds to be able to deliver the same. Thank you.
Thank you very much. I think there are two sets of reforms touching on tax policy. One, and the critical one that has huge potential is the affordable housing levy. The affordable housing levy, it's already being implemented. The levy is already being collected, but into an account. I think the challenge has been that a fund was contemplated outside the National Housing Development Fund. That housing fund requires some regulations. And I believe that's what is pending. And I am aware that there is already an initiative jointly by the State Department of Housing and the Attorney General's office towards creation of a fund that will make it much more, the management of that fund more efficient. The details for that should be clarified. I am told the PS for housing should be here either today or tomorrow. He should be in a better position to give you the latest on what then is happening around there. But it may not be entirely correct to say that, you know, your payslip, if you are on a payslip, we are already deducting the housing levy, correct? So it's already being implemented. But the establishment of that fund is what may be pending. But the PS for housing should be able to confirm that. On the other side, there are a number of, and I spoke to some of the reforms around tax incentives to this sector. We've given, especially if you are a developer of a sizable number of units, you are entitled to tax exemptions. And also, if you are using climate-friendly technology, say solar panels, you also benefit from some tax exemptions. Those, as long as they are in the law, they have been approved, then they should be processed. There should be no problem. But the process, the way you process them, if you are a developer, you first go through the ministry responsible for that policy. In this case, it would be the State Department for Housing. And through that department, then they write formally to Treasury. That process should not take long. I speak knowing that they are dealt, when they come to Treasury, they are dealt on a matter of priority. So within a week or two, you should get the approval for a request. And we've done for a number of those developers in the housing sector. So I hope I have responded to your question. Where I may not, in terms of the specific, where the status of where we are on the regulations, please put that question to the PS or the CS housing when he comes.
Thank you, sir. Thank you. Allow me to, as you drink a bit of water. Yes, Emily, as you, maybe we can chime on that as I add a few more questions. There's also a conversation here about what is KMRC doing to ensure the supply side activity extends to parts of the country beyond the urban areas that have dominated the real estate development space. And then lastly is, sir, could you expound on how you're looking to support suppliers of mass affordable housing schemes?
Thank you. I just wanted to throw back the question that was raised about the tax concessions. Have we tried to process an application, for example, and we have experienced a challenge somewhere that is making it practical for us to realize that benefit? Because I think it will be important to get a real experience so that we know where the bottleneck is or where the challenge is, so that we can actually make this discussion practical, or even just go back and decide that this is where the challenge is and we're going to have some interventions or, you know, discuss with the relevant people to resolve that challenge. Has anyone tried? There's, yes, Sita. But Sita, you're not a practitioner.
Hello, everyone. Thank you. I'm Sita Shah with FSD Kenya. I just wanted to highlight that we have an initiative with Kenya Property Developers Association to support 12 developers to get access to tax credits. It's still early. We know 2 have been submitted, 4 will be submitted next week. So I think it's speaking to what you're saying. We need to help to make sure the processes go well, and we'll only learn from the process. I just want to highlight that the initiative is there, and we're really trying to get them done in batches. So it's easier for the ministry, it's easier for KRA, but we're still a little early to answer your question on whether there are gaps and whether they can be improved, which is the whole purpose. And maybe even creating a digital portal so that it's not just the application value, but then getting the VAT exemptions themselves will be very quick, hopefully.
Very useful. Thank you very much, Sita. So just going back to the question around what KMRC is doing to support greater uptakes, I believe it's really not supply, it's pretty much about demand. KMRC mainly focuses on end user finance, actually providing affordable end user finance. Now, but this is what we are doing to create synergies between demand and supply. Because of course, we can try to build the demand, but unless we have the supply, we can only move at the speed potentially of supply. So Number one, it is pretty much about having this conversation. It is bringing the key stakeholders together, both on the supply and the demand side, so that we have an understanding of what are some of the rigidities we are facing, some of the opportunities we have, and potentially even some of the developments that are coming up that we can align our financing to. Number two, we are also working essentially with the State Department of Housing and the Ministry of Lands on creating efficiencies, or at least helping in identifying the challenges that are faced primarily when you are trying to close a mortgage, which apparently in our market takes so long. And that actually discourages people very significantly. Because apart from the incidental cost that's coming in there, financial institutions tend to add a risk margin when you, just for the purposes of the uncertainty that you face. And that just creates a problem because it increases the costs. So we are looking at how better to create efficiencies within that. And that's part of some of the interventions we are making. Number three, we tend to influence policy, and I'm glad the National Treasury listens to us. Just for purposes, we know whenever we identify there's a challenge, we write to the National Treasury, and gladly for, I think, a majority of the issues we have raised so far, they have been implemented, some of which I think have been highlighted here earlier. And that helps both to drive the demand and the supply side. Lastly, it's about how or where the KMRC financing go to. So KMRC financing is available all over the country. So if you want a home in Webuye, for example, if you want a home in Marsabit, if you want a home in Kwale or wherever it is around the country, you should be able to get. And that is because the financial institutions we are working with spread across the country. And so it doesn't matter where you are, whether in, particularly in urban areas, you should be able to get financing for buying a home anywhere around the country. And that we believe will help, to support anyone who needs a home across the country. Now, the supply side question, I think that was the last question that has been asked, is a matter that is being driven by the State Department of Housing. And we are privileged. We are likely to have the PS here this evening or tomorrow morning. And I'm sure he will explain to you what is being done around the supply, both through using the affordable, the levy that is mainly used for increasing the supply, and some of the projects that have already been put up there that are currently ongoing. I think we should be able to see that and potentially just hold on to that question so that when we have the PS here tomorrow, he can explain to us what we are doing around there and some of the projects that are coming up. Thank you.
Thank you very much, sir. Please a round of applause to our guests for that intervention. Let me not put the heat too much on stage. We have, of course, the colleagues as well in the room, Johnston's colleagues, David Mathu, Managing Director, National Housing Corporation, Peter Mugeni, CEO, Housing Finance Corporation. If you could just please stand so we can recognize you two gentlemen. Thank you for being here. Tuwapigeni makofi as the MDs and CEOs present as well. David and Peter, asante. Just putting you out there just so that as we break for tea, we can know where you are seated. Any other burning question? Mr. Njuguna, Managing Director, Sastra. Let's appreciate him and recognize him as well. Thank you, sir. Asante sana. CEOs and MDs present, asanteni. Thanks for being here. Yes, burning, let me see by show of hands. The mic will come to you. Thank you. Alicia is handling this side as well. I have my colleagues on this side. George is on this side. Okay. 1, 2, 3. Yes, those 3 questions. Really quick. And then the panelists will close and then we'll break for tea. Please introduce yourself and to your question or comment is directed to.
My name is Martin Kariuki from Gulf Cup Real Estate. We're into affordable housing. We're doing Starehe and Baxter Point. My question will be in line with supply and also to the financial institutions we have here. We've realized that majority of the mortgages that are given are usually given for completed units. And majority of affordable housing projects are being done, basically they are sold off plan. How can we be able to bridge this gap that exists so that we can be able to facilitate financial institutions through policy in a way that we can be able to take care of their risk so that they can be able to offer off-plan mortgages to also developments that are being done on a land like Buxton, Starehe, because you need to bridge that gap because developers will, of course, prioritize selling to those people. So how do you come in and be able to offer these off-plan mortgages? It's a discussion that is necessary so that we can be able to increase this number of mortgages. Thank you.
Thank you, Martin. MD will take that. There's a question right in the middle here. Yes, sir, you have the mic.
Yeah, hi, name is Paul Kavuma. We're CEO of Construct Africa. We're involving ourselves in the, we're in the process of securing a REIT manager license from CMA in order to raise large-scale institutional funding to do large affordable housing projects in Kenya. My interest, maybe to Johnston, I'm interested with KMRC. What is KMRC doing to also, in addition to developing the mortgage industry, also looking at tenant purchase schemes that might be less onerous from a legal perspective, or trying to find security around those, so that we can raise more institutional funding to bring affordable housing to the market.
Thank you, Paul. Next, which is last but not least, I think I saw a hand on my left somewhere here. Oh yeah, sorry, right in the middle.
Hello, good morning. My name is Lemmy Mugari, developer for the Creek Village and Mission Moroni. My question goes to the budget, Mr. Mwenda. Some of these projects have actually been developing. The government had actually promised to do horizontal infrastructure for us. And we've tried to push a lot to have this project done. But we're getting frustrations from the treasury because every time there's a budget that's going on, it goes the budget. But before the money, it goes, I mean, before the actual budget, then you get the project has been thrown out. And you see, this project really depends so much on the viability of this project that they're developing depends so much on the infrastructure. And many of these financiers don't want to see a commitment for the government to do the infrastructure on that level. So we have had a lot of conversations, and I think it's important that you look at the projects that have actually been looked at. I'll give an example because I think for the last 5 years, 3 years, Johnson is a witness to me because we started off with them. We had actually the roads where they're developing being budgeted for, but when and actually the money was allocated, but when it came to actual procurement, again it went on. In the council supplementary, again the money is thrown out. So these are the kind of things that we are actually facing, which is a big problem for us developers. Okay.
Well, great representation there. Banning. Okay, the last one here. There's one on the front. I don't know if there's a microphone here, just right on the step.
Thank you very much. My name is Laban Tanui from Unity Homes. I'm here with my colleague, Mina. Mine is on stamp duty. Because we've been told here, Stamp Duty Act exempts the transfer purchase of a house for a first-time homeowner. But then which bank is doing this at the moment? Please, you can guide us on that.
Thank you. Thank you, my namesake, Mr. Tanui, Asante. Let's give a round of applause, please, to all those interventions we've had. I noticed there's some, of course, on Slido. I should mention that, of course, as we go along, I'll have the EXCO team from KMRC also just give a bit of responses. So let's start with the MD. You can maybe respond to that also as you give your closing remarks, and then I'll finish with the DG.
Thank you. And thank you for very, very good questions. Now, Karaoke of GovCap, the issue about off-plan mortgages, we actually have a session. Is it today or tomorrow? We have a session this today on a discussion about off-plan mortgages. And so would you like to hold on? We go into that session and then we can have all the questions around that. Now, my friend Paul Kavuma, on the REITs, you know, this guy is a guru on equity, private equity financing. And private equity apparently has not done much on housing in this country. There's a lot of, and I'm not accusing you, Paul, on that, but there's a lot of private equity investment in affordable housing in a number of other jurisdictions, mainly on the supply side. You know, you provide financing to a developer, and therefore you enter into an agreement or either a joint or potentially, in fact, an investment into a project on a project basis. And that helps developers to start developing a lot more homes. And because you're running it on a project basis, you finish, you sell, you move into another one, etc. But just going into your question, yes, we have a lot of discussion now currently going on about additional projects that we can actually, or programs that we can actually finance, including rent to own or leave to own, or actually tenant purchase arrangements. They tend to be problematic, and I think they have, we have a couple of institutions that do that. I think David of NHC does a bit of TPS. NSSF have done that in the past and that kind of thing. The challenge with tenant purchase, for example, is that it tends to hold capital. So you will then not be able to move into developing new sites. And that is the thing that we are actually trying to discuss on how to unlock the capital so that a developer moves into another site. You know, you develop a project and then we get financing, and that's an active discussion we're currently having at KMRC. And then you release the money for that development to keep going, that developer to keep going into it. So we actually currently are very actively discussing those and how to go about them. And we are creating alignments with the State Department of Housing, which is also saying that part of the levy will actually go into that, so that you guarantee an off-take arrangement with a developer to the extent that you can still sell the houses. If they have not been bought by the time you complete the project, then you'll be paid for whatever it is remaining and that kind of thing. And the ministry or the State Department is saying, we can put those houses into a tenant purchase scheme or an arrangement of that kind. But we would be looking into an arrangement of actually unlocking the capital in that. But I'm also proposing that we start actually refocusing a little more on what role can private equity play, mainly on the supply side, on the construction of houses. Is there a scope for private equity investments into developments, into projects that are coming to market? Thank you. There was, I think, a last question about from Laban. Sorry, Lenny's question will be answered by DG here, which is about the infrastructure. I think your question was directed at the National Treasury. Laban talked about the stamp duty issue and is actually inquiring whether there's any financial institution that has tried to unlock that. So I will not be in a position to answer that question because we are on the wholesale side, the institutions that are represented here. If anyone has done that, Caroline, do you want to try? Are you aware? Caroline is from KCB, and Tyrus from NCBA. If any one of you have, please save me by answering that question.
Thank you, Johnston. So yes, there's been a lot of lack of clarity. And just as you've said, we are working with the State Department of Housing to get clarity, because when you talk to KRA, they are not clear. When you go back to State Department of Housing, they're also not clear, but we've decided to take a leading role on that to just be able to unlock that. So we should be able to include that. I think Sita did mention there's some work that's going on in KPDA, where I also sit in the board. So we are looking to unlock that both for the developer, because there are also incentives that have been proposed in the Finance Act for the developers. But again, there's not clarity, much clarity in terms of, how do you access that input VAT tax that has been given. And I think it's just a matter of having clear regulations that guide that. And we're happy to lead that discussion.
Cyrus, do you have anything to add?
Sure. Good morning, everyone. I found it very interesting. First and foremost, we've talked a lot about the supply side. So my response to that question will be from the customer side, because I am more concerned that I think we've got a beautiful program, potentially transformational with this KMRC structure. We're starting to see supply happening, but there's very little conversation about, so how does one actually get a mortgage? So part of the solutions we've had, whether or not those tax rebates will come or not, we do have a solution from a customer perspective where we offer 105% mortgage finance. And part of that, the traditional limit is around 80, 90 in most places. That extra 15% is intended to help you pay for stamp duties and all those costs. There is a little bit more cost, so our affordable mortgage product is 9.5 if you don't take 105 and 9.9 if you do. But the point of it is that while those conversations are going, if we've got a customer that is willing to go, decides that, can you help me finance that stamp duty so that I can access that mortgage? We then have a solution that reduces the out-of-pocket expense that you're asking somebody to contribute to buying a house. In other words, if I'm buying a 3 million house and you ask me for 20%, that's 600, how much is that? 600K, right? How many people who earn 150,000 shillings have access to 600,000 shillings in cash? Not to mention the stamp duty and legal fees and all of that stuff. So we do have a solution on the customer side. I think we're following the developments on whether all those rebates will come through from the policy side and all of that. But those things, where in Kenya, they tend to take time, we know that. So for customers that are willing to go ahead, we have tried to solve it from their perspective. If the rebate comes, then it will be a pay down on their loan, and that's always a good thing for them. Thank you. Later on, I think we should have a wider conversation about the customer, and I'm looking forward to that part of the conversation.
Thank you. I think on the question by Lenny, is Lenny? Yeah, Lenny. Yes, and it's good to be honest that that the budgets sometimes are not insulated, and whenever there are shortfalls, say in revenue, all budgets become candidates for cuts. But the good thing is that under the current reform, through the housing development levy, it is possible, and the intention was also to insulate resources for the housing sector. And if you look at the way the law was crafted, there is a flexibility for the government to then use part of those resources to deal with horizontal infrastructure. So there is an opportunity now to insulate, and therefore, hopefully, we won't have money set aside for horizontal infrastructure being taken away. So that's what I would like to say on that. I think this issue about stamp duty, it looks like it's more of an operational implementation issue. And unfortunately, we don't have a view of what that challenge might be. And what would help is because we are also beginning the cycle of the budget for the next financial year, it would be good to get with clarity what the challenge is, so that we can have a joint review of that issue, both ourselves and the administrator of tax KRA, and to see what options are possible. But the idea, when the law is passed, the intention is that it should go towards benefiting the intended beneficiary. So it's unfortunate that that is not happening, but let's have the feedback and we see how we can deal with it. Thank you. And I think in that context, it's important that I clarify if there are issues, it's important also to give, and the opportunity is now to give us as stakeholders some of the challenges. We will not promise that everything will end up being addressed, but it's important that Treasury gets to know what challenges the sector is going through so that we can take advantage of this process of budget making this year to try and resolve some of those issues. Thank you.
Mr. Albert Mwenda, Director General, Budget, Fiscal and Economic Affairs, the National Treasury. Mr. Johnson Oltetia, CEO and Managing Director, KMRC. It's an absolute pleasure. Thank you so much for this plenary discussion. A round of applause, please, to our panelists. I will go to where Tyrus mentioned. We now want to move the discussion into the bit about the customer and how they can actually access this mortgage. And Caroline will be taking us through that after the tea break, getting a perspective as well from KCB Group. At this point, ladies and gentlemen, feel free, leave your items just on your table. All you need is just your tag to access your refreshments and tea right outside. You'll be led towards where you can have your tea, and kindly let's be back in another 20 minutes so that we can start our next discussion at exactly 11:30. Karibuni sana. This is the Kenya Affordable Housing Conference 2023. Enjoy your tea break.
Yes. Carry this, something like that.
Hi, Shagan. How are you? Asante sana. Ukija peke yako ama ukija na hii sasa kwa ngapi hii Victor origin so Habib is not Kanur. No, you are wrong then. We get on as a joint factor here this hour. I colleague of the party like very good.
So you use the room.
Right. Ladies and gentlemen, shall we please settle? All right. Just an we are ready to start our mid-morning program. Let me ask those who are still coming in, and if you can hear my voice and outside, please make your way into the room. Music. Okay, ladies and gentlemen, we are ready to go into our next session. I appreciate, of course, the bit on networking. I'm going to ask us to hold that, please. If you can all take your seats, kindly take your seats and settle. You take seats and settle. Also, for the sake of those who are joining us online, allow us to proceed because it's an ongoing press conference with some of us that's still going on outside, but we'll still go on in view of time. The next two speakers will take about 20 minutes each, so that I can just have a bit of 5 minutes for a quick intervention with the audience. I'm going to recognize the presence of Madam Elizabeth Kibaki Obero, who is the Senior Private Development Specialist at the World Bank Group. We'll be talking to us about the deficit, looking at global perspectives. She'll be coming in just after this speaker I'm about to introduce. Her name is Madam Caroline Wanjeri Kihara, who's the Acting Director of Business. That's a KCB Bank Group. She'll be looking at the role of financial institutions in spurring access to decent and affordable housing. Quick highlight into what, of course, Tereso looking towards on the demand sector side. So here goes. Both of them will be giving a presentation, quick highlight, back to back, and then we'll have a quick Q&A as well after their speech. So without further ado, ladies and gentlemen, please help me welcome on stage Madam Caroline Wanjeri Kihara. Sound all right.
The DG, National Treasury, I don't know whether he's still with us. Bwana Alban Mwenda, the Chief Executive Officer and MD KMRC, Johnston Oltetia, fellow industry captains and leaders, distinguished guests, ladies and gentlemen, good morning. It is my pleasure on behalf of KCB Bank to join us on this Affordable Housing Conference, which I believe is the third one that KMRC is organizing. And to thank KMRC for the good work that they've done. I think they deserve some clapping. The team led by Oltetia, and I think Bwana Alban did mention, I know it's not been easy but I think you're transforming this country and you're doing a good job. The timing for this conference is indeed opportune. It comes in at the right time, considering the current economic climate in the country, where we are seeking to improve the lives of our fellow Kenyans. Our group CEO, Paul Russo, and our MD, Anastasia Kimtai, would have really wanted to join us, but they did give their apologies, and they did say that I pass my regards to you. Mmepokea. We are all aware of the pressing need for affordable housing in our country, the shortage of finance, and the complex challenges faced by the developers have impeded progress in providing affordable homes for our people. As such, this conference and convening all stakeholders by KMRC is a welcome move as we collectively review the achievements, emerging challenges, and the innovative solutions that we can come through, as well as policy intervention. And I think from the interactions in the morning, we've already started hearing conversations that are leading to that. So it really comes at the right time. The need for housing across Africa is almost morphing into a humanitarian crisis. It's no longer the shortage that we've talked about. But when you look, even just speaking at what is happening now, houses being carried, and it's very good that the discussions about infrastructure, horizontal infrastructure, which is the role of central government, was being discussed, is very important. With an annual urban growth rate of 3.9%, Kenya faces a significant housing backlog. Kenya's Vision 2030, that medium-term plan, 2018-2022, highlights affordable housing as a crucial element to the realization of inclusive growth that is capable of supporting the development of a sustainable future. Specifically, Vision 2030 mandates the government to construct at least 150,000 housing units per annum for the entire duration of the plan. Yet, the realization of this dream has been hindered by a constrained flow of investment finance to the sector, increased costs of construction for developers, as well as diminished affordability levels for customers. Only 28% of the population in Kenya is urbanized, while an estimated 10 million Kenyans countrywide live in slums. So these conversations, even as we speak about affordable housing, I think we cannot ignore social housing, because unless you sort the issue and the living conditions of the people in the slums, again, it's going to be an issue that will affect security and other factors. And I'm glad that we'll be having the State Department of Housing that is also working on the slum upgrading program, because we have a role to also ensure that every Kenyan is living in a decent home. Our urban centers exhibit a low level of home ownership at a paltry 21.3% compared to the national average of 61.3%. Consequently, Kenya trails its peers like South Africa and Ghana, whose urban home ownership rates stand at 53% and 47.2% respectively. And I think we can be able to do it. When Laban was speaking, he did mention that our mortgages, contribution to mortgage compared to our GDP is about 2%. He mentioned 1.9%. That's very, very low. So there's a lot of work to be done by the financial institutions that are represented here, the banks, the SACCOs, the microfinance institutions, and the DFIs that are in this room. While the government has made commendable progress in boosting housing supply, expediting further advancement requires promoting the use of alternative building materials to reduce construction costs and achieve affordability. And this entails reviewing the public-private partnership framework for increased effectiveness, expediting incentives, providing clear guidelines on access to those incentives, and investing in urban planning to enhance sustainability and addressing infrastructure gaps. The latter, particularly the lack of infrastructure, is exacerbated by limited budget allocations to county governments, hindering the development of critical areas. So in terms of funding, the deep local financial markets and pension funds present the opportunity to mobilize financing for affordable housing. I'm happy CEO has challenged us on private equity involvement in raising funds for the supply side, which a lot of developers have been crying about. And I think there's need for us, even out of this 2 days, 3 days conference, to come up with recommendations of what it is can be done. What can we do with rates? How can we leverage more so that we can have more people playing in raising resources for this need? Mobilization of domestic savings presents a sustainable way of funding affordable housing. Again, clarity on regulations on some of the tax incentives. We are aware at one point there was a home ownership saving plans that had been introduced. But again, the operationalization of that is not very clear. So again, need for just clear guidelines and probably some of us coming to the forefront to be able to unlock some of this. The financing instruments provided need to be designed to provide affordable and long-term credit to ensure the efficiency, scale, and sustainability of funding streams. Controlling the unit costs of developing a house will be essential. Existing sources of housing financing need to be reviewed with the aim of packaging financial products that fit the affordable credit paradigm for housing and encouraging public-private partnership initiatives. I know as financial institutions, we have our risk hat, and many times looking at the lower segment where affordable housing would be has always been a challenge. None of us has been able to implement a successful incremental housing project. Countries like Mexico, where affordable housing is done in big scale, India, where affordable housing is done in big scale, incremental housing is the way to go. But we've not seen a financial institution come out boldly and say we can be able to do. And as I say this, I am pointing not just at you, I'm also pointing at myself as KCB Bank, representing KCB Bank, for us to be able to be at the forefront in getting those solutions. PPPs with other partners such as SACCOs, DFIs, and mortgage institutions also present a perfect opportunity for Kenyans to access affordable housing. In Kenya, the greatest providers of housing mortgages are banks. However, savings, SACCOs, which are becoming favorite saving vehicles among Kenyans, are also a great source of finance for those interested in housing development. However, for those SACCOs, the governance structures, the corporate governance structures have to be set to ensure that we do not lose the funds for the customers. If their potential thus is well enhanced, then they could be a great source of housing finance beyond the current market supply. In terms of government, in 2022, the government promised that through the delivery of 1 million housing units, 500,000 more Kenyans will own homes by the end of the year. Out of these units, 800,000 are meant to be affordable houses, costing between 800,000 and 3 million shillings, and 200,000 units will take care of the social housing units and take care of the current slum upbuild that's coming up. To achieve these two objectives, KMRC seeks to increase mortgages disbursed by PMLs by increasing the long-term funds available to them and reducing the risk of maturity mismatch in the PML's assets and liabilities. Direct funding to primary mortgage lenders, that is commercial banks, MFIs, SACCOs, accompanied by a liquidity backstop to provide loans to primary mortgage lenders at 5% interest rate. This is with the anticipation that the benefit of accessing funds at 5% will be passed to individual borrowers at a single-digit rate. There's a huge opportunity on the demand side. A robust digital platform supporting savings towards home ownership. Again, as I said, we still like a clear guideline, and I'm happy the PS and the CS are joining us later. And I know we've made an effort in Boma Yangu, but how do we make sure that within Boma Yangu, all financial institutions can be integrated in there so that we can have a digital platform where somebody knows where their savings are at, the returns that they're getting their savings, and they can compare that with what is offered in the market. Tapping into the various retirement schemes, I know there's a time in the 2021 Finance Act did propose that, and the regulations were amended that would allow pension funds to be used as collateral for the purchase of a home up to 40% or Kenya shilling 7 million. Again, when it came to operationalization, my mother tongue influence is coming in. It was not very clear, and moving those funds from pension funds was not very clear. So we're not able to achieve the objectives that had been intended. So again, a subject that needs to be looked at, and so that we don't pass laws, we don't pass acts which are just a promise and not a reality on the ground.
Lenders can also develop a mortgage scheme for the micro, small and medium business entrepreneurs. Today, banks are very happy to lend to the employed. But if you ask them how they will lend to the SME, which forms 80% of the population, a lot of the banks and the financial institutions don't want to touch. Yet that is where the money is sitting. That is where the inflows are in. SMEs are controlling 70% of this economy. So can we, as financial institutions that are represented in this room, be more bold enough to be able to develop products that can be able to speak to the MSME and ensure that they are able to get into this space? From a supply perspective, again, leveraging on existing relationship within the industrial sector, including cement manufacturers. I think SDG 17 will become very clear because partnerships will be the only way to go. So partners like cement manufacturers, steel manufacturers, building and construction manufacturers, there's a whole opportunity to form partnerships that can be able to leverage and make sure that we indeed provide affordable housing, so that we can be able to create, an ecosystem that supports this affordable housing ecosystem. Data has been a big problem as a country. I think for the last, 18 years, I have been in mortgage. We have talked about the same numbers. And I'm happy Kenya National Bureau of Statistics is in the house. I think we need to be able to leverage more on data and be able to give numbers that can be able to guide decision-making. But I think KMRC has done some work. Boma Yangu portal has also done some work. How can we again leverage on that to ensure that houses are built based on a proven demand master plan and a mega city approach identified through segmentation? Realign a mix of long-term tenant purchase schemes and affordable mortgages, because you cannot ignore TPS. There are those who will want to buy to rent, which is TPS, and there are those who will be willing to, build to buy. Consider setting up a user verification system, ensuring houses built get to qualifying citizens. And I think that's one of the things that KMRC will need to work on. Others, we will go back to the whole cycle, where it's people who access the funds, and then it doesn't go to where it should go to. So again, just having a user verification system that is standard. I'm sure if I spoke to a few financial institutions, everybody probably has their own criteria. So that's an area that we need to think through and ask ourselves, how can we leverage on technology to be able to do it better? In addition, financials should consider the following. One, the design of affordable housing should be flexible. And when I say flexible, it's because I know banks, we are the masters of being inflexible. Me included. I said I'm pointing at myself. So for us to be able to be successful in this space, we will have to be flexible to accommodate the diverse needs of different households. The cost of affordable housing should be kept as low as possible without compromising quality. The construction of affordable housing should be environmentally friendly. We cannot ignore that, climate change is a real thing. Today we are here in Mombasa and some people are drowning, some vehicles are being carried away, some buildings are being carried away. So how can we do it in cognizance of the fact that we need to be environment friendly? Affordable housing should be located in areas that are accessible to jobs, schools, and other essential services. If you look at our mortgage book as a country, 80% of the mortgages are in Nairobi. So we need to build our appetite to go. We are talking of is it the 18th year since devolution? Is it 18th or 18th year since we had devolution? And so we need to start asking ourselves, what's the strategy for us to go down to the counties to be able to offer this? KCB has been a catalyst in driving the push for affordable housing through the provision of affordable mortgages, controlling more than half of the country's industry mortgages. So when I say 80% of the mortgages are in Nairobi, we are a big culprit. As I said, I'm pointing at myself as I point to the rest of the financial institutions here. So controlling more than half of the country's industry mortgages and financing low-cost housing projects. The current projects KCB is involved in will also open opportunities to over 20,000 youth who will be engaged directly and indirectly. And I think that's the other challenge to the financial institutions, because you cannot look at the affordable housing and ignore the ecosystem that supports that. KCB, through KCB Foundation, has trained thousands of youth across all countries in trades like welding, masonry, carpentry, plumbing and electrical works, to mention a few, and now has in place a proposal to train and incubate and fund MSMEs. And this we've done through, and I think the CEO did mention, is through getting, de-risking instruments with some of the DFIs that are represented here. So there's need for us to also, as we think about affordable housing, think about the bigger picture of the job creation opportunity that it offers to our youth. Today, we have a youth population that's over 89% of the Kenyan population. So unless we are very intentional in ensuring that that segment is well trained, is well positioned to take up the opportunities, we will continue to be in trouble. I think I did speak to the MSMEs, and there's an opportunity for the financial institutions here to be able to work with other DFIs that can be able to provide the risking instruments, to be able to be more active on the MSME sector, which is the sector that's driving our economy. KCB is also very keen on sustainable financing, and therefore, even as we support the contractors, we ensure the final products are not only environmentally friendly, but also climate resilient and carbon friendly. I think, as many of you may be aware, KCB is the accredited entity for Green Climate Fund. Again, encouraging a lot of developers to come in with proposals that seem to protect the environment, that have looked at the ESGs, and that are environmentally friendly, so that at the end of the day, we are not creating a disaster to the already very bad crate we are in. So a welcome to institutions that could be here, or financial institutions that are big on sustainability, to look through and see how we can take advantage of the GCF funds, which we are accredited. And I think we are the only ones, apart from, I think, one other body that is accredited in East Africa. So let's take advantage, and so that we can support our developers to build and bring up projects that are more sustainable, that will ensure that, my 5-year-old daughter can be able to reach 89 years old. Because if we continue the way we are, it means then we are killing Mother Earth. KCB's ability to support large housing projects is supported by the bank's past success. Today, we are celebrating 127 years. So we've been there, we've seen it, we've been able to survive the turbulence, and we are looking to survive the next 127 turbulence. KCB has also been at the center of infrastructure projects under the government annuity concession program, and the bank is planning to develop a robust national housing fund digital platform to encourage people to save toward affordable housing. And more to it, to see how we can leverage even on the Boma Yangu platform, so that we don't have a lot of duplication in the market. As I conclude, the affordable housing dream can be achieved when all players in the housing sector work collaboratively towards a common goal of making housing affordable for all Kenyans. And as I speak to everybody in this room, and I hope from the 3 days, the 2 days, we will make collaborations, we will make partnerships that will be able to make this possible. The supply side policies will focus on unlocking land and financing for development, initiating government-led projects, and fostering relationships with the private sector to encourage their participation in endeavors aligned with the affordable housing agenda. The demand side will look into the laws governing housing sector, construction, building standards, design procedures, and green building codes to ensure that they are reviewed for sustainability and safety. At KCB Bank, we are committed to being at the forefront of this transformative journey, which is very in line with the theme that KMRC chose for this conference. We believe that housing is a fundamental human right. It is a basic need. Everybody deserves to be in a decent house. And by leveraging partnerships for scale, we can achieve our shared goal of providing affordable housing for all Kenyans and make the program a reality. Together, let us build a future where every Kenyan has a place to call home. It is a future where individuals and families can thrive, knowing that they have a secure and comfortable shelter to house their dreams. Together, we can make a lasting difference, and together, we will pave the way for a brighter and more inclusive Kenya. Thank you.
Deserves another round of applause, ladies and gentlemen, on behalf That was the role of the financial institutions in bridging the housing deficit. And now looking at the global perspectives, we'll hear from Madam Elizabeth Kibaki-Obero, who's a senior private sector development specialist at the World Bank Group. Let's give her a round of applause.
I'll request the technical team to load the presentation, please.
All right, so we'll train our eyes on the screen. Yes, and then we'll have our presentation rolling as well.
The interim. Thank you. In the interim, allow me to take this opportunity to recognize all of you, to our distinguished guests from the National Treasury, including DG Albert Mwenda, the CEO of KMRC and the leadership team, colleagues, leaders, captains of industry from the various financial institutions, including our state corporations, distinguished ladies and gentlemen, good afternoon. It really gives me great pleasure to be part of this conversation as we look at what we can do working together in order to bridge the divide, to provide affordable housing in a manner that is inclusive. I say this because when we look at the context within which we operate, we really are facing a number of significant issues. We have, and I'll go into the slides shortly, I know I'm a bit ahead. So we have a number of issues that we are dealing with at a global level, but even when we look at the minutiae of the local context. And this means that this conversation is ripe. And I think what you'll pick through the theme of my presentation is that for us to unlock this issue, we need an ecosystem approach. And in this ecosystem approach, we have ideas, we have examples. And I think in Kenya, you'll see as I reflect on these examples that some of these things are already live here. We are already moving the needle. And what we need to now do is do that with even more gusto so that we're able to move further. So if I go into the slides on context, I know I'm preaching to the choir, but allow me to continue to do so. Where I say the issue of affordable housing, the issue of housing in general is key, pivotal, important, all the synonyms that can be applied. Why? We're looking at issues of the Sustainable Development Goals, where we all are aware that if you have better housing conditions, in general, you're connecting with the increased quality of life. There's a direct correlation. We also have in our SDGs, the whole emphasis on going green, on focusing on our environment. If we move to the next slide, in terms of context, I'm not sure there is a clicker or, okay. Again, to set the developmental context and indicate that as we look at some of the important triggers that are operating globally, not only in Kenya, we see housing as an important factor in driving economic transformation. Why do we say this? When you're dealing with issues of shelter and safety, you're necessarily unlocking a social underpinning that allows one to go out there and really just get the job done, to earn a living through the sector or earn a living as a result of the sector, or provide the condition to spring forward. You have economic growth, you have good health outcomes. Again, you're looking at the opportunities created in terms of jobs. And centrally, this has been a focus, I think, not only for the government here, but governments of the day everywhere. We're struggling to recover from polycrisis. And so you find that across jurisdictions, there's this focus on looking at how we can use the housing sector to unlock jobs. And of course, finally, the issues ranging around wealth creation. These opportunities, these emphasis on housing comes against a context of what I'm sure has been discussed in great detail in your various boardrooms, and definitely has come up in this conference today and will continue to be a theme. This is the fact that we have an opportunity in terms of demand, a big push given by the fact that we have slums coming on board. We need to address that. We have the requirement over 100,000 housing units per day that needs to be delivered globally. You have, at the same time, when you're trying to meet this demand, the reality of who will be taking this up, which is the issue of affordability. You have 74% of populations globally within the low income context. And so as you are tackling the issue of demand, only when you put on that lens can you fully unlock things. So that on the supply side, you're also looking at from the perspective of providing tenure security, because there's insecurity at the moment. You have challenges with who is taking up the infrastructure. And then, of course, we are dealing with issues to do with unlocking at the upstream level a more enabling environment. And so globally, those are the things we are facing. And I think if we reflect, we all have even personal examples of where these issues to do with a mismatch between demand, supply, and the gap of affordability really come into play. And taking a further deep forward, we've talked about the gap, we've talked about the growing demand in our context in Kenya, and this is reflected globally. You can see in this slide, we present a trajectory where you have over 16 trillion USD required to be met in terms of affordable housing, and we've broken it down to units by 2025. And as I present this, I know we have an ongoing study internally, which is likely to update this further, but really just to set the case that the challenge of meeting the affordable housing challenge is one that cuts across the jurisdictions. And as we look at it, sorry, if you go back to the previous slide, as you look at it as a challenge, is also the flip side, which is where a lot of you come in as financial institutions and state corporations, as well as individuals in the sector, the opportunity provided. When we put on our hats, and the previous speaker addressed this, when we put on our hats to unlock this opportunity, we can look at a growing market, which when serviced will be profitable and deliver positive social outcomes. Next slide, please. Now, in the process of meeting this demand, from the bank perspective, we've had an opportunity to observe some global trends, which are shared in this slide. Of course, I think this is not new to any of you in this room. And where perhaps as we look at issues of growing cities, we have rapid urbanization for us here at Sub-Saharan Africa. I think in other markets, you have slightly less so in terms of rapid, but more so continuing. We have issues of having compact cities, more so for us in Sub-Saharan Africa, you're looking at growth in the periphery. But where I'd like to really focus our mind as we look at the global trends is the issue of leveraging technology, looking at all things green and fintech. On all things green, beyond the story of having sustainable housing, we have the continuing narrative coming up on resilient housing. I mean, in the press right now, there are all sorts of horror stories of what's happening as a result of the flooding. And so whereas previously resilient housing may not have been top of mind, it's up to some of our stakeholders. I think we're finding that increasingly across different jurisdictions and even here back home in Kenya, we have a focus on ensuring resilience. In terms of fintech and more so inclusive fintech, we're seeing a trend where there is increasing uptake. And from our perspective, we are finding that more and more what different governments are looking at now is, okay, you have great uptake, including here in Kenya with mobile money. But when it comes to issues of inclusivity, affordability, hidden fees, how do we address those so that we better unlock use of fintech? So this is what's happening globally. But as we look at this on the next slide, you'll see that in as much as we bring on board this global outlook, we do recognize that there's an issue of nuancing. That, I mean, it's not a cookie cutter approach when we're unlocking markets, when we're trying to bridge the divide. We have our own peculiarities as Sub-Saharan Africa and more so as Kenya. And so as we share these lessons, you have this context and you have this understanding that we are not looking at copy paste. In our jurisdiction, beyond the policy gaps that were nuanced this morning, the ongoing reforms which continue to need to be strengthened so that we address issues of records and cost, as well as transparency of access. We have, and I'm glad we have the county government counterparts in the room, we have the very strong issue of having interconnectedness beyond national level reforms to actually having these perpetuated at the county level. We have positive examples coming through in other countries, and I'll give you one example from India where you have a jurisdiction doing some interesting things. But we have an opportunity to replicate that here so that even as Kenya, we have examples coming through So when when I speak to the global perspectives around bridging the housing finance gap, I think for us at affordable housing gap, I think for us in this room, we really need to be careful that whatever we are driving forward takes on board this context in order to ensure that our reforms are responsive. So to spend a little bit more time on this, as I started my presentation, I spoke to the fact that for us to unlock the issue of affordable housing, the issue of reforms required, we need to look at this from an ecosystem approach. And what experience has showed us is unless you build all pillars of the house, from the foundation right to the roof, you'll find that you have gaps that are exposed as the market continues to grow. We have as essential building blocks, the whole issue of maybe just starting at the bottom side where I operate as a private sector development specialist, the issue of having enabling environment reforms. And here, of course, we speak a lot to sector reforms where we're looking at the housing sector, but also to encourage colleagues in the room to, beyond immediacy of housing sector reforms, looking broadly at the economy-wide reforms that need to come on board to enable businesses so that it supports and drives your sector. Uptake sometimes is coming from individuals, sometimes it's coming through existing entities. And so some of the broader corporate governance reforms we see in various jurisdictions taking more and more of center stage. At our supply side, sorry, if you just go back to the previous slide, thank you. At the supply side level, looking at the different buckets, one of the things that we find as emerging key things when it comes to bridging this deficit, looking at the gap, is now going into specific, I would call it rolling up your sleeves and getting to work. We've set on board the policies. We have fantastic statutes. We have great examples of what has been done out there. But where the rubber has met the road is actually getting into the point where now this translates to systems and structures that are in place that are driving some reform, that you have actual people being able to report efficiencies and effectiveness as a result of what you've done as improvements to the enabling environment. And I know the responsiveness of reforms globally has been an issue because in some instances you find that perhaps government may be running ahead, thinking about what they want to do, and there may be gaps in engaging key stakeholders. And so you find certain reforms when they are reviewed, there are gaps in terms of how the system was rolled out or how missing one particular nuance or the other. In terms of getting to the apex, when we're looking at demand, and I suspect this is an area you've engaged greatly on, the enduring lesson is around issues of efficiency when it comes to capital access and inclusiveness. And the question of inclusiveness, we've talked to the fact that you have most of the mortgages happening in Nairobi. So the issue of inclusiveness permeates not just urban centers, but when you go out into peri-urban and rural community, one of the things that we found is as you stratify the population, even there you have some sort of elite capture. It may not be through the financial products that they've received, but as a result of other maybe societal factors which run outside this particular presentation. But to the extent that we can influence inclusiveness, even at the devolved level, this has been something that we found begins to tackle uptake. So moving away from the generalities, if I go to the next slide, and you'll see in the next slides of my presentation, I'll be able to give you 3 examples where we're looking at, to address the ecosystem, how partnering can happen to unlock the supply so that we have adequate supply. And at the same time, we have adequate access on the demand side. The examples I'll give will support the narrative around unlocking policy, going into actual implementation through planning, and then working on the access element by addressing issues to do with leveraging private capital. Go to the next slide. So I'll start off by taking us to a tour of Colombia. I know the text is a bit small, but I'm sure we'll get an opportunity to share these with you, where as the World Bank Group, we were engaging both our World Bank and IFC instruments And taking a step back on the World Bank front, we tend to work directly with governments, providing technical assistance and financing as resources, and also coming on board from the technical assistance point of view to give broader advisory support. So providing those complement of reforms, engaging, leveraging partners, and even more so now as we go through this period of supporting countries to do fiscal consolidation, really pushing the narrative to countries to explore how they can better mobilize private capital. We have these particular reforms that I'm sharing coming on board. So in Colombia, you have the challenge of the financial crisis. And at the same time, while the financial crisis is coming into play back in 2001, you have issues and this has now been exacerbated as we have different cycles, including the current one, post-COVID, to when now we are dealing with shrinking economies due to issues out there to do with Ukraine and etc. Those sorts of peculiarities. You have the government trying to figure out what can we do, what concerted effort can we bring on board in order to ensure that we are working more so through the capital markets. I think this case really hits home because when we look at our own experience here, there's a need to push that needle further and make sure that we can get things done. So at the first level of the House, the engagement was around looking at the policy regulatory framework. You have the affordable housing agenda, you have the economic downturn. What can we do in terms of actually getting traditional mortgages, going beyond traditional mortgages? And I think what stood out as I engage with colleagues who are specifically working on this case is the fact is the level of dialogue and partnership that was involved in order to design, co-design, and eventually get to tracking and implementation of this regulatory reform. So that eventually you had an institutional framework that was self-financing. I mean, there's been some bit of stumbling, obviously, with the new crisis coming on board, but I think more and more we are finding that you have TC coming into its own. Double clicking on now what it meant in order to get to the point where TC is tapping into the domestic market, you're getting over your current level of securitized assets, having greater volumes in terms of delivery. To unlock this from a legal regulatory point of view, there was a need to look at what happens in terms of establishing a secondary market, a secondary mortgage company, sorry, and then ensuring that to the extent you have that institutional reform in place, you also have that complemented with actually having more and more efficiencies delivered around asset securitization. Again, in terms of unlocking that particular barrier, you had engagement to do with upskilling, so that beyond having the legal regulatory reform, you also have people buying into, maybe I don't think I captured the issue of buying into, but a story of advocacy, which is what forums such as this deliver, is also key, was instrumental in the TC example. The next slide, picking a particular jurisdiction in India, where again, we are looking at how can we draw on the whole issue of PPPs and at a subnational level, address the challenges we have on the housing finance gap. And so you had an ambitious level of units to be delivered. You have a government that is grappling with capacity issues, including challenges to do with actually access to resources themselves. And so they are looking at how can we engage better with private capital, and also not only capital, but looking at the broader framework of private engagement to ensure that we meet this ambitious goal. At the time, it was 400,000. And so what they did was to take a complete overhaul, incrementally undertake a complete overhaul of legislations that had been mapped, things that are right from a planning delivery perspective to more broadly connecting better with what's happening at the national level in terms of reform, so that at the end of the day, you have opportunities for private sector to come in. And we speak to, at that time, they were focusing on 2,600 units and looking at beyond that, delivering social outcomes. And I think in terms of that, to pause there and say, I think the narrative around social outcomes was particularly useful in getting a different lens and perspective to come on board, even as we brought on board hardcore private financing and complemented with what was coming through World Bank support, because you have individuals being brought in that are sort of, I would say, non-traditional. And so eventually you have tools and approaches that are developed that can be replicated both within Odisha, but more importantly, across other states. I think there, again, you see a similar story where you have private capital mobilization coming through at a significant amount, and you have demonstrative effect to the rest of jurisdictions in India, where you can replicate this at a subnational level. And I think for us as World Bank, it has been one of the models that we continue to draw on, even as we engage with different jurisdictions, but of course, respecting the peculiarities. The final case I'll give will be something closer to home, something on the continent, and looking west to Senegal, where you have a focus on affordable housing. You have an engagement to see to what extent can we leverage the rent to own model and draw on what, and this is a continuing emerging story. I wouldn't say we're at the level where we've concluded it, but draw on what is available through the Sovereign Wealth Fund in order to deliver this. As government and private sector embarked on this journey, there was a very candid discussion around what gaps we face as a collective, where we have resource requirements from the government side and gaps, and what we can bring on board, what we can leverage from what we have in terms of the Sovereign Wealth Fund. There was also, I think, from the bank side, if we just go back up to the previous slide, there was also the conversation around the fact that, and I think obviously this cuts across most of our countries, you have limited access limited affordable access to local currency financing. And so again, as we engaged, this was an area that had been identified as being needed to be tackled. And so to unlock this, you have the plethora of legal regulatory reforms, but for the purposes of this case, I wanted to just concentrate on now beyond the upstream reforms, what then happened in the nuts and bolts, where they're drawing on utilization of free land. I can use free land to support this initiative. You have the connective infrastructure, which tends to be a big challenge being brought on board, and a concerted effort by government to get that delivered. Thank you. You have administrative reforms being brought on board to ensure that you can address, you can move from what is there in terms of policy intent to actually having quicker turnaround times. And then there was a complement of incentives being discussed with developers, and of course, bearing in mind the issues of ensuring you have a budget and fiscal space that works. I won't go into this slide, I'll just put it there, but it just speaks to the whole rent to own story and the opportunities that are there generally, not so much in Senegal. But for interests of time, I'll just sort of flag there and say, this is something that you know. As I conclude, I have a few points that I'd like to emphasize, even as we speak to what I started with, an ecosystem approach that draws from the plans that we have to actually implementing. You can see that we have very many different opportunities to and models to unlock the bottlenecks that we have. We have the chance to look at the rent to own model. And more importantly, we need to move now into action. And one of the things that we've seen is sometimes we get held up in getting the excellent solution designed. But if we can just put our shovel into the ground and actually move to the point where you're making the first change and then building and learning as you go along, it makes a big difference. And to conclude with the sentiment that as we do so, we need to do it in a way that makes sense for us as Kenya. These are some examples, but we welcome the opportunity to continue to brainstorm and share what can work, what has worked, because we also have a positive story here. Thank you very much, ladies and gentlemen.
Thank you. Thank you so much, Liz. Another round of applause. I still have your extra 3 minutes from the countdown of 5. Appreciate it. It's just my absolute pleasure now to invite Alicia. I think for the first 2 speakers, that's Caroline and Elizabeth on this session, we've agreed that we'll have some bit of a plenary just about the tail end of the next panel. So to lead that discussion will be our head of legal and company secretary. Please give a round of applause to Alicia Nyikuli, who will also introduce his esteemed panel.
Thank you, Laban. Good afternoon. I have the ignominy, ambia jirani yako ignominy, of standing between you and your lunch. Ask your neighbor, what does that mean even? I don't even know. I think I just tried to Google it. So please stand up. I want to give us a bit of an exercise. I know you're tired. We have listened to a bit. And I promise we're going to be very short, okay? So I want you to turn to your neighbor and explain to them, si tuko Mombasa, na mambo ni mangapi? Aya, mambo aya, mambo ni mengi, lakini masaa ni machache. Sasa ambia jirani yako Kenya Affordable Housing Conference kwa Kiswahili. Mwenye atatoboa tuampa zawadi, atakuwa kwanza kupata voucher ya lunch. Haya, nani ametoboa? Mike, MC, can someone help with the mic? Nani ametoboa? Haya, hapana, huyu hapana.
Kuna
ukiongea Kiswahili hapana, tutaki huyo.
Watanzania, Waswahili hapa sio.
Haya, wacha tujaribu mwenye mtuka kuongea sasa.
Kenya Affordable
Naweza kununulika.
Swahili direct. Stima imepotea.
Hello, can I go? Nyumba naweza nunulika.
Mine was easy.
Tusikie MD wa.
Mine was easy.
Guys.
Okay, tuko. We're good.
Kongamano la nyumba rahisi Kenya. Kongamano la nyumba rahisi Kenya.
Aya, Daniel Muhina, wewe ndio utakuwa marking scheme. Wacha tusikie mwingine. Hiyo inakaa ni kama imejaribu.
The question the setting of the question was not very clear. So my answer is Kenya Affordable Housing Conference kwa Kiswahili.
Huyu alienda group of schools.
So itakuwa kongamano la nyumba ya bei nafuu mwaka wa 2023.
I don't think we can get better than that. Thank you. You may have your seats. So, ladies and gentlemen, sorry. So she'll be the first one to get her voucher. Then from there we can see. Kama kuna special menu to organize. Ladies and gentlemen, thank you very much again for your presence and you're honoring us with this invite to be part of this kongamano. Yo. Unajua pia mimi nizaliwa Mombasa lakini that was many years ago. Nimesahau. We've had a lot this morning and I think my panel's work has been made very easy. Because we're just going to summarize what we've all heard this morning. So I have the distinct honor to welcome 3 individuals on stage. And of course, you'll assist me to give them a round of applause as I call them up. First on stage, ni Serikal, at least representing Serikal. I know that he is here in his capacity as NHC, but he is also here in his capacity serving this wonderful nation of Kenya. So help me invite on stage Director at the State Department of Urban Housing and Development, Mr. James Maina. Asante. Next on stage is an ever-fresh lady, deeply conversant in her craft. Help me welcome on stage the CEO, National Cooperative Housing Union, Madam Mary Mathenge. And last but not least, please help me welcome on stage. You know, I thought these people, we just see them in the business daily, but they live among us. Top 40 under 40, 2022, CEO of National Housing Corporation, Mr. QS David Matthew. Asante sana. Unfortunately, we were not able to be joined by Mr. Ken Lusa. He was on the program, but he had to attend to a personal situation, and we know that we will have opportunity to interact with him at another forum. Asante. So bibi na mabwana, asanteni sana kwa let me stick to English. This one is hard. Thank you for honoring us with your presence, and I think we're going to keep it very short. As you can see, mobile phones are being used. Lunch, people are hungry, but I think we've had very great discussions in the morning, and our topic really just summarizes. So our daughter kwa ground. So I think a quick introduction of how your entity contributes to the affordable housing space and discussion. And then, of course, I'll just shoot a quick round of questions and we'll be done, I promise, in the next 20 or so minutes. Sawa sawa. Asante.
Thank you very much. Good afternoon, everyone. Yeah, it's my great pleasure to be here this afternoon, representing National Housing Corporation, where I work as the managing director and also the CEO. And before perhaps I say the mandate of National Housing Corporation and the role that we are playing in realization of the Better Program, and at the heart of Better Program, the Affordable Housing Program, I have 3 directors who sits in the board of National Housing Corporation. And with your permission, Bwana Moderator, sure, I can ask to introduce my board. Yes, kindly.
Let's have a mic.
Yeah,
let me go.
Yes,
Give them.
let them introduce.
Hawa ndio watu wanatujengea manyumba. So, ukiongea nao vizuri unaweza ngokia moja.
Thank you very much and good afternoon, everyone. I'm a member of the National Housing Corporation. I'm chair of the audit committee. This is a great pleasure. I'm a CPA. I deal with the finance and accounting, but this is my great pleasure now to, in my private capacity, of course. Yes, this is really a wonderful. It's more of technical. I'm learning a lot, and I very much appreciate the organizers of this great meeting. Thank you.
Mjambo. Kwa majina naitwa Mheshimiwa Bernard Parsalwe. Mimi ni board member na na furaha kuwa hapa na kwetu nyumbani ni Narok, Masaini.
Yeah, mine is architect Jennifer. I'm very happy to be here today because I'm seeing what the private sector is doing in the field of housing. It hasn't been clear, but I appreciate. Thank you so much.
Thank you very much, moderator. Clearly, now you have a more diverse view of National Housing Corporation in as far as affordable housing program is concerned. Allow me to, from the onset, indicate that National Housing Corporation is a state agency. It's a parastatal and the only parastatal under the State Department of Housing and Urban Planning that has a responsibility and a mandate drawn from the law, the Housing Act, Cap 117 of the laws of Kenya, as the principal agency when it comes to implementation of government programs and policies related to housing. And because we are here today to discuss affordable housing as a program of government, and because of the nexus that I have created, that NHC, as per the law, is the principal agency, then that is how we find ourselves in this conversation, discussing how to help the regime to deliver on the 1 million housing units that we have promised to Kenyans. The board members that I have introduced to you have been in the forefront, working closely with the management to help this principal agent of government to realize affordable housing. And we are working with several partners, some in the private sector, our colleagues in the public sector, the county governments, which is the devolved level of the government. And I must admit that for once, National Housing Corporation is at the heart of implementing AHP as conceptualized by the national government. Earlier this year, you may have all witnessed, we did take His Excellency the President to Homa Bay, the foundation of the National County Government Partnership on AHP. That became the first project of His Excellency the President, and indeed the first project of the government to partner between the national government and the county government to deliver AHPs. Since that time, several other projects have been launched by the corporation. And indeed we said, last financial year, we did commit about 1 billion as a pilot investment, where we launched about 5 projects. We launched a project in Embu, we launched a project in Nyandarua, we launched a project in Kirinyaga, we launched a project in Kericho, we launched a project in Homa Bay. And this is a pilot program between the national government and the county government to see how affordable housing as a collaboration. We just talked of the SDG, number 17 on partnership. How does it work between the national government and the county government? What are the processes of transferring land from the national government, from the county government to a national government entity? How do we eventually transition this ownership to the individual private owners that are owning this property? And therefore, from the onset, that is where we are, among so many other projects that we have started, because NHC has 2 portfolios. On the one hand is the AHP, which is quite recent, and we have our traditional portfolio, which is commercial housing, and we'll discuss that. Thank you very much.
Thank you very much for giving good context. I think she can introduce herself and just describe how you plug into the industry, the affordable housing space.
Thank you so much, KMRC, for inviting the sector that I belong, that is the cooperative sector. For those who are aware, the cooperative sector in this country has more than 14 million Kenyans, and the government has recognized that the cooperative sector is actually capable of providing almost 1/4 of the affordable housing in this country. And for that reason, we were given a whole ministry to ensure that in collaboration with the government and the entire cooperative sector, then we are able to contribute a big number of the affordable housing in this country. NASHU as an entity is a national organization. We have now been moved from a union to a federation. I think the cooperative movement now has 2 federations. That is the Savings and Credit, that's KUSCO, and also NASHU as the housing federation in this country. And the purpose is to actually facilitate the entire cooperative sector to ensure that they are contributing a big part of the affordable housing in this country. I can see quite a number of cooperatives represented in this forum today. Maybe they can start, those who are present, because I saw some people sitting here from the cooperative sector. Yeah, it's quite a big number. Yeah. They are coming from either savings and credit or the housing, but the main objective is to ensure that the members of whether the circle or the housing cooperative are facilitated to access to affordable housing, either by professional financing or by the professional of affordable housing for that particular sector. As we plan as a sector, we have started coming up with strategic moves to ensure that that happens. In Nashu, I know we have started the first project, just a drop in the ocean of around 130 units somewhere in Kawangware. We have a big deliverables in most parts of the country because we are spread in the whole country, and cooperative having over 14 million, you can imagine that they are in almost every other county. And we have planned big project to support the government agenda in affordable housing. We are coming up with another 1,000 in Machakos County. We are coming with another 1,000 in Kiabu County. We are coming with another big number in again Machakos County for a cooperative, allowed 250 units, and another in the Eastern Bypass that we intend again to do 1,400. And many others that we have deliberately now, they are in the pipeline of making sure that we are contributing to the agenda of affordable housing using the cooperative movement. We believe that working together with the cooperative sector and cooperative-like groups, the investment groups that have the same objective with the cooperative, then we can actually contribute to almost a quarter of the deliverables that the government has earmarked in this very important area of affordable housing. We believe that is doable because we have been able to do that in the past. I think we were able to do quite over 2,000 units as national, not even the entire movement in the recent past. And so now scaling up to the heights that that we are talking about here is really doable, and with a collaboration partnership with the KMRC, partnership with the government, partnership with the county government, and of course the sector of the cooperative sector, which has very desirable members who really want to access affordable housing. They have very big land that they have been holding for years and years when we did not have the affordable housing agenda, which has a big, strong partnership that now allows them to actually now make those lands into feasible, affordable housing moving forward, because they have been struggling to just give savings and credit to the members. But with the KMRC now and all the other financial institutions represented here today, we are proud that we are going to have a single digit for the first time in the mortgage, and that has been a challenge. And that's why I'm saying that we are on the path to a very strong and very strategic move to contribute to affordable housing in this country. Thank you.
Okay, thank you. Let me first of all acknowledge that I feel honored to be here today and represent the State Department for Housing and Urban Development. And this is the department that is charged, typically so to say, with development of housing, as well as managing and ensuring that urban areas are habitable. I don't want to go into the details of housing because I know there is an agenda that will be spoken to by my boss tomorrow. But let me focus on one key issue, and this is support infrastructure for housing. Our department, we have three core departments, and one of the major departments is the one that is charged with urban development, where most of the housing human settlements are. And in this department, we do work with the county, all the counties, in provision of infrastructure to various urban areas. And this one we work under what we normally call Kenya Urban Support Program that supports various municipalities across the country. And currently we are reached to almost 74 municipalities. And of course, you are aware, we have almost 4 cities now. We have Nakuru, Nairobi, Mombasa, Kisumu, and now Eldoret is coming along. In terms of infrastructure associated to housing, let me also mention that the housing levy, or the affordable housing levy, as it is structured in such a way that it is not only providing affordable housing or development of affordable housing, as well as mortgages to owners, but one key element of it is that it is expected to provide social or associated social and physical infra. And one of the key elements one may ask, how does the State Department see this? And the State Department is not saying this as only an avenue for providing infrastructure, but ensuring that we are designing sustainable and livable communities. In this, we ensure that all our affordable housing do have all the association with social infrastructure, say schools, social halls, as well as markets and commercial centers. So we are looking at a whole spectrum of a human settlement. It's not only the house that we are looking as affordable, but that house cannot be affordable if it is not well serviced with social infrastructure as well as physical infrastructure. In terms of physical infrastructure, we do work with various state departments and agencies that are charged with the provision of physical infra. We do work with the KULA, KELA, and KENHA, and of course, currently NAMATA, to ensure that all the affordable housing are located within accessible locations to reduce the cost associated with traveling and mobility. And finally, we are gearing towards not only develop single or small communities, but ensuring that we are able to bring smart cities concept and develop full compact housing schemes that our people can be able to live, work, and walk to their places of work. With those many remarks, since lunch is just around the corner, let me stop there.
Thank you so much. Thank you so much for those round of introductions, as well as a very elaborate definition of what you guys do. And I think it puts us in good picture. I think back to QS Matthew, and as we summarize, I promise we have 5 minutes. You spoke of partnership between government and county. Are you able also to give us an insight? And I know perhaps Mr. Maina can chip in there. What about partnerships between public and private sector? Because I think that is also a key area of interest. How do you see that rolling out in the provision of affordable housing? And please, maybe you can throw in there the incentives that we had about this morning. I think Mary has mentioned about 130 units, so which means she probably qualifies for the 15%. Yeah. So how are you seeing that rolling out from your space? I know you sit in a very special place where you deal with both developers and you supply units to the supply side. How does public-private partnership come in? And I know we have developers here whose ears are now cocked to hear. And Mr. Maina will chip in on that. Thank you. Here. Yeah. Person like that.
Thank you very much for that question. National Housing Corporation is in the final stages of reviewing and recommending a strategic plan for the corporation and indeed our partners that will transit us from 2023 all the way to 2027. Within that strategic plan, the role of corporate sustainability is emphasized as a key pillar. And for us to remain corporately sustainable, the role of partners and collaboration is critical for the next 5 years. We have targeted, out of the 1 million housing units that the government intends to develop, the corporation has made a commitment to do at least 10% of these 1 million housing units. But even if we were to be allocated all the levy, still that would still be an inadequate funding to support the realization of the 100,000 housing units that we intend to implement between now and 2027, 2028. We require about 135 billion Kenya shillings. And we cannot just be in a position to mobilize this capital internally. And that is why we have started partnering for critical resources that can subsidize on this cost. When we go to a county government, we know investing in land is a critical component of cost. As a quantity surveyor, I can tell you for sure, over and above the actual construction cost, the cost of land is critical. So when a county government is able to give us land, zero rated, we already start reducing the overall cost of a unit by almost 30%. Now, if I move to the private sector, I think we are blessed as a country. We have a very good legal framework when it comes to public-private partnerships. We have the law of 2021. We have a very good policy on public-private partnership. The corporation has an internally approved joint venture policy and a turnkey policy. And we are currently working very closely with IFC, who are part of the World Bank, to develop the first housing units for government on PPP in our Stony Athi project. And I'm very happy to note that I've seen the IFC rep, who are actually the financial advisory, they have signed with us what we call a FASA, financial advisory agreement, and I can see them here. We are doing 2820 units of apartments on PPP, and the balance to get to that 500, which is about 680, we are doing maisonets. And these, we are working very closely with the World Bank through IFC to ensure that the role of the private sector is included in our development strategy as a corporation. The other area before I hand over, I know we have discussed here the issue of sustainability. It's also a critical area that we need to partner as an ecosystem. Majority times we are saying we are on our third affordable housing conference. And we have discussed sustainability, whether within design, green building, green finance. But to what extent are we actualizing all these debates that we are having here? I'm happy to inform the conference. Our first affordable housing project in Homa Bay has now become the first project in Africa under a government to be rated green by IFC. And that is not a small achievement.
Absolutely.
And we are committed.
Wonderful.
I know World Bank, wherever they are going, IFC, they are giving NHC Homa Bay affordable housing a partnership as an example of what government can achieve in that segment of sustainability. And we are committed, would like all our affordable housing programs to be sustainable. And that's an area where we are seeking also a lot of partnerships.
Asante sana. That's brilliant news, I think, for that project. Mr. Maina, maybe you can add, we see in the newspapers every now and then now, tenders being floated, advertised for construction of various units. Is it working? Are you receiving developers who are up to the task What is your experience from government?
Okay, thank you. Let me say these approaches that we have taken is on threefold. One, the government wants to ensure that there is a house accessible to everyone wherever he's living in the Republic of Kenya. And that provision, we are working through what we are calling constituency affordable housing projects, whereby in all major towns, every constituency has almost a municipality as its headquarters. And the minimum approach we are doing is at least 200 units in all the 290 constituencies in the Republic of Kenya. Currently, we are implementing approximately 7,000 units, which we advertised, and these are contractor-led model. The other area that we are working on is working in partnership with the strategic partners, where we identify land and we call for strategic partners that are what we call design, finance, build, and transfer. In this case, the units once completed, once completed, they are transferred and given out to the Kenyan citizens who will buy out and get their homes through the tenant purchase program, which we are closely working with the National Housing Corporation, which is managing those tenants purchase scheme. Let me see also, this one has been very attractive to developers. We have around 26,000 houses under construction in various major towns. We have our first major project, which was completed with 1,300 units in Park Roads, and it was sold out within less than 30 days. We also have another one in Nakuru. We have some in Luiro, as well as within the Nairobi County. These programs are more attractive in major towns, and we are able to design with the developers, with their team, sustainable urban homes. The other one, which of course in our deep pipeline, we have committed around 46,000 houses, some which are the evaluation and some which are at the tail end of contracting. And we do hope we will start breaking ground probably before the end of the year. Thank you.
Thank you so much. And at this point, of course, as I ask my last question to Madam Mary, I invite you to prepare your comments and your questions, and then we will take a round of that. Madam Mary, one last question. And of course, as we take plenary, we'll perhaps cover other items, but how do we involve the community in such affordable housing projects? Number one, in monitoring and evaluating. This is what we promise the community. How do we engage them to ensure that what is delivered is what was promised? In your experience, how do you interact with the community to ensure accountability?
Thank you so much. Cooperative is actually a community. And the beauty of working with the community is that they take the ownership. If you don't engage, then they start saying that belongs to so-and-so, but it doesn't belong to us. But when you involve them, they are able to look at to say, this is the kind of a house that we want. We don't develop what we think they want, but they are able to walk the journey with us and prescribe what they want. And some of them are able to say, we want incremental housing because that's what we can afford. We want a 2-bedroom, we want a 3-bedroom, name it. So it is very critical when community is engaged, because housing is a socio-economic development entity. And when you involve them, they feel like they are moving from one step to the other. And more so when we talk about affordable housing, which is actually meant to uplift people's life through professional of that entity. The second thing is that there is the issue of affordability. When you talk about affordability and you don't engage the community, it means that you can develop what we call a white elephant. But when you involve the community, then you are able to know their incomes, you are able to assess their incomes, and so you are able to package a project that is speaking to actually what they can afford. So when it comes to the development finance, and at the end of the day, you are now transforming them into the end user finance, it means that you can now say with a lot of confidence that all the people who are going to prescribe to that particular project, they are all going to afford it because you have been walking the journey together with them. Of course, there's the issue of sustainability. The project is not about just the construction, it's about the sustainability of the project. When you go to countries in Europe, in North America and other places, you find that they walk the journey in the affordable housing together with the people. The reason being is that once the project is completed, you leave it for the community to manage that project. So what that means is that they can now come up with a property management system that allows them beyond the developers, beyond the government, beyond the nationals, they are able to carry on with the project. It is well maintained. There is rules and regulations that are governing the project, and they are community-based because they are the users of the houses. They are the people who are going to be living there. They are the people who appreciate the day-to-day challenges and the day-to-day successes of the estate. So walking the journey with the community is very critical, because even the issue of repayment, they are able to actually motivate themselves or cause a motivation agenda that allows them to remember that they have a mortgage to repay. And for that reason, they have governance that is ensuring that each and every individual is able to remember that that house is not for free, but it's something that they have to sustain. So there is a lot of attributes and a lot of benefits when you engage the community when you are doing affordable housing. Thank you.
Great, fantastic. Thank you for that amazing answer. Ladies and gentlemen, we had over 14 talking points, but we were not able to cover all of them because we are mindful of your stomach. But I think in all that we've covered, Summarise has pretty much cut across what we would otherwise have spoken to. I want to open the floor for questions, mindful that we have time.
All right, yeah, sure. Lisha, if you allow, just really quick on Slido. I know we'd shared that, and of course we can project it. Should you want to ask QS Matthew? I think the question from somebody anonymous is, what is the most affordable house at cost per square meters that still meets adequate housing requirements, considering all value or demand or supply incentives? What is the most affordable house at cost per square meters that still meets adequate housing requirements, considering all available demand supply incentives? That is, David Wangi asks, is there any training or capacity building programs for private developers to enhance their skills and contribute to the growth of the affordable housing sector? So Alicia, if you allow, you will respond to the questions as you give your closing remarks. So I'm just going to pass the mic round. Should you have any? All right, I'll start from this side. Okay, that's all right. That was this one.
Good. Sorry, thank you very much. My name is Chris Chege from South Africa. Mine maybe is maybe a comment, and given that we have QS Matthew from NHC and my friend Maina, and that I think the issue here is that who is the regulator as far as the developments are concerned? Because to me, for us to progress that market to the next level, we need to start having a standard regulator. And this is because the innovation around the developments have led to money, people trying to find pre-sales and the rest, and there has been a lot of frustration. If there's a regulation around there, then we can be able to get a better, maybe a better encouragement for more developers to come in. The next one is the value chain and the pockets of success. I agree that there is a lot of success in the housing sector right now, But how do we group them, all these successes, so that we're able to mainstream? Who can be able to champion in that? Because that will give us milestones. My third comment is on social housing. Social housing is actually where the real need of housing is. And if we start with social housing, then I believe we are going to succeed even more, because that's where we have the mass. So I think the question is, how can we be able to get more into the social housing, and how can we mainstream it as a way of driving affordable housing? Thank you.
Thank you, Chris. Okay, moving on swiftly.
Maybe from the QS and Housing Secretary, I have realized you do encourage TPS. Now, mine is, from my opinion, I find TPS to be. Hello. Oh, sorry. With the resources that you have, why do you? Sorry, my question was, with the limited resources that you have, why do we, or rather, why do you encourage TPS? Given my opinion is TPS will hold your capital. At the same time, you can imagine this is a long-term product, because if you give someone TPS, you're talking about 10, 15 years. Why do you want to continue with that when the private sector and KMRC is ready to support you to actually raise that capital? Thank you.
All right. So Alicia, maybe you can look at that. Any one on this side? All right. Maybe to the quick responses, and then you can close the panel.
See, they took notes, so we can start with you, QS Matthew. Go ahead. We can start with the TPS. I think we can answer them in random, as long as we cover all the questions.
I want to answer about the TPS, or what we call rent to own. When we talk about affordable housing, unless we come with many innovations, then we cannot be successful. So we cannot prescribe only to the mortgage. And you know, the mortgage has been only 26,000 mortgage in this country. So TPS is another alternative method of providing affordable housing. And I think what I'll look for is not the amount of money that is there. I would say that if it's working, how do we mobilize the funding so that we don't remain with our traditional way of doing things, but we say this innovation is working, is lacking capital. How do we bring people on board who are willing to do that? Well, the project that I've just indicated that we are doing right now is on rent to own, and it's attracting many people because you are paying equivalent to almost what you pay on your rent. And so when we think about the many tenants that we have in this country, and that they have not been able to prescribe maybe for other innovations that we have, and now they are prescribing to rent to own, I think it's something we can say it is a good innovation. How do we mobilize funding to make sure that it works? But I think I support the National Housing Corporation for that. We are into it. Not only that, we are also into mortgage. So we are trying to breed all that can work so that at least we are able to provide solutions to Kenyans. Thank you.
Okay, let me respond to a few of the questions which have been raised. One is, who is the regulator? And of course, one issue that has happened in Kenya is that so many people have lost their money through projects which never materialize, and most of the developers seems not to be well regulated. We are in the process of coming with the law that will regulate private developers in Kenya. So that is one of our areas that we are working on, and we are in the process of coming up with that law to ensure there is a regulation that governs the behavior of the private developers. The other question which has been raised is on the issue of social housing. Well, we have two approaches on social housing, and one is upgrading slums on where people are currently living. And we have quite a number of projects that are going on. We have several projects, 2 projects going in Kibera. Then we have another project of around 10,000 units that is going on in, we normally call it Met site in South B. So those projects are specifically, among others, they are specifically addresses the slum people, specifically where they are living. We also have another program, Kenya Informal Settlements Program, where we do work with the slum people to improve their slums by way of infrastructure, and as well as working towards getting their titles. Now, on the affordable housing program, the policy for affordable housing program is to ensure that we have social integration. And the way it has been structured is that you have 20% of the units reserved for social units. And even in the design, they are structured as such, and even on the cost, they are structured as such. We integrate in one single development also with the affordable housing, meaning we are trying to catch in between the people who would say have a higher income and those who are in the middle. And then also, and that constitutes 50% of the development in a one single project. The other one, we integrate the market units which are priced at a higher price, and they are earmarked for people who have a higher income. The unit also is also structured and designed with facilities equivalent to higher income people. Even the size of the unit is equally bigger to allow people who have a higher income. This ensures we don't have social segregation. In all towns, especially in Kenya, you always find wherever there is a very high income settlement, there is always a slum. The only way out we can kill this is ensuring that all developments are all integrated in such a way that you will not know unless you get to one's house. That's the only time you'll be able to recognize the income level of that person. So that is one way the affordable housing program is aiming towards creating sections in society that are known only for poor people. And that's the policy that we have adopted. And finally also, let me mention, in order for the government to be able to scale up the development, currently the government has worked on 2 areas to ensure that the house is affordable. First of all, the government has put its own land. And under this program, the cost of the unit is subsidized through the land cost. So the homeowners are buying the house without the cost of land. The other one is the social infrastructure is also not priced to the house. And this is able to give the homeowners a house that is worth the affordability levels of their income. To be a little bit more precise, we are working for social housing with around 33,000 per square meter, and they range from a single room, which is self-contained, with approximately 20 square meters. We have 2 rooms for social housing, that is approximately 40 square meters, and we have 3 rooms that is approximately 60 square meters. And in each, this unit is decent, has a toilet, and it has a space for water and sitting area and separate bed area. And under the affordable housing program, we have 3 categories also. A studio, which is completely self-contained, earmarked probably for the first home buyers all university students. And this is also approximately 20 square meters, and a 2-bed of 40 square meters, and a 3-bed of 60 square meters. For the market unit, we have 2 typologies. The first typology is 60 square meters, and which is a 2-bedroom house with a master suite and with all the accessories that are associated with probably an average middle-class house. And we have a 3-bed unit, which is approximately 80 square meters, and again also with a visitor's toilet and a master's toilet, a kitchen area, as well as a sitting area. So these kind of housing are able to attract all the social societies and all income levels, and they are all able to live in one without having very completely separate society living in different communities. And this way, the government will be able to achieve integrated communities living together. Thank you.
Thank you once again. The question thrown to me was about the cost per square meter, and Director Minor has already covered that, but perhaps only to add that 33,000 per square meter is not inclusive of the infrastructure. And that ties to the other question, who is the regulator? Maybe for now, we do not have a regulator, but there are bits and pieces of regulation, including the guidelines on affordable housing as currently issued by the State Department. And Mr. Minor has been able to allude to those particular guidelines. What are the expected areas? What are the expected production costs per square meter? The guidelines moves on, including when it comes to charging a TPS, it's at what percentage? 3% for social housing, 6% for what we may call affordable housing, and 9% for market housing. And I believe our PS, because he's coming, he'll be in a position to give us a deep dive into that. As a National Housing Corporation, our previous program, which was standard for last financial year, we were working with the previous guidelines. Now we have been asked to rethink the design of our houses and materials so that we can reduce the cost to something about 40,000. If you say 33,000, maybe plus 15% the cost of infrastructure, that comes to something like 40,000 per square meter for affordable housing and maybe social housing. We are working with 50,000 in the new guidelines for market-driven houses. So if you add the cost of infrastructure, again, about 15%, that could go to something like around 58,000 per square meter or thereabout. But as NHC, the 5 pilot programs that we did in the last financial year, our average cost per square meter has come to 47,000. That is the cost of construction without factoring in the cost of land. So we are producing the units at 47,000 per square meter, but that is based on the prior guidelines. Of course, now we have to be more innovative so that we can fit within the new guidelines. So if we are to look at the current guideline, then our AHPs are now within what we may call at the intersection of between AHP and market-driven houses. Now, a very important question was asked, Bono Moderator, on the issue of delivery. Because we can sit here and ask ourselves, how do we unlock funding for both the supply and the demand side? We have several banks here, we have DFIs here, but then in between budgeting, there is an element of budget execution, which is a critical component of the success of affordable housing. We are talking of the governance structure, all the way from the institution, the laws, the policies that needs to be put in place, the procedures and processes. But how about execution of this money? Once we attract the green funding, so what? Who ensures the project is delivered on time? Who ensures that these projects are actually delivered on quality? Who ensures if on paper a project is sustainable, in the delivery process, is equally sustainable. And it can be rated against any tool, whether we are using the LED, whether we are using Edge, and certify that indeed what we put in paper has been actualized. That is the role of the other players, that perhaps some of them are not in this sitting, the contractors. How are we selecting and developing and building capacity of the contractors who are developing these affordable housing? We have to analyze the entire supply chain and ask which is the missing link. If we had all the money, are we sure we can deliver 1 million houses by 2027? Are we sure that we have contractors? If we give them projects today, there will be no delays, there will be no cost overruns, there will be no time overruns, quality will be adhered to. And has that happened in Kenya? And what are we doing about it going forward? Therefore, the role of capacity building is critical, skill transfer, and that is why National Construction Authority exists. And therefore, I find there has to be a nexus in this conversation between ourselves and the regulators of quality. KEBS, National Construction Authority, NEMA, they all have to be seated with us here as we debate affordable housing. Because at the end of the day, they play a crucial role in ensuring that indeed we do deliver. Thank you very much.
Ladies and gentlemen, a round of applause. This topic is definitely inexhaustible, Bon MC, as you can tell. We could go on and on. Wonderful points. I think we've already started to get topics for our next affordable conference. We will make sure that KEBS, NEMA, NCA are in the picture. And I think the real estate regulatory bill is out for public participation. So I think these are some of the comments also that can go into it. Ladies and gentlemen, thank you for your time, your attention. You could have been elsewhere right now. We want to hand over to the MC. If you allow me, MC, there's a young man back in Nairobi listening. He comes from my home area. I told him I'll make sure nimepitisha salamu. Ni Mluya kama mimi. So, Waingo, Carlos, asante sana kwa your support. Have a great afternoon and lots more things happening in the afternoon. Looking forward. Thank you.
Thank you, Alicia. A round of applause to also a great moderator. Thank you, and sorry to have pressed you on time. I know we also wanted to engage as well our initial speakers, but we'll be able to do so as we get to the tail end of day one. Ladies and gentlemen, we are honored to be expecting 2 cabinet secretaries who will be joining us this afternoon. Hence the need for us to break for lunch now and be back in just under 30 minutes. Your lunch vouchers are right at the back. To make it easy for you to access the pavilion lunch area, you just go down the stairs and then turn right and straight ahead. That's where your lunch is served. So see you again in half an hour. The lunch vouchers are right outside. Right outside as you exit, just down the stairs, your lunch is served. See you back here in half an hour. Enjoy your lunch.
How are you? Hi. Hi. So I'm. Yes. Thank you.
Unatafuta mafans mimi niko hapa. Umefanya poa.
Asante.
Amefanya poa sana. Hiyo nini? Ya icebreaker.
Energy levels.
Amefanya poa. No, niwaambia amefanya excellent. Yes. Salamu tu za Carlos ndo. Alafu ndo ule. Sawa tu. Uliangusha kidogo. Alisaidia tu? Well, it's okay, but okay. No, it's fine. As in business, as in it's fine. Yeah. It's nice.
That humor. That humor was no.
1, 2. Ladies and gentlemen, I will draw your attention right now as we set to start the afternoon session. I'd call on stage in view of the protocols I mentioned that we're expecting 2 cabinet secretaries. You'll allow us to just progress. And after which I get a note from their protocol teams, we will pause the presentation and hand it over just for the CSS to speak, and then we'll progress. I seek your indulgence for that because we were expecting Simon Chelugui, the Cabinet Secretary in charge of cooperatives and SME, and also Madam Alice Wahome was the Cabinet Secretary in charge of lands, public works, housing, and urban development. So for us to just progress so that we can save on time as well, allow me to ask Madam Beatrice Mwangi, who's the Research Manager for Center for Affordable Housing in Africa, to come up. She'll be looking at the Nairobi metropolitan area housing supply dashboard. So a presentation that we'll have on stage. And I'll also put on standby Mina from Unity Homes as well, who come after Beatrice has spoken. So please give a round of applause to Beatrice as we also cue her presentation.
Please, if I could have my presentation. Government representatives, CEOs present, distinguished guests, ladies and gentlemen, good afternoon. I'm Beatrice Mwangi from the Center for Affordable Housing Finance. We are a research consulting firm based in South Africa, but working across Africa. And what I want to present today is one of the products that we have for Kenya specifically, that we developed in partnership with FSD Kenya and FSD Africa. If I could have my presentation up, please. Thank you. As we wait for that, I think we all agree that the different players that we have in the markets are engaged in different activities. And in the process of that, we are all going through different processes and consolidating different types of data. While we all work towards making sure that the Kenya housing sector works and performs as it should, or we achieve the targets we have, so much data sits with different custodians. This data is important for investment decision-making, but we tend to not have a single platform where we consolidate all this data. And sometimes when you need to refer to how the market is performing, then you get very different data points from different custodians of the data. So we have an open access initiative that we've been working on that's supported by FSD Africa, FSD Kenya, Real and International Housing Solutions. That initiative aims to collect all the data that we have on the housing sector, either on product, processes, performance, people. Those who participate in that process just give the data as it is, or just as much as they would want to give it. We package that anonymously and are able to give outputs to the market that allow you to make decisions that are more informed without you having to know where the data came from, as long as it's from a reliable source and we've de-identified it, it becomes a useful output, but then again, we still keep the competitive advantage that we all have from the data that we hold, we still keep that in private. So the open access initiative is open to all data custodians, all players, whether it's the government, whether it's the private sector. We're looking at banks, DFIs, any stakeholder in the housing sector. Whatever data that you have, I would like to urge you to consider being on the open access initiative. It's free and we are guided by an NDA, which makes sure that whatever data we share, you have a say in it, how it goes out and what we can share and what outputs we have. So I encourage all of you to consider that initiative. You can find more information on the same from myself. I'll be around for the 2 days. You can also find it on the CAF website, so Center for Affordable Housing Finance Africa, and you can see how to participate, and we'll really appreciate and work together to making sure the housing sector works. I'm just buying time to get my slides here, but they're not coming. So one of the outputs that we have so far is called the Nairobi Housing Developments Dashboard. It mainly consolidates all the housing supply data that we have within the Nairobi metropolitan area. So we're looking at 4 counties, Kiambu, Nairobi, Kajiado, and Machakos. We leave out Murang'a because it's mainly self-built and single unit development. So we put all that data together, and if you're doing any feasibility, so if you need to understand what housing supply or what type of houses are in a certain market within those 4 regions, you're able to get that data with ACE. The platform is open to anyone. You can download the data in Excel. You can ask follow-up questions. You can access developer websites from that platform, and you're able to get details on where it's located, utilities that are present. You're even able to get a sense of the infrastructure in that neighborhood or area. The advantage with that dashboard, all the data that we get is either coming from the main data custodians, the developers, or property managers. But we all agree that sometimes, or even all the time, for developers and property managers, sharing data is not one of their KPIs. It's not part of what they plan to do every day. So the data consolidation process is very tedious and sometimes very difficult. So my call to you today is whatever data that you're holding, if you think it'd be useful for this market, please always feel free to share, and especially for the sake of this dashboard. So we're not holding it within CAF. It's available to the public, and you're able to use it for your own good.
Please, let's appreciate Beatrice as well for that. I know you expected to see something on stage, on screen. To begin Makofi, we'll have a bit of a plenary session as we go along. So Beatrice as well, together now, I'm going to invite the representative from Unity Homes as well. Please help me welcome Mina. Mina is going to be looking at the innovation in affordable housing, a case study for off-plan mortgages. Right up on stage. Mina, we could please come up. Mina from Unity Homes.
Thanks. Good afternoon, everyone. Thank you so much to KMRC for inviting me to present here today. Director General at National Treasury, Mr. Mwenda, CEO at KMRC, Mr. Johnston, financial institution, government's institution, key affordable housing stakeholders and colleagues. All protocols observed, ladies and gentlemen. My name is Mina Stjernblad, and I'm the finance director at Unity Homes. For the last 11 months, we've been trying to solve the problem of off-plan mortgages. And in this session today, I would like to share our experiences. So we can change the slide. Hello. So what we at Unity Homes has been trying to do is to financing demand and not supply. And this is what we're trying to do with the off plan. So a question earlier here was raised, how do we do off-plan mortgages because a lot of the affordable housing supply is sold with cash because this is preferred from developers' point of view. And this is what we are trying to change. And together with KMRC, we've been able to do that right now. So a little bit about Unity Homes. We were founded in 2015. We have successfully developed 5 different housing projects. Our 2 projects, Unity Gardens in Eldoret and Unity West in Tatu City, is fully sold, fully developed and fully occupied with tenants. Our current projects in Nairobi is Unity East, which is a 2-bedroom development, and Unity One, which is a 1-bedroom development, which is within the KMRC affordable housing scheme. So this is what we're going to talk about today. So the difference between other developers and Unity Homes is that we are fully integrated. So we have a business model where we do everything in-house, so we don't use contractors. We have a model where we build in very, very small phases, and we hand over houses in very, very small phases to maintain positive cash flows and also to only build what the customers want to buy. So we always sell before we build. And over the last 9 years, we have delivered our houses on time. Oops, sorry. So this is how we are putting out the opportunity or defining our opportunity for the affordable mortgages. So this year, we are going to end the year with around 4,500 site visits. And we estimate about 2,500 of the people coming and visit our sites couldn't afford a home buying from cash. So now when we can offer off-plan mortgages, we anticipate 60% more people will be able to become first-time homeowners. So what this has done in terms of affordability, with the KMRC mortgage, we are 7 times more affordable than our previous product. So you see our list price for a 1-bedroom is 7.7 million shillings. And a KMRC mortgage price is 6 million shillings, which over 25 years create a monthly payment of 45,000. For the list price unit, you can get a 24-month payment plan, which puts your payment at 322,000 shillings per month. And this is what we feel is moving the needle in the affordable space for us. So how do we mitigate the risk for the customer? So Tyrus from NCBA was saying we need to look at the demand side of this product. So what do the customer wants? And the main thing that a lot of people have suffered from is the construction risk. And having a mortgage off plan, the construction risk is even larger. And I think we need to acknowledge that. So Unity Homes is, with this structure, putting up a 100% tier 1 bank secured performance guarantee in the event of default. And I don't know anyone else doing this, but because of our track record and our confidence in our construction methodology, we have decided to do this to really support the customer and also the bank throughout this process. Fees. So we are not where we want to be on the fees, but we reckon with the economies of scales of this product, we can go back to the lawyers, valuers, and hopefully get the waiver on the stamp duty for this product. I would say the fees are still a quite big hurdle for the affordability right now. Some banks are doing 105%, which is great. However, on this mortgage that we're dealing with right now, we don't have that offering. So fees is still a problem. For us, we have clean titles. All our titles are unencumbered. We don't leverage our current land that we're building on. The product. So this is our lovely 1-bedroom product from the outside. And it's going to cost you 45,500 shillings per month. We're starting handing over these units in January, and we have 600 of these 1 bedrooms, and we sold 200 so far. It's a 45 square meter, 1 bedroom apartment with access to swimming pool, gym, 32-acre park and parking. This is sort of high quality 1 bedroom houses that you can actually mortgage, because we are managing these properties ourselves, and Unity Home is expecting to be there 50 years from now. So we're hoping that in 20 years time, you can get a really nice profit from selling this unit. Okay, so what have we achieved so far? In September 2023, we signed the MOU with Absa Bank. In October, we start contacting the 130 people that shown interest from our current customer base. 16 units has already been booked. 11 people has applied for the loans. And of those 11, 6 customers has already qualified. 4 people paid down payment and closing costs, and we are expecting 6 mortgages to be drawn down by the end of November. It doesn't look that big, but waiting to next slide. Okay, so in 2024, we want to sell 100 of these 1 bedrooms under mortgage. That is 50% of our sales from the 1 bedroom next year. Which would translate to 600 million shillings of mortgages only from us. And for us, and I hope also KMRC, we think that if we get this product right, not only can other developers learn from us and do the same, but in terms of our future, we want to build 10,000 affordable homes. We're trying to build a smaller, cheaper product as well. So our next product will not be as expensive as our current. So we're trying to build smaller, more affordable. And we want to build 10,000 units. And we reckon if we have our target of 50% of all our units sold on off-plan mortgages, that we can create a loan book of $60 million. We need strong partners to do this, right? So the limit is on guarantees and other strong financial partners coming in and supporting us in this scale up. And we are interested to look at and discuss with those partners. And right now, I want to thank KMRC, Absa Bank, and FSD Kenya, who supported us to get us this far. And then here you can see how we're marketing this product right now on social media. And you can also scan the QR code to get access to our webpage if you want to know more. And then I want to thank you very much for listening. So, 2 seconds. I hope it was quite quick, also because the AC, I think, stopped working. But it would be great if we can do questions if there's time.
Yes, please. So no worries, good people. AC will be sorted out in just a few. I can see most of you are really struggling, but I'm just told it's coming on in a few seconds from now. So another round of applause, please, to Mina, as we just have a quick chance. I think call for partnerships is there. So Mina, I don't know, you want to take a questions from this side? Maybe we can, yep. It's easier from here. So let me see who is going first. On the location, I think there was a bit about, I don't know if we managed to go to the slides. I'm told we'll also be able to share the slides as well with you. So for those bits about the future projects and future partnership opportunities. All right, so I'm going to pass the mic around, starting right at the back.
Thank you for an excellent presentation, Mina. I think my question is, you spoke about 100% guarantee for the installments paid. Could you kindly elaborate on that? Is that a bank guarantee? Is that a bank guarantee or a payment or just a corporate guarantee from yourselves?
Yeah, so the correct sort of corporate finance term is a performance guarantee, but it's Unity Home guaranteeing in the case of non-delivery. So the Tair Bank is issuing a performance guarantee to the customer that Unity Homes is securing.
Satisfaction. All right, thank you. Starting from my back here, I think, was that Desi a hand on this side? Okay.
Very good.
Okay, maybe
Yeah,
you can
thank you.
just-
Yeah. Okay, thank you very much. And again, please don't hesitate to be in contact. We're willing to speak to financial institutions, potential customers, World Bank, IFC, and looking forward very much to the rest of this conference. Thank you.
Thank you, Mina, as well. At this point, I'm gonna call back Beatrice because we have some few slides to show you that we're not able to project earlier, so that you can all appreciate the great work done by CAF. So I'm gonna have Beatrice come back up really quick for relook into the slides that would also be shared with you as well.
All protocol observed. Good afternoon. My name is Beatrice, again here for take 2, and I'll go straight to the presentation. Please let's skip to slide 4. So the previous slides, I was just explaining the same thing I spoke about earlier. And slide 4 is where we have the actual dashboard, sorry. Thank you. Yeah, that's where we start. So this is how the dashboard looks. It's been developed on Tableau, but it's accessible without any specific software. So once you go to the dashboard, you can, on the website, you can easily access that dashboard. It allows you to filter out the data you want to see. So we have 2 views. You can view it as a developer or if you're a developer, and you can also have a buyer view. And the only difference between those is the graphs we've provided are more relevant to one party more than they are to the other. So where you have the developer view, you're able to see details that are more relevant to a developer. Where you have the buyer view, you're able to see details that are more relevant to a buyer. In terms of how we filter the data, so the first block there where you have year collected, location, those are the different filters that you can use just to make sure whatever data you're seeing is what is relevant to you. And we provide details, as much details as possible, including unit types. Unit types, we probably looking at the number of bedrooms, so 1, 2, 3, 4, 5, etc. And in terms of type of development, are they apartments, are they townhouses, are they bungalows or villas of maisonette? So you're able to pick that out. We're also looking at the developer model. Is it a rental project? Is it sale? Is it both? We also give details on the property management, so who manages that property. We give details on utilities such as water. So is the water from the county? Is it from a third party? Is it a borehole, etc. We also provide details on the waste management mechanism that is in place. We give an indication of whether they recycle water or not, and whether they use solar or not. We also specify government-supported projects. So this is data we have got specifically from Boma Yangu. So in case you're just interested in the in projects where the government is involved, whether the NHC is building those projects or it's a private individual with the support of the government, then you're able to filter that. So that's a yes, no question, and helps you pick that or all of them. You're also able to give an indication of the type of unit you're looking at or are interested in terms of price of the unit. So you can give like a maximum, so you're able to only get units within that threshold. And you can also search for the specific developer that you're interested in. So that's the developer view. When it's a buyer view, you can search for the property just by filling in the name of the project that you're looking at, and you're able to get those details. So once you've filled in your filters, then that lower part is the dashboard. So it changes depending on the filters that you've picked at the top. You're able to see which projects are complete among those who filtered out, which ones are ongoing, which ones have stalled, etc. You're also able to get a breakdown of the type of units. So 2-bedroom units, how many apartments are we talking about? How many bungalows are we talking about, etc. You're also able to have a map that shows you the exact location of that project. And when you hover around one of those dots, so each circle represents a project. If you hover around that on the live dashboard, you're able to get a pop-up that gives you the developer name, their website or the project website, and just a description of that project. So very easily, you can be able to tell what projects are in the area you're interested in, or projects that you're looking at specifically. We provide guidelines on how to use the dashboard. So once you get on the company or the website page, you're able to get a definitions note, which defines what these terms refer to. It also shows you how to go about using the dashboard, and you're able to even download the data. So it can be in Excel. If you want the data in Excel, that is an icon that allows you to send an email that comes to me, and I'm able to send that data, which is more detailed than what is in the dashboard, with a disclaimer that that data is valid as at the day it was collected. We do have details on where the data was sourced. So it was either collected from the developer themselves, the property manager, from a website, from a brochure or pamphlet. So we keep that detail just for reference purposes. But again, as I had said earlier, we really encourage the primary custodians of the data to come forward. First, help us validate this data. Just look at what we've provided on your projects. Is that the correct value? We would like to very much provide as accurate data as possible, but that process is not easy. So we ask the user to be part of the validation process. So go through the dashboard, tell us if you have any feedback. If you've misrepresented your project, we're really happy to amend that data. And you're also able to, for example, just download a PDF of this page if you want to share it with someone else. Next slide. At the bottom of the dashboard is the second part of it. This is where we have the graphs. The first row there just shows one of the graphs that we have. So that shows the median monthly rent, depending on the type of unit that we have, 1 bedroom to 5 bedrooms. And also we are able to give you the mortgage installments. That is a projected mortgage installment. We give a disclaimer on what terms we're referring to, and usually it's either mortgage, the usual mortgage terms in the market, so the averages, or the KMRC rates. Below that, there's a table that just gives you a breakdown of the data, which projects had you filtered out and what details we have on that project. As you can see, in some places we have gaps because we don't have this data. Again, there's need for us to fill this data in, and we can only do that with your help as the data custodian. At the very bottom there, just a list of the type of graph that you're able to pick. So you can either get the median rents per square meter, you can get the monthly service charges, the total number of units, you can get the rental yield. Again, where need be, we do include assumptions that we have used in this dashboard. And we're really happy to have a conversation about why we pick those assumptions. The same to the other list of, the list that you can also pick. So that one is on the type of development. So for example, what is the rent for apartments? What is the rent for townhouses and maisonettes in a different neighborhood? As I said earlier, we've covered Nairobi metropolitan area, leaving out Murang'a County. We hope to be able to extend this work to the rest of the country, but you can only do that if people actively participate. Next slide, please. At the bottom of that dashboard, we provide an option for you to leave a comment. If you had an issue with using the dashboard, it doesn't make sense to you, or some data is wrong, please feel free to comment on that. You can either write an email anonymously to us, or you can just leave your comment on the page and we're going to address it. Next slide. So this is just on what next and what role do we have to play. I think, as I said earlier, we are all playing different roles in the sector, but I think our objective is the same, to make the housing market work and work for us. And we have to make investment decisions, then we need the data to do that. So this is one of the ways you can participate. Get in touch with us, get on the CAF website. Once this presentation is circulated, you'll get the link to the dashboard, interact with it, give us feedback, and let us know if you have any data you would want us to upload there. For developers especially, this can also be a marketing tool once we provide as much information as possible on your project. I mean, anyone can easily know about your project from that dashboard. We have data for 2021 and 2022. We're collecting data now for 2023. And a kind request is, should you have any data you would like us to include on that dashboard, feel free to come forward. And we're really happy if you can make that process useful and more efficient for the sake of the housing market. Thank you, and that's all.
Thank you, Beatrice. Any questions to Beatrice, comments? Remembering that we're also live on Slido as well, should you wish to engage. Let me see by show of hands. I know it is quite technical, and maybe from this bit might have been just a bit unclear, but as I mentioned as well, we'll be able to share the presentation and links as well for you to appreciate. Any interventions at this point? Very well. Ladies and gentlemen, we'll move on to the next bit of the program. There is a conversation that will be led by KMRC that I will just put on pause for now, as we are also expecting one of our guests will be joining us virtually. That's Mr. Jamil Akhtar, who will be speaking as well, just kind of encapsulating what the KMRC presentation will be. But before we get into that, we would like to just have a quick chat on the mortgage brokerage. I think I was having a chat with Christabel, and there's a big conversation regarding the perspective from the bankers, the perspective from the developers, and the perspective of the homeowners. And I know there are several homeowners here, and we'll hear from them as well tomorrow as we go along. But it'll be interesting now to invite on stage Christabel Ojok, who's a Chief Operations Officer at RentScore, to come up on stage. We'll have just a bit of a banter that will now lead into some sort of a plenary. Just hear her perspective, what they do at RentScore as well, and how you can tap into the fountain of knowledge that they share. So please give a round of applause to Christabel as she takes the stage. Thank you, Christabel, and good to have you on the panel as well on stage. So ladies and gentlemen, as I mentioned, it's just looking at that sort of a tripartite relationship or onto it. She'll be well placed to talk to us about it. But before we get into the meat of it, just tell us what you do at RentScore.
Good afternoon, everyone. My name is Christabel Ojok. I am a co-founder at RentScore. So we are a tech-enabled real estate company providing estate agency and mortgage brokerage services. So primarily we deal with first-time home buyers, where we enable them to own homes based on what they can afford. So on screen, I'll just take you like a typical user journey that our clients go through. So that's our platform, and how it works is, so you get to check affordability. So we empower people to own homes based on what they're currently earning. So under check affordability.
So hold up, now that I'm with you on stage, maybe for those of us who cannot see the URL, that's rentscore.africa. Okay, that's rentscore.africa.
Yes.
Maybe you can just click on the check affordability so that we can, so that's a homepage.
Yes.
That's a homepage, and then you click on check affordability. I see most of us on your laptops, phones, and iPads. So then we can start from there. Over to you.
Okay. So when you scroll down, you'll find the affordability calculator. So you key in your net income. So for example, if that's 100,000, then you'll be able to see what you can afford as far as home loans are concerned, together with your monthly repayments. So we sit in between. We work with financial institutions offering affordable home loans on one side, and then on the other side, we also work with reputable developers so that when clients come in, then we provide like an end-to-end service to enable them purchase their first homes. So for example, in this case, if you select like that particular one, so with 100,000, then typically somebody would be able to purchase a 2-bedroom apartment in Kitengela for 3.5 million. And then when you scroll down, you're able to see the various payment options. So all the way from if it's a cash payment or an installment payment, as well as a mortgage payment. And under mortgage, so basically we break it down and show you what you'd be required to get started. That's as far as deposit is concerned, your 5, 10, and 15-year repayments. And all these are calculations based on the affordable home loans that we're all having a discussion about today. So that's on an actual basis, that's a typical user journey for a client.
Wow, this is very front row, I must say, engaging with the platform right here. I think just going back to what you said, who makes up a reputable developer? I know there's a conversation about mass, like whoever develops many homes is maybe considered cheap and it's maybe considered opportune, but who in your perspective as Rensco makes up that reputable developer?
So we work with a number of developers, all the way from institutional developers. I've seen also Unity Homes. That's also one of the developers that would basically fit within that category, as well as also corporate developers offering affordable properties in the market. So it's across board as long as they have a good reputation, they've done a great job, and they're able to deliver and they offer quality workmanship.
All right, so now that's on the developer side. To the homeowners, what do they stand to benefit from this?
So majority, like I mentioned, we deal with first-time home buyers. So majority of people desire to own homes, and most of them don't know where to get started. So typically what happens is on one side, when they come to us, we are able to basically tell them that it's now possible to actually own a home at almost the same rate as your monthly rent. And then now, based on that, we don't just want them to purchase any home. It has to be one that would be within the affordability range, based on also the offering that is offered by affordable home loans. So it's basically trying to package both sides, so the property as well as the financing option. Yeah.
To the banks, what's in it for them?
To the banks, they are the providers of credit, so the affordable home loans. So on their end, then how do they actually get customers to walk in through their doors and take up these mortgages? So that's one of the key functions, the key roles that we are able to, when we partner with them, we are able to facilitate that so that the mortgage uptake is able to go higher. So as you may be aware, currently, the mortgage uptake in the market is very low. So on our end, we are championing home ownership through those affordable home loans, because frankly speaking, not many people are able to, no one has cash upfront to get started when it comes to buying a home.
So the perspective of the homeowner and also what other options are available to them. Vis-a-vis, I don't know if there's another platform you can cross-check Rensco, or now what other opportunities would they be able to get over and above just having the information that you've given from Rensco?
So if I look at a typical client, as much as we are all here within this particular space and we are all aware about affordable home loans, a lot of people, it's still a very green thing. So one of the key things that we try to do is demystify mortgages. So for example, there's a lot of stigma around mortgages, simply because maybe somebody may have had one or two bad stories, but then on the flip side of it, there are a lot of success stories, only that they're not told. So when we're interacting with a client, basically it's just telling them the benefits about actually getting started as far as affordable home loans is concerned, as well as just the financial and social benefits that come with owning a home. So it's not just yes, get an affordable home loan to get a home, but then there are also other benefits that come along with it.
Please, a round of applause to Crystal. How many of you have actually logged into Rentsco.Africa by show of hands? Truth be told, you're not on any other link. All right. So I think you'll be rightful candidates maybe to just share feedback, first of all, on the platform, which I feel is an amazing innovation as well. Good to know that Unity Homes is also listed. We've seen some of their properties and what they have there. So anyone who's just interacted with the platform and has something to share, a microphone is going around. Case study perspective also on somebody who's actually gone in, maybe not out of business, but truthfully has gone in to actually look for an affordable home on Rentsco. And not only today, or you've interacted with the product before today. Interacted, let me see by show of hands. Interacted with Rentsco, not only today, but before that. Oh, okay, Debbie, you can share your perspective as well. But let me see by show of hands, I think there was somebody who was speaking. Yes, Laban.
Thank you, Christabel, for this. I just wanted to know, how much do you charge to onboard a potential customer?
So our service offering is actually free. So we sit in between a developer as well as the financier. So we'll be able to guide you and take you through that process, but there's no cost to the customer.
Cost is the developer, for example.
Yes. So we, and in terms of revenue, if that's what you're asking.
Mind just giving us an overview of what you charge per developer?
Yes. So typically with developers is the agency fee, which is according to scale, that's 3%. And then on the other side with the financiers, so it varies basically, but that's yeah.
In other words, tunaweza kuongea.
Yeah.
Okay, let me see. Another opportunity. It'll be interesting to see whether the National Housing Corporation can look at some of these opportunities as well to your civil servants, particularly housing schemes, and giving them that opportunity to also sample what is affordable out there. All right, I can't see who's next, but let me just, okay. Sorry, okay. So I think Crystal, mine is just now on the way forward and looking at just the infusion of tech and using technology to actually just see what's in the market. I might not be traveling to Mombasa. Maybe I'm resident in Mombasa. I might not be in Nairobi to actually look at it. There is the bit about the, what's called the VAR 360, like having that sort of feature, ensuring that that's there. Investing in other counties. There's a conversation right now in terms of the taking development right into the counties. I don't know what are the other opportunities or the other frontiers that you're looking towards achieving over the next few years.
Okay. So with financial institutions, there's the need to have conversations around unlocking deposits. So let me give an example. So you find if a client has identified a house that they like, but then typically if that property is currently under construction, they'd be required to at least commit with a 20% deposit. So how then do they actually get started if they do qualify for the affordable home loan, but at that particular point, they don't have that 20%. So there needs to be innovation around how that can be unlocked, even if it's doing like a partial drawdown, because typically mortgages would be drawn down once a project is complete. So discussions need to be held around that so that a lot more and more people can actually find easier ways to get started. So that would be one of them. The second one is around market education. So again, like I mentioned earlier, there's a lot of stigma as far as mortgages is concerned. So how can all parties and key stakeholders come together to actually educate people? Because people are willing to learn, they're ready, but then at the end of the day, there's still some fear because of probably one or two bad cases that they've heard of. As well as, just generally like questions that they do have. So for us, I think those two will be the key differentiator as far as moving forward is concerned.
market education and looking at a stakeholder engagement and that bit as well. So, ladies and gentlemen, I would still pop up. I want to just bring back the slide on www.rentscore.africa right now on stage, and there being no other question or comment, I will just throw it back to Christabel for closing remarks. And after which, of course, I hope that we can be able to interact. I think there'll be more questions even as we go into what is listed on the platform. Okay.
Yeah. Okay. Mine is to say thank you for having me. I look forward to interacting with Unity Homes, National Housing Corporation, and a couple of other key stakeholders as well as financiers, so that yeah, we can all achieve one collective agenda, which is, unlocking liquidity to affordable housing. Yeah. Thank you.
Thank you very much. Christabel Ojok, the Chief Operations Officer, CEO, RentScore. Another round of applause, please, to help. At this point, ladies and gentlemen, before I take the program back to KMRC, we'll have a bit of a musical interlude, and then we can proceed. And then I invite the CFO, Mr. Nyale, to present. But before that, let's have a quick musical interlude, and then as we cue the presentation. Hi.
Where is it? How far? Washing? Are they already in the premises? So then they're holding it. Yeah, the same. People are harassing us, sending us to get from them.
All right. Thank you, ladies and gentlemen. As I mentioned, we're now ready for the quick deep dive into the initiatives to push for affordable housing down the market and seeing how that can be created. And to lead us into that is Mr. Nyale Yanga, who's the CFO at KMRC. And I'll throw it now to him, and he'll also invite the speaker who will be in his session, that's Mr. Jamil Akhtar, to give a presentation. Please don't begin him a coffee.
Thank you, everyone. Good afternoon. Great. So I'll be taking us through a very brief presentation on how we are running some initiatives to drive affordable housing down market. And after this part of this presentation, we'll also be looking at a case study from Pakistan, which have implemented what we are calling a risk sharing facility. So let's go to the next slide. Oh, sorry, I can control it from here, right? Yeah, great. So which one? This one? Yeah, so I think we all appreciate that housing is very key, and owning a home contributes towards wealth creation, peace of mind, and brings a dignity to humanity. Of course, we all appreciate when after days job work, after toiling and doing all manner of things, going back home brings that peace in ourselves. And we all aspire that at one point in time, we'll be able to have a place where we call home, and that nobody will be coming at the end of the month to say that they want their rent. This thing is not working still. I don't know if you can control it from up there. Yeah, okay, fine. Thank you. So I think if everybody wants to dream, definitely everybody aspires to have a good house. Everybody aspires to own a good car, have a family, do some vacation here and there, and enjoy the fine things in life. And that is very good. But then, if you go to the next slide, there are realities of life, definitely. So there is bills that we need to pay. There are school fees that we can't run away from. We need to pay our rent, which is one of the things we are addressing through these conversations. We need to pay our taxes. We know very well, as a country, we need to finance, tulipe ushuru, tujitegemee, and everything else that comes with what we need to do. And this affects our credit score and our ability, if you go to the next slide, our ability to access loans. So if you go to credit assessment, then, of course, the bankers here and the circles here know very well. You'll need to ask about what is our source of income? How do you make a living? What security are you giving us, right? What are the monthly expenses from all those things that you carry, from school fees, to transport, to food, to clothing, and everything? What is the level of income, right? And all these things interplay during that discussion with the credit officer. And chances are that if you don't have a very stable source of income, your expenses are probably a bit higher than what the credit officer deems should be in a certain level. Your level of income is maybe cyclical once in a while, and so cannot be justified over a long period of time. And that is not going to be very, very good news. So if you go to the next slide, and I see Samson here. This is a credit officer, right? And I know after they access all the credit risk and everything, if they tick no to maybe 2-3 questions out of the 5 they're asking you, they'll think more about it. The next time you tell you, I don't think you qualify for this loan. Isn't it, Samson? So we understand that our financial systems in terms of their infrastructure are quite risk averse. And so they want a stable source of income. They want to see a payslip. I think if you take a payslip to a bank, they are home and dry. If you don't do that, then you have to justify, and I mean, people tell you, do you have a cash-backed security? Can we do check-off? Can we do ABCD? But what about the person who does not have a payslip? What about the person who does not have a consistent source of income? He's in the tourism industry, for example. There are 6 months when it is very good. 6 months, it's very unpredictable. Yeah. You have somebody who is in the agricultural sector, where there's a bumper harvest, they harvest. In some places it's dry, and so they need to time that. So then how do we address this issue? And we are looking at a scenario whereby, how then do we de-risk this end user, so that then the banks and the circles can look at this person as a bit more credible. And so we are working on some structures, and of course we'll be coming up to stakeholders engagements and have discussions and input on then how do we de-risk the end user, so that then the banks can be able to give them some more loans, just like the people who are salaried and the people who have a stable source of income. So if you look at this scenario, it's something which has been done in many markets. And briefly after this presentation, we're going to have somebody from Pakistan Mortgage Refinance Company, just to highlight how they were able to implement their structure. We have done success stories from Malaysia, even India, which I think World Bank Group was highlighting earlier. And these are structures which have been able to assist push financing down market to ensure that the person whose source of income is a bit inconsistent, a bit unpredictable, can be done some credit scoring and the scientific tools to do that. So then that person also can be given finances by the same banks and circles without looking at that person being a bit more risky. So want to introduce something called risk sharing facility. In some instances, in some markets, it's called a partial credit guarantee. It can come in many forms, but the essence is to de-risk partially the person which the banks and the circles of financial institutions consider a bit more risky, and under ordinary circumstances will not extend their credit to this particular person. So, of course, KMRC as the champion want to establish a trust. Of course, that institution has to be totally independent, not in the balance sheet of KMRC, just to manage risk. We are heavily regulated by the CPK, the CMA, and all other financial institutions. But once we have that separate entity, the entity then should be able to give a partial, not full guarantee, partial credit guarantee to the primary mortgage lender, who is then able to on-lend to the target market. So if under ordinary circumstances, I would not have lent to person A, but I can get a certain credit partial guarantee that if they were to default, and after to assess the value of the asset vis-a-vis the loan which is outstanding, and there's a risk, say you want this person 1 million shillings, the value of the house has now gone to 1.2, and they're not able to pay, and do the mathematics and find that you still need, the person needs to pay, and there's a loss which has crystallized at the part of the primary mortgage lender, then there's a fund which then can take a portion of that, a partial credit guarantee on that. And say, if this was to be lost, then a percentage of it will be covered by the by the fund. So what that does then is to sort of drive the PML or the bank or the circle to reduce their risk and look at these people down market here, which I've described earlier, as people who are still loanable, and in the event of any default, there's some backup that then I'm not losing 100% of money. And that gives confidence to the banks and circles to drive their finances down market. So, of course, some of the benefits we're looking at this is to de-risk the end user borrowers, just as I've indicated, to encourage the primary lenders to shift financing down market where they ordinarily would consider this to be very risky, to increase home ownership, which is our objective and our goal, as well as to increase the mortgage portfolios that are available for refinancing. Next. So there's still quite a number of considerations that, of course, will be coming to market for this. It is something which is in the very initial stages of thinking. And of course, it's a product that needs to be owned by all of us. And so there'll quite be a number of things that we still need to engage on. For example, will there be a premium that the financial institutions will be paying? What is that rate to be charged? Is there a need to be charged or something like that? Do we need to fix a period to cover the loans? Is there a percentage on the loan loss that needs to be covered? What is the eligibility of those financial institutions? What is the eligibility criteria of that portfolio that needs to be covered? So because of time, these are still things that work in progress. Will be coming to you for more stakeholder engagements. Let me take the opportunity to invite my colleague Jamil from Pakistan Mortgage Refinance Company to proceed with the rest of this presentation and just talk about a practical case on how they have implemented their RSF and how that is impacting the mortgage market in Pakistan. Thank you so much.
Thank you, Nyale. Shortly, we'll be hearing from Jamil as introduced, who will be joining us virtually.
Hello, so now am I audible?
Greetings, Jamil. Hoping you can hear us from our end. It's over to you.
Yeah. So am I audible now?
All right, Jamil, we're just trying to load the presentation on this end and also have a view of your screen. So I'm just trying to make sure that you can still continue to hear us and together with our online participants as well. And shortly I'll be just throwing it to you for the presentation as we go along.
Yeah, so am I audible now?
All right. Yes, we are on now. You can go ahead.
Okay, great. So that's great. So thank you very much for giving me this opportunity to share our experience of risk sharing facility on this platform. So, but before I explain you about our experience and the case study of risk sharing facility that we did in our market, it's very important to understand the prevailing scenario and the market dynamics at that point in time when we came up with this risk sharing facility in our market. So just quickly to give you an overview about the landscape of housing market in Pakistan, that we just have 0.3% of mortgage to GDP, which is the lowest in our region. Similarly, we had a couple of other challenges in our market. There was a housing deficit of about 10 to 12 million housing, and that was growing with 0.7 million new housing units year-on-year basis. And there was a limited developer finance, and there was a very limited access for the low and middle income segment. Similarly, historically, if you see in our market, so banks were generally inclined toward catering the high-end customers, considering it to be a lower risk customers and they have a stable source of income. So banks were morely, and the mortgage lenders were morely inclined towards catering the high-end customers. And the low income or lower the middle income affordable segment was remain ignorant. And banks were not inclined towards going into that segment, considering it a high risk customers, and there was a lack of financial and there was a weak collateral with them. So PMRC came in, and then PMRC had a due role. PMRC had played due role. The primary role was for the development of the mortgage market, and we also developed the capital market as well, where we introduced sound mortgage practices, and we came up with the different instruments of fixed bonds and sukuk in our market. So to address these challenges, PMRC has came up with the products for refinance and pre-finance, and primarily we were catering for the business as usual. And then we introduced products, specialized product for low income group, middle income group, pensioners, government, developer finance, and other. And similarly, to increase the confidence for the segments, we came up with this credit guarantee scheme. So now, moving towards the credit guarantee scheme, I would like to give you a little scenario. When we introduced this scheme, there was by the central bank, there was a scheme announced called Mera Pakistan, Mera Ghar. And that scheme was primarily focused towards catering the low and middle income segment. But since banks had inclined towards catering the high-end customers, so they were not interested into going this segment, despite of being a push by the government and the central bank. So PMRC came up with this credit guarantee thing, and this credit guarantee was established with the help of World Bank and the government of Pakistan. And this provided a confidence to the banks and the mortgage lenders, and they started lending into this segment for low and middle income segment. And you will surprised to see that historically our mortgages were hovering around 100 billion rupee historically since the inception. But with this initiative of risk sharing facility, this managed, and the portfolio and the market grows by 230 billion rupee. So that was just because of the confidence that came in with this risk sharing facility in the market. Now, I would like to take you through a couple of ingredients or the components of our risk sharing facility that we did in our market. So initially, we did it with a phase 1 or the pilot, and that was primarily focused for an exploratory phase aimed toward the market, accessing the market dynamics, gauging demand, and evaluating the market response and how the market responses to it. So it was primarily focused towards the MPMG, that means the Mera Pakistan, Mera Ghar portfolio. And we had provided a coverage of about 40% of outstanding portfolio, so for those, so whatever the portfolio they generate, we'll cover the 40%. And there was a flat fee for 2% for a 10-year guarantee period that was fixed. Now the term was 10 years, and this term was coming in from the historical performance of the mortgages in our market. Since the banks are doing mortgages for a longer term from ranges from 10 to 20 years, but the weighted average tenors of the mortgages in our market that was hovering around 10 to 12 years. So what the scheme that we came up with was for the period of 10 years. Similarly, on those grounds, we also in place a mechanism that loan must be restructured on a best effort basis, so that it shouldn't go away like this, and the bank should put in some serious efforts to keep that loan going. And there was one other clause that we put in, that the cherry picking was not allowed. So the portfolio, whatever the institution generates, or the banks or the mortgage lenders, that all portfolio has to come for this guarantee thing. Just to give you an overview, that we did pilot, but then the pilot was so successful, and then we will manage to cover the portfolio of about 32 billion. But there was a lot more portfolio available in the market, and there was a growing demand in the market that the scheme should continue, and there has to be bigger room available to cater the rest of the portfolio. So we came up with the phase 2, or the scale up of this facility. And before we came up with this facility, we had a round table, and we had different discussions with all the stakeholders and the mortgage lenders present at that point in time. And we took their feedback, that how was the phase 1 and what was the shortcoming and what they expect from a scale up thing that we are going to introduce. So with their feedback and their suggestions, we came up with phase 2 of this risk sharing facility in our market. And that focused again primarily for this Mera Pakistan Mera Ghar portfolio, which was from the low and middle income segment. This time, the guarantee coverage, we extended for 50% of the outstanding balance, and at the same time, we focus towards the green building and the female home ownership. So if a portfolio has an element into it, and the women ownership is up to a certain level, the portfolio coverage can go up to 60%. So that was an initiative taken by PMRC to encourage green and the women home ownership in the market. The rest of the terms like portfolio and the tenor of the loan, cherry picking and restructuring remains the same. However, the fee structure has changed a little bit because of the percentage of coverage has gone a little higher. So in that scheme, phase 2 is also successful, and that's right now it's going on. And we are covering the portfolio from different angles for this particular category. Now, since in our market, the Islamic mortgages is in a growing demand. So PMRC came up with the unique structure of credit guarantee scheme that called Islamic Credit Guarantee Scheme, and that comprises of conditional tabarru and kafala. So that makes it Islamic, and the Sharia scholar from our side were on board for this guarantee scheme, and that also went well. Just to give you an overview about this risk sharing facility, how successful it was, that our ISMA, the International Secondary Mortgage Market Association, has appreciated that, and they have sent a delegation from different countries. Like we received delegation from Uzbekistan Mortgage Refinance Company, Nigeria Mortgage Refinance Company, Kenya, and Saudi Real Estate Company. So we have technically passed on our knowledge and skill set for replicating this risk sharing facility into the other market. And this is the Islamic structure of our risk sharing facility was unique in the entire MENASA region. So this is it from my side. Thank you very much for giving me this opportunity.
One, it's on. Sorry, I'm trying to identify if Nyale is still in the room. Okay, great. All right, no problem. So I'm advised that we'll be able to just hear from him. But thank you so much. I think that was a presentation from Pakistan as well as advised. I would ask if there are any questions at this point. Do you have any questions? Okay. Just as we do the same, ladies and gentlemen, I would like us to all to please be upstanding as we give a round of applause and welcome Cabinet Secretaries Honorable Alice Wahome with a round of applause. Cabinet Secretary in charge of Lands, Public Works and Housing, Honorable Simon Chalegoy, who's the Cabinet Secretary in charge of the Ministry of Cooperatives and MSME, our CEO and MD, Mr. Johnson Oletate as well. As they settle in, let's give them one round of applause, please, as they come up as well. All right. So with that bit of a stretch and surprise entry, I must say, and already glad that we could be honored by the presence of two cabinet secretaries for this session, of course, hosted by none other than the CEO and MD. Mine is just to give us an overview of how the first bit of the period has transpired, and honored that the two cabinet secretaries could be join us as well this afternoon. So, Madam, Sir, we have a lot lined up for you. You've not missed much, but I'm going to tell you what you've missed in just a bit before I invite the CEO to speak, and to just help you appreciate who's in the room, what are some of the deliberations that we've shared, and of course, just the online presentation that we actually had from Pakistan. Please allow me to invite Madam Olive Gitau, who's the head of internal audit and our chief rapporteur, to just give you the cherry on the cake for the deliberations that have taken place with all the stakeholders in the room who've made it for the third Kenya Affordable Housing Conference for 2023. So, Olive, please, for the benefit of our CSS, what have we done so far?
Okay, good afternoon and welcome, CS Wahome and CS Chalugui and our CEO. Thank you for giving us this opportunity to have time to reflect and have conversations on affordable housing for economic transformation and social inclusion. So in the morning, we began with a few remarks from our CEO, and of course, in terms of what are the initiatives that KMRC has been doing in support of affordable housing. And he spoke about the different conversations that KMRC continues to have with different stakeholders within the industry based on either demand side or supply side within the value chain of the affordable housing sector. We also had, he also gave us an outlook in terms of the support we have been getting through the government in influencing policy to drive affordable housing. And the government has been very supportive in this initiative in terms of various policy initiatives that have been picked up and have helped the industry. A few was stated, and I'll not go down to just read all of them. And then there is also the focus on actively discussing the TPS, because this came up in the discussions, how the innovative structures that are there to support affordable housing. And so discussions that are being held to see how TPS and rent to own within the KMRC structure, that how we can incorporate that to push forward the developments within the affordable housing. And of course, our focus on 105% financing to help the end user home buyers. Then we had the Director General from National Treasury representing the CS, National Treasury, who was very categorical, stating that housing sector has the support from the highest levels of government who are championing real reforms. And he also stated that the government has been successfully engaging with multilateral institutions to unlock financing at concessional levels. And they are currently awaiting on approvals from respective boards of IMF and World Bank, just to keep supporting the government in the different initiatives that they are doing. He also spoke about the housing levy, which is meant to guarantee developers uptake of units. And once that is done after construction, and that is something that they are very keen on to address the supply side, while KMRC continues to address the demand side. And therefore, the National Treasury is focused on driving economic recovery in the country. It is focused on unlocking concessional funding, and it is also focused on supporting supply side through housing levy
and the demand side through KMRC. We also had discussions and highlights from financial institutions. We had a session on how can financial institutions spur access to decent and affordable housing. And we had one of our financial institutions, Caroline Wanjeri from KCB, who just gave us a few pointers on what the financial institutions are doing. Part of that being partnering with public, them as financial institutions, partnering with public sector to innovate financial products, mobilizing of domestic savings to create an opportunity to finance affordable housing, integrating, looking at how they can integrate with Boma Yangu, so that they can be able to track the savings that Kenyans are doing under the Boma Yangu framework, so that they can be able to know who are these individuals who can benefit through the financial products that they are providing. And then also leveraging more on data to give numbers, numbers that guide in decision making. Then we had a conversation from the World Bank representative on bridging the housing deficits, a look at global perspectives. And they actually gave us case studies from Colombiana, Odisha in India, and Senegal, and were able to pick out a few pointers that we can learn in Kenya in terms of areas of improvement, what we can be able to pick up in terms of partnerships, in terms of regulations, and working together with government. And then this afternoon, we had one of us, Beatrice Mwangi from Center for Affordable Housing, talking about the Nairobi Metropolitan Area Housing Supply Dashboard. So together with other partners, they have been able to come up with an open access initiative to where they're using data to guide in decision-making to help different stakeholders in the housing sector to decide or to know which areas they can be able to plug in terms of the different value chains that they provide. And then we had a case study from Unity Homes in terms of innovations in affordable housing, a case study on off-plan mortgages. So they were able to take us through the Unity Homes off-plan mortgage through the KMRC offering that has helped them to actually provide Kenyans with the solutions towards owning homes. And there's a question, and they asked, what does success look like in this aspect? So it was more about knowledge transfer to be able to benefit other developers, as well as be able to offer cheaper products to form the developer to help the developer in future offer affordable houses to Kenyans. And then we had a look at another case study by RentScore, who actually took us through their platform to help us see what they are doing to inform buyers. How are they able to check whether they are able to afford a house, how much based on their income, how much can they afford? And then they'll be able to provide a platform where developers and financials come together, and through that platform, they're able to give us solutions to buyers. And we ended up with a case study from Pakistan mortgage refinance company, who actually took us through their risk sharing facility in terms of de-risking the end user, that is the customers within their country, to help all their people be able to own homes in a cheaper way. So that is what we have covered so far today. I know it's a handful, but it's been quite an engaging conversation since the morning. Thank you.
Thank you, Olive. Honorable Cabinet Secretaries, what you have to appreciate, of course, is the convening power of KMRC, of everyone in this industry, and we are grateful for that. This conference would not have been possible without the great help from the National Treasury, the World Bank Group, KCB Group, Habitat for Humanity International. Let's appreciate our sponsors, please. And I believe just as we finish, of course, the day, you'll appreciate the exhibition that is taking place right outside. with our exhibitors from KCB Bank, NCBA, Terrian Homes, Gulf Cup, HFC, KMRC themselves as well, Fairdeal Properties, and United Circles. Let's appreciate the exhibitors. So without further ado, and just to now take the protocols that have been duly observed, please allow me now to welcome on stage Mr. Johnston Oltitia, who is now the CEO and MD KMRC, who will be the MC, I would say. I'm handing over my role at this point in time, and I hope he'll give me back my job after he's invited the CSS to speak. Thank you.
Thank you, MC. Good afternoon. I know you're looking at me and saying, what else do you want to tell us? Now, CS Alice Wahome, the CS Ministry of Lands, Housing and Urban Development, CS Simon Chelugui, CS Cooperatives and MSMEs. Ladies and gentlemen, all protocols observed. We are very privileged to have the two CSs here. And we extend a very warm welcome to them, to the third Kenya Affordable Housing Conference. Welcome, Waziris. Your presence here this afternoon is a true demonstration of your own individual commitments and that of the government of Kenya to the delivery of affordable housing. We are aware of a number of other commitments you dropped so that you can join and address this esteemed group of policymakers, innovators, financiers, and advocates of affordable housing. And for that, we are truly grateful. This morning, and I think Olive has just taken us through some of the highlights following the discussions we had. But we started with a session being addressed by a representative from representative of the CS National Treasury, who is a former colleague of mine, Albert Mwenda, who is currently the DG for Budget, Financial and Economic Affairs. And a number of questions were raised at the plenary. Those questions mainly touched to the discussions that I believe the CS for lands particularly is going to be addressing about. They include, number one, land titling, particularly the challenges we face on land titling, mainly in the coast region. I'm told some of the projects that have actually been completed, affordable housing projects, are yet to get titles, and sectional titles for that matter. Number two, which is something that Olive has highlighted, is about the housing levy, which is primarily meant to spruce up supply of affordable housing. And the issue, or the question, in fact, was, is this levy going to help to support the laying out of horizontal infrastructure for the various projects across the country, you know, roads, water, sewer, electricity, and things like that, so that you actually reduce the cost of housing. We are told almost 30% of the cost of housing is actually contributed by that infrastructure. And number three is digitization or digitalization of land titling processes, including what we have currently as Artis as a platform, and the need to increase public sensitization so that people can actually understand how that works, and increasing efficiencies within the registration processes, particularly of securities, which is a main concern to the end user, because there is a cost, that's an inherent cost that is created by inefficiency or uncertainty when the process is not too clear in terms of closure. And so we look forward to your addresses, Waziris. And we are, again, I think, very privileged and honored to have you around. Without further ado, I would like to invite, it's actually my honor, that is the protocol, to invite the CS for cooperatives and MSMEs, Mr. Simon Chelugui, to make his remarks and request him to thereafter invite his lands counterpart, CS Alice Wahome, to make her remarks. Thank you.
Thank you very much, Johnston. Waziri Alice Muthoni Wahome, waziri wa tunasema ardhi, manyumba ama ujenzi and urban development. The Cabinet Secretary for Lands, Housing and Urban Development, my colleague, CS Alice Wahome, the PS National Treasury in absentia, the board, Kenya Mortgage Refinance Company in the room, the CEO, KMRC, Mr. Johnston Oltetia, representatives of the development partners, distinguished guests, ladies and gentlemen, good afternoon. Hamjambo. Ni kama tumelala kidogo, tusalamiane hivi. If you can see me, wave at me. Thank you. I can see we are awake. First and foremost, I want to thank the organizers of this annual event, which is so close to my heart and this administration, because when you rank the needs and wants of a human being, we consider three things as the most basic needs of a human being. One is clothing. And I think most Kenyans or all Kenyans can afford to dress and clothe, even if it is one shirt, and trouser. At least most of us can dress. So it's no longer a very serious need. The second issue is food. This is a challenge that we have talked about over and over again. 3 months ago, we were staring at serious food challenges. In fact, we mobilized our donor partners to support us in provision of food. Again, with the government intervention, subsidizing production as opposed to subsidizing consumption. Government of Kenya has invested in subsidizing farm inputs, the fertilizer, bringing down from 7,000 to 3,500 to 2,500. And as we speak today, we have over 61 million bags of maize, which is our staple food. On that count, we are going towards self-sustainability in food. The third and most important needs of a human being, of Kenyans, is housing, shelter, provision of shelter. And is the reason why we are here. When you look at Kenya Kwanza Manifesto, you will see almost 5 pillars. One of them agriculture, MSMEs, affordable housing, health, as part of the pillars of this administration. And I'm happy that this administration has focused on addressing the needs of those at the bottom of the pyramid. We have been told that we are as approaching a slum state. We have been told the number of houses in Kenya every year on demand is over 200,000. And therefore calls for concerted efforts. That mandate is with my sister here, Alice. But our ministry, my ministry of cooperatives and MSME, have a complementary role to support her to deliver and achieve that national challenge, that target of the country. So it is my pleasure to be part of this very important gathering where we will interrogate and come up with strategies and ways to deliver government's affordable housing program. Let me take this early opportunity to appreciate the Kenya Mortgage Refinance Company for organizing this important forum and express gratitude for invitation to this third Kenya Affordable Housing Conference. I also wish to acknowledge KMRC partners, the National Treasury and Economic Planning, the World Bank Group for their collaborative efforts to enhance awareness continuously and innovatively on Kenya's affordable housing and emerging opportunities in this sector. Ladies and gentlemen, the theme of this conference, affordable housing for economic transformation and social inclusion, not only puts housing into perspective as an economic multiplier, but also a perfect reminder for us to recognize the important role that home ownership plays in uplifting human dignity. You can imagine as a man or as a family, what the feeling that goes through a family when they lose shelter, when they live in squalor environments, what it means to the man, to the mother, and even to the children. The upbringing of those children and that family is really, really compromised. I'm pleased to note that amongst the attendees and contributors of this important conference are key housing stakeholders, including SACCOs, developers, banks, development finance institutions, as well as the government. The much needed solution for effective delivery of decent and affordable housing to our people requires such a wide range of stakeholders. With a population of over 50 million, and I'm told our productivity rate is about 1.2 to 1.5 million people per year, every year. So it means we need to match our housing production with that population growth. So according to the conservative estimates, there is already a backlog of over 2 million housing units, and a backlog increases by over 200 units every year. This housing need is admittedly huge and far greater than what government alone can respond to. Distinguished guests, ladies and gentlemen, cooperatives offer an extensive range of services across the sectors of the economy, including financial services, housing, insurance, transport, hospitality, and agriculture through aggregation of citizens into cooperatives. We have over 28,000 registered cooperatives with a membership of 18 million. Cooperative control assets are worth 1.5 trillion Kenya shillings. We have an accumulated savings amount to 1 trillion shillings, and our loan book and advances total 980 billion. This puts Kenya's cooperative at position 7 worldwide. With those numbers with a membership of 18 million, an asset base of 1.5 trillion, a deposit mobilized and savings of 1 trillion, and a loan book and advances of 980 billion, places Kenya as the top cooperative sector movement in Africa. And it's for that reason, next year, we will be hosting the Africa Cooperative Alliance in Kenya. We will be hosting the Africa America Credit Union in Kenya. And we will also be hosting the World Credit Union will be also held in Kenya because of that distinct position that Kenya has put itself. In line with bottom-up economic transformation agenda, cooperatives are expected to provide 25% of the required housing units under the low-cost affordable homes. It is important to note that savings and credit SACCOs provide approximately 90% of the Kenya's total housing construction finance. This is a clear testament that SACCOs make a very significant contribution to the development of housing in this country. And I want to challenge the banks in this room and the SACCOs in this room. We are not yet there. When you look at the number of mortgage loans, Bwana CEO, issued by banks in Kenya, total loans, we are doing a lip service for lack of other words. When you talk of 50 loans, 100 loans, less than 1,000 mortgages per year, we are far from where we are going. And therefore, this conference should not just look at statistics, but should really drill down on how can we deliver the 200,000 houses to Kenyans. Because what are the challenges? I heard you in your brief about the titling, the Harthi Sasa, and the rest. With the new administration and our minister here, we should be able to unlock those challenges. But the problem is, how are you dealing with the market, with the demand side, with the demand side? How are you financing? How are you facilitating Kenyans to own homes? We also have a challenge of supply side. And I want to bring the perspectives of cooperatives. The cooperatives in Kenya, there are over 2,000 housing and investment cooperatives actively involved in housing development with over 120,000 acres. However, in Nairobi and its environs, we have over 200,000 acres that can be offered to such arrangement for purposes of affordable, low-cost, and even commercial homes. So, ladies and gentlemen, the micro, small, and medium enterprises are the backbone of Kenya's socio-economic development. This sector is a key driver of employment growth and considerably contributes to the country's GDP. The MSME sector in Kenya, according to the Kenya National Bureau of Statistics, employs over 86% of Kenya's population and contributes over 45.5% of the Kenya's gross domestic product. My ministry will therefore continue to work closely with the stakeholders to address challenges that affect MSME sector, particularly those that make it difficult for them to access decent and affordable housing. Distinguished guests, there is no doubt that investment in the housing sector has a significant positive impact to the economy in terms of job creation and multiplier effects on the broader economy. This provides greater opportunities for the micro, small, and medium enterprises through partnerships such as this. The availability of affordable housing finance from the Kenya KMRC not only provides SACCOs an opportunity to meet the housing needs of their members, but also an avenue to broaden their product offering and customer base. My ministry has spearheaded policy and regulatory interventions to enable SACCOs, and some of them are here, Harambee Sacco, Stima Sacco, Ukulima, and others. I have Mwalimu Sacco also, to provide regulatory and legal reforms to prepare them for this kind of partnership. Recently, the Income Tax Act was amended to extend mortgage relief to SACCO members who get loans to improve, build, and buy homes for their own use. With this amendment, first-time home owners funded by SACCOs are now eligible for a tax relief of up to 25,000 on their monthly salary. Na sio ni kitu mzuri? Ni kama hamjasikia. Unajua mimi nasikianga nyinyi mnataka tu toeni tax. Tukitoa relief hata munapiga pia makofi. Sio kulalamika kila wakati. Kusema iko ushuru hapa. When we give you relief, you also clap. When we also tax, you also celebrate, because at the end of the day, it's meant to support Kenyans to own homes. I urge all SACCOs and MSMEs to position themselves to provide more access to affordable mortgage finance and effectively tap into KMRC funding to increase the scope of their mortgage offering. This includes SACCOs that are currently not members of KMRC. As I understand, KMRC is willing to onboard new members soon. And to the CEO, we have over 190 SACCOs which are deposit taking, regulated by SASRA. I would like, as a way of opening up and creating inclusion, to onboard some of these SACCOs so that we widen the distribution and reach to many Kenyans. Ideally, the loan size of 8 million shillings and salary limit of 150,000 perfectly fits the members who form bulk of our SACCO members. So, dear participants, my ministry then has been driving policy reforms to enhance the governance, financial soundness, and sustainability of SACCOs industry in Kenya. And I've always told all SACCOs that the days of SACCO leaders, those who are elected and put in office by members, should be men and women of high integrity. We will be vigilant and determined and resolute, intentional in protecting members' funds in all our SACCOs. The mantra and the assurance I want to give all members in SACCOs, as long as I serve in this position, a shilling in a bank, a shilling in a SACCO should be as safe as a shilling in a bank, in a commercial bank. We have to ensure prudent and sound management, placement of our cash, placement of our savings, just like all the monies in all the banks in Kenya. So we have also, and Cabinet the other day, my colleague can confirm, passed the cooperative bill, which has looked at all these sectors in cooperative movement. We have financial and investments, we have production and farming cooperatives, we have housing cooperatives, we have transport cooperatives. All these cooperatives are now going to have a new life through the new cooperative bill, which should be on its way to Parliament now for enactment, for debate, and now finally enactment. The reforms which are consistent with the policy development were articulated in that cooperative development policy and approved by Cabinet. In this regard, my ministry has given priority to the following policy reforms. One, the central liquidity facility and shared technology platform. This will aggregate SACCOs to create a bigger financial liquidity pool. The second one is operationalization of the deposit guarantee fund, so that in the event a SACCO may go into financial challenges, there is insurance, just like we have a deposit protection fund in the banking sector. The last one is establishment, the other one is establishment of the SACCO fraud investigation unit within the regulator SASRA. And finally, prudential supervision of the non-deposit taking SACCOs, commonly referred to as back office services activity, BOSA SACCOs. So distinguished guests, I think our coming here today marks the beginning of a new partnership between a renewal of the partnership between KMRC, SACCOs, and government. And it is my desire and hope that going forward, we'll see more SACCOs joining the KMRC arrangement. I spoke to a few, Stima SACCO, Ukulima Arambe SACCO, and they have good testimonies. In fact, KMRC complements the loan, the mortgage facilities they had. The matching of the loan product with a tenor has given the SACCOs a new impetus in delivery of mortgage loans. They can now afford 10-year, 15-year, and even 20-year loan, which they could not when on their own. And this is something we should clap for KMRC. So I wish to congratulate KMRC for winning the prestigious Africa Union for Housing Finance Award of Africa's Most Innovative Affordable Housing. I think let's give them a better round of applause. Thank you. This is a demonstration of KMRC's steadfast commitment to furthering innovative housing solutions and leverage its public-private partnership opportunities for the good of the company's mission. This is evidence of how collaboration and innovation can drive impeccable change in affordable housing. So KMRC hoye. KMRC hoye. Asante sana. Thank you and congratulations for that award. So before I close, we came up with an innovative financial inclusion product, the Hustler Fund. We will be going into the future. We have a good story to tell 1 year down the line. Many people look down upon us when they heard we are promoting 500 shillings to very low level borrowers. I want to tell you today, on the 29th of this month, we will be celebrating 1 year since we began this product. And the news, the report, the scorecard of this product, this financial product, is amazing. In fact, personally, I am shocked. We have a Kenyan who has borrowed a total of 4.5 million shillings. And many Kenyans were even telling the president he lied to parliament when we spoke to them during the State of the Nation. I am the owner of the news, and we have the report. This Kenyan runs a shop, and he borrows 2 to 3 times. His limit is 6,000. He has borrowed 814 times. And every time he wants to replenish his stock, he goes to the Hustler Fund, borrows the money, sells his wares, sometimes through M-Pesa, pays back the money, borrows again, and restocks his shop. So the motivation of multiple borrowing per day is the saving element. And therefore, the culture of saving is catching up among us Kenyans. This Kenyan today has saved over 235,000 shillings. Amounts that he could not see, could not in his lifetime hold. Now, because of this saving, we will be engaging banks to promote savings-led credit. What we began was credit-led savings. We have saved 2 billion shillings so far. From 22 million Kenyans who joined the Hustler Fund, 19 million have borrowed. And out of those, 7 million Kenyans on a daily basis come to the Hustler Fund at 4 a.m., 5 a.m., 6 a.m., 7 a.m., and repay this money between 5 and 11 p.m. in the evening. So if there is any product that has captured the mood of the nation, the challenges of that time where Kenyans were paying up to 3% per day is the Hustler Fund. We have been able to move over 3 million Kenyans to the Hustler Fund who are locked in other predatory services. And finally, we have been able to, we're now working on connecting them to housing, affordable housing, and also medical insurance. So with those many remarks, we will be celebrating 1 year on the 29th of this month. And I want to invite you to participate online or physically in Nairobi. We have requested the president to grace that day, and we are waiting for his response. So lastly, I wish you well in your deliberations as we all continue to play our part in this conversation, ensuring that affordable housing contributes significantly towards economic transformation and social inclusion. I want to thank you. I want to challenge you that today is our new beginning to address the challenges and shortages of housing in Kenya. Let this group be the champions to provide, to give Kenyans decency and honor and respect by provision of affordable housing. The 200,000 houses, the needs, the demand, the shortages of those houses can be solved by these people in this room today. Thank you very much. Now, it is my distinct honor to invite my colleague, a lawyer of distinction, a lady who has served in public service as an elected member of parliament of Kandara in Murang'a. And those of you who are old enough, remember when those days, 1990, I actually lost 1 year because of these people when I was a student in the university. The group of Chief Justice, Alice Waume, Mother, there were a number of them, Itobu Imanyara, they were the champions of reforms in Kenya. And she has a distinct record of having participated in the second liberation of our country. And has served straight, yes, she was going for a third term when she decided to change course from parliament to the executive. So Alice Waume, the Minister for Lands, Housing, Public Works, and Urban Development, and also my friend, I have the honor to invite you to make your comments and address this congregation. Thank you very much.
Let's give him a clap as he sits down. Thank you, my brother Simon Cherugui, CS Cooperatives and MSMEs, for those very kind words. I'm sure you have done some exaggeration somewhere there because we are also very good friends other than being cabinet secretaries colleagues. So let me start by recognizing the protocols. Allow me to stand on the protocols that have been expressed this morning. Safe to say that I recognize the presence of my colleague, CS Simon Cherugui. I'm happy to be here again with you. The last time, again, we met in Mombasa. We were addressing the same conference, and today you are here. Thank you very much for your time. The CEO of Kenya Mortgage Refinancing Company or Corporation, distinguished partners in this meeting, both local and international. I know we have investors that have come for this conference. We have investors at our local level, country level, regional level. We have investors who have been in this business for the longest. And the fraternity of KMRC, thank you very much for the efforts you have put in place to have this conference. when I look at the room, I'm confident I can applaud you to say you've done a good job by gathering all these people here, and therefore you deserve a good clap. Being your third conference, obviously, then you are doing very well. And so I want to commend you for the good work. Habari zenu. Good afternoon. I am here, I was expected here in the morning to be the person to commission this conference in terms of opening it. I believe that the fact that it is in the afternoon, we shall still do the job that we were supposed to do. I know you have had quite deep deliberations. The summary is very clear. I had been briefed, I have just been briefed this afternoon by the CEO, and I was aware that we were starting in the morning. I'm looking also at the program and saying, yes, we started today at a partners, International Partners Development Forum coordination unit at the Deputy President's residence this morning, because we needed to be able to coordinate, to have a framework for coordination of the development partners so that we can avoid maybe wastage, avoid duplication, especially haphazard application of programs and projects. So that's where I started this morning with my brother Simon here. And therefore, I would have wanted to be here in the morning, in fact, to spend a night. Unfortunately, I may not be able to get the luxury of spending the night here, notwithstanding the nice weather. I therefore want to appreciate your time. Having said that, yes, I'm the newest minister, I think, in town. Minister for Lands, Public Works, Housing and Urban Development. I have 3 state departments, and I think all those state departments are critical to the participants of this conference, because if you want to invest on housing or in housing, then you need land. So you need Alice Wahome. If you want to borrow money, you need a title from me so that you can then go and give it as security. Then if you need to build, you need architects, you need contractors. National Construction Authority is under my ministry. If you need quantity surveyors so that you can know how much you need a surveyor to establish your boundaries, all that is within our ministry. The bigger you are, the bigger the challenge. And therefore, I will maybe, I'm sure you are part of those challenges. People, I know there are real estate owners here. Some of them have the very bad names, like they are my colleagues, lawyers here, who also have the habit of blaming the minister for the CS for lands, and they have the solutions. Instead of bringing the solutions, they blame the minister. But I'm happy that, and I know I'm receiving a lot of accommodation from colleague lawyers, except when I now announced that we shall be announcing, we shall be increasing fees. You know, unfortunately, I think I'm doing it at the last part when other people have had the opportunity to increase, to review their fees. But you know, it is very surprising because sometimes something can just be almost stereotyped, and you know, the more you repeat, the more you say they are adding, they are increasing, that can become like a bad story. So even if you are doing good, it will still be a bad story. I'm looking at like the fees that we have proposed, because right now we are doing public participation. I'm going to go into my written speech very quickly, and I am mindful of the time. But I just wanted to kind of highlight where we are in that kind of regard of raising fees for such fees, because A or money that we charge for fees is the money other than revenue. You know, stamp duty being revenue. These other services that we give are the ones that help us to run the ministries. And therefore, I was looking at some of the charges like registration fee for a title, 2,000 for the longest, search fee for the longest, 300, 100, 500 shillings. Basically, our fees have been very contained. And when you go to a lawyer, for example, when you compare the services, of course, the services of a lawyer are, of course, and I know are professional fees. But in my ministry, we have lawyers who are the registrars. So they are handling the documents the same way the lawyers handle. We have architects. We have public work people there. We have quantity surveyors. We have surveyors. So you're looking at the lawyer now writing his fee, you say on instructions to do ABCD, to register, to transfer, what, debenture, what, 300,000. Then you come down, of course, because the drawing and whatever. Then they have other fees called, perusal, due diligence, witnessing, letters, demand, writing letters, complexity, general care and responsibility, another 10,000. And when I raise 2,000 fee for registration of your title and give security back, and I'm speaking because of this, because I know you take care of the customers, the people we are selling the houses to, the people we are giving the mortgages to. So in other words, when the time comes, support the regulatory reforms and changes that we are coming up with as a ministry. I want to assure you that we will be sensitive, and where we shall receive a lot of, where we receive a lot of indication that you don't go that route, we will obviously listen to the public, and that's why the need for public participation. Therefore, allow me then to say a few of these remarks to give my official speech or statement in this conference. It is also good for record. I'm not the first minister for lands, so this ministry has seen the various other women, and I'm glad to see that in this housing industry, there is quite a good number of women in many of the conferences I'm attending, because I have also been known for being a gender defender. When they want to make you look bad, they call you activist. But I'm happy to see the number of women in this particular sector. Because we are talking about money here, not many places you find many women when it is money discussion. So well done, ladies, and keep up the good job and make money where you are. Obviously, I have come from politics where people don't make money. My brother is saying that I decided to then abandon Kandara. No, I didn't decide to. It was a very difficult decision because I also enjoyed my political life. I enjoyed the political space. The third time I got elected, I now knew things are complicated because having been very deeply involved in the formation of government, I knew I'm likely to get another opportunity in the service of the people of Kenya. And there it came. So I had to make a decision whether to take a ministry or a cabinet position or remain a member of parliament. I know there could be one or two people from Kandara here. I still miss my job as member of parliament for Kandara. So don't report me back home. So it gives me great pleasure to attend the 3rd annual Affordable Housing Conference organized by Kenya Mortgage Refinancing Company. I sincerely appreciate the invitation and congratulate you for bringing key stakeholders together for 3 consecutive years. So don't ever now break this because make it a tradition would be very good. I wish to thank all partners, including the National Treasury, who spoke here ahead of us, and the World Bank for joining hands with KMRC to make this conference a reality. Ladies and gentlemen, as we gather here to discuss the current state and future of affordable housing in our country, I'm reminded of the profound impact our decisions can have on the landscape of our nation. The choices we make today will shape the communities of tomorrow, influencing not only the physical environment, but also the lives of those who inhabit the environment. The theme of this year's conference, Affordable Housing for Economic Transformation and Social Inclusion, not only puts into perspective the centrally important role decent and affordable housing plays in the economic growth of our nation, but also vividly acknowledges that such growth must not leave any person behind, regardless of their social standing. This indeed mirrors the focus of the government in ensuring a shared prosperity and dignity for all citizens, as well as accessible and adequate housing as enshrined in our Constitution, Article 43. I'm confident that the discussions and collaborations that will unfold in this conference will be instrumental in continually guiding our collective journey from the challenges of urbanization to the opportunities presented by technological advancements. The landscape of the property sector is evolving, and therefore I look forward to that great engagement. For instance, there is the implementation of the National Land Information Management System going on in my ministry. Addis SASSA has continued to gain traction in its objectives of enhancing the integrity and security of land records, improving accessibility, and reducing the cost of transactions. My ministry has to date played a key facilitative role in fostering collaborative discussions with the industry stakeholders, as recently witnessed by the Memorandum of Understanding with the Law Society of Kenya and the Institution of Surveyors of Kenya to allow registration of long-term leases simultaneously with the georeferencing of properties. This is the enabling spirit of collaboration that my ministry aims to achieve or to enhance, not only with the public, but also with the private entities, but ordinarily mwananchi that interacts with our services or the public. Ladies and gentlemen, we recognize that affordable housing is an investment in the human capital that drives our nation forward. The development of affordable housing creates jobs, especially for macro, small and medium enterprises, stimulating economic activity. From skilled laborers or workers to suppliers of building materials, the housing sector has a cascading effect across the value chain, contributing significantly to our gross domestic product. By prioritizing affordable housing, we are not only providing homes, but also sowing the seeds of economic vitality that will benefit generations to come. In a nation as diverse as Kenya, ensuring that every Kenyan, every citizen has access to decent housing is an affirmation of our commitment to social inclusivity. To this end, the ministry is committed to enabling affordable housing projects with inclusivity in mind to create communities that promote social harmony and reflect the richness of our society. The government's commitment to support Affordable housing is stipulated in the government's bottom-up economic transformation agenda, and then evidenced by the President's State of the Nation address on 9th of November, 2023, where he affirmed that construction of 46,792 affordable housing units is underway, while construction of 40,000 units will commence soon across the country. A total of 746,795 housing units are in the pipeline, undergoing various stages of delivery or preparation. Realizing the vision of affordable housing for economic transformation and social inclusion requires concerted effort from the government as well as strategic partners between the public and the private sectors. The benefits of economic impact, including jobs and wealth creation, can only be reaped if projects are large enough for economies of scale to be realized. Private sector innovation and efficiency, combined with the government's commitment to social welfare, can result to sustainable housing solutions that are economically viable and socially inclusive. We acknowledge that we have a housing backlog of 2 million units, but we are making remarkable strides to address this deficit. The establishment and operationalization of KMRC remains a remarkable success story, and itself is a great step towards addressing the demand side of the affordable housing. Kenyans can now access long-term fixed rate mortgages at single-digit interest rate through KMRC-backed home loans. KMRC has already refinanced home loans close to 10 billion Kenya shillings to a total of 12 primary mortgage lenders, which is significant achievement considering the company started the refinancing business just 3 years ago. Let's give them a clap. We have adopted a comprehensive and forward-thinking approach to reshape our land policies, making them more conducive to affordable housing development. To address current challenges and ensure delivery of affordable housing, the ministry will prioritize the following: speeding up verification and issuance of title deeds across the country to entrench certainty and sanctity of title or of property ownership, to facilitate transactions secured by land. This will spur economic growth across various sectors where billions of shillings can be deployed by financiers. Increasing land availability for affordable housing projects through partnerships with county governments, and this is a program that is in place. To this end, 36 memorandum of understandings have already been signed between the national government and county governments, implementing effective land use planning strategies that allocate suitable areas for housing development by identifying and designating land specifically for affordable housing projects. My ministry will streamline the development processes and reduce construction costs. In this regard, a committee has been constituted to identify land parcels across the country for affordable housing projects. Partnering with developers in the public and private sector to build affordable housing units and putting in place practical financing solutions to support offtake. Following the introduction of housing levy in July 2023, we are collecting approximately 6 billion Kenya shillings per month as development capital for affordable housing program. My ministry will steer positive reforms to lower the cost of construction, to increase affordability and accessibility of home financing for aid borrowers. And further, increasing support to micro, small, and medium enterprises by tasking them to supply doors, windows with the standardized designs for affordable housing projects. And then we are engaging with local communities whose input will guide the development of housing projects that meet the needs of Kenyans. We are further enhancing accountability, transparency, and efficiency in land administration and management. We shall endeavor to ensure that the ministry's 2020 strategic plan continues to guide our operations on land administration processes and resource mobilization so that we can address the needs of the citizens. We are further going to continue working with those stakeholders to have several bills finalized, which are actually in the process somewhere between our office, public participation, and we'll soon be presenting them to Parliament, the 13th Parliament. Having said that, I want to further say that as I conclude these remarks, you are aware that investment in housing sector has one of the best returns in terms of job creation, multiplier effects on the broader economy. Affordable housing is therefore not just a roof over one's head, but the cornerstone of economic empowerment and social inclusion. Let us as a nation commit ourselves to a future where the Kenyans have access to affordable housing. I was saying that the reforms or the bills that are pending in Parliament are the Real Estate Regulation Bill 2023. We have the National Land Commission Amendment Bill. We have the VARUAS Bill, National Rating Bill, Landlord and Tenant Bill, Housing Bill, National Disaster Risk Management Bill. Some of those or all of those are pending, and we will be seeking your support to move them forward. My commitment is to foster an environment that encourages responsible development, embraces innovation, and safeguards the interests of both the property owners and the broader community. We shall work with those stakeholders in the housing sector, both on the demand and supply sides, to transform affordable housing and uplift the dignity of our people in owning homes. The ministry will continue to leverage on linkages with affordable housing enablers for provision of both physical and social infrastructure, which is an integral part of housing. We are also committed to reviewing policies and legislation that will create a neighboring environment to spur growth in housing sector. Finally, I wish to thank you all, and specifically KMRC, for organizing this important conference, and I look forward to more engagements as we collectively work together to achieve affordable housing for economic transformation and social inclusion, as the mantra goes. Let me now also respond briefly to one or two questions that you raised regarding ABISASA and regarding the titling issues, especially section of property. I want to confirm that we are continuing with digitization processes. For some reason, because of course of funding and being a new program, it has moved a bit slowly, but we are almost completing the Nairobi Central Registry and Nairobi Registry itself. So that is almost in the last stages of implementation. We have also started loading in or putting in the documentation for Murang'a Registry, for the Murang'a County Registry, which is the second station that we are moving to. Obviously, we are very far in that process because I need to reach to a minimum currently of 64 registries that are already operational. I do have another 20 or so registries that are not yet functional or operational because of the usual, they are new registries and it's work in progress. But for the existing ones, we need to roll out the digitization process. We believe that we have, of course, held many stakeholders meetings. That is one way to secure our titles. I know it has been painful and slow, and especially some files being not available. We do understand the headache, the heartache, and the confusion that all of this has caused, but we are working day and night to clear some of those bottlenecks that have been there. And once the file is available, the process becomes very easy, secure, and therefore we can look forward for a better land management system going forward. Obviously, there has also been cases that have been contributed, including loss of files or missing files by people with bad habits and practices who maybe give some little money because they have developed a certain interest in a particular property. Those are the unique or peculiar files, but that should not be the practice. We obviously are sending very strong messages, and there are officers who are likely to be hurt or to be cleared in the process of reforming that particular mannerism or character. And therefore, I want to assure this conference that we are going to go all the way to ensure that the security of our titles is retained or guaranteed. I am aware that the title is a sacred document, and the fact that some people have lost their titles or their properties through unscrupulous practices does not excuse any one of us, does not excuse the nation. The nation should never find itself where it is. And we have to put a concerted effort, both from the public and the government, to clear and eradicate corruption and fraudsters that have raided the nation with those practices. I assure you, you have a partner in that, and I'll be on board. The other thing I think you are raising was of course regarding accessibility. The more we get on board, we put our systems together, I think the less time we spend in accessing. That requires also a cooperation from all of us again, and especially our partners. I think we wanted to use Nairobi as the main registry as a pilot, and it is working. We are ready to move to the next level, and I believe that it will be something that we will all work together and look forward to achieving together. Finally, on the question of housing levy and how do we access houses, I think that must be clear to most of us here. I'm also learning the system because I was one of those people who were criticizing affordable housing when I was doing politics. I am now in the place where I'm the one going to implement. That time, I was thinking the government was biting too much because it was promising affordable housing, also manufacturing, universal health coverage, and I think what else? There was a fourth pillar, health and manufacturing. These were very big ambitions. They are still very big ambitions, and therefore I am committed to ensuring that affordable housing with the housing levy, which I'm also paying at, I think I'm paying about 27, at the same rate that everybody is paying. I saw my payslip with a minus of 27,000 when I went to look at my payslip, and I was actually a bit surprised. I thought it was quite high, but when you look at the good, the positive that the housing levy will give to this sector, you would have to come on board. The place of the housing levy has helped the ministry to kind of be able to comfortably say we can guarantee affordable housing. The rent to stay or the purchase through rent you are paying, and you know the mortgage people call it a tenant purchase, but you are living in it, you are owning it as you move on between 20 and 30 years is going to be possible because of the housing levy. I think currently we are talking about 2.5 for the social houses to 4 million. And then between there, you have the affordable housing and the commercial. We have 3 types of housing, accessible housing programs. The social, the affordable, and the commercial. Commercial, of course, goes at the same rate, and we are guided by KMRC and the banking sector. That obviously is going to be a competitive house, and therefore we will work with what is in the market. But all the same, it is going to be between 10 and possibly 13%. When we are talking about affordable housing, it is it's around 5%. Social, 3%. With the housing levy, we are able to bridge the gap there, and we are able to utilize that. Fortunately or unfortunately for us, before we could be able to pick and leave maybe Aris Wahome or Kamau Mwangi or Kiprono, whoever, because we will be saying they do not deserve. There are others who deserve more. But with the housing levy now charged on everybody, although we shall still look at the need, we will be obligated to also use first come, first served, because as long as you are paying the levy, then you are entitled to the house. We're using the program, the Boma Yangu, the platform is there, you access it and you wait for response. The minimum, of course, is you start with a 10%, and after that we spread. For the social, talking about 3,000 to 4,000 shillings a month for as you live into the house. And I know we may have to wait while we are reforming the law for purposes of the titling. These are sectional properties. We are even trying to see how we can establish a registry. Totally, I know we are in that process, but we need a whole building. Looking at the way you people are coming up with houses and the government program of 200,000 per month, per year, towards our 2 million reach, then it means we will have to require a huge registry to just process the sectional properties, because we are going up, not on the ground. So that is something, as a new minister in this particular place, I'm thinking, so that we can have a faster turnover in terms of our services, in terms of efficiency, and we need to really go that route. But finally, I am therefore saying support housing levy. We've taken it. We don't want to apologize because we believe we are together in this. It may hurt for now, but 5, 6 years down the line, when you see these blocks of good homes where hitherto we were having structures which do not amount to a house for a human being, using the same scale, using the same level, using the same law that all peoples are equal, then you will be happy that you agreed to contribute to the housing levy. I think now we need even to move now from the people with a pay slip to the other people, so that we now can call everybody into this particular kitty. And I will be glad to confirm, we have said 6 billion is not little money. We will make sure that it goes and is used for the purpose it is being collected for. And that is the commitment of the government. Asanteni sana. I can respond to those other questions in the next conference, and we can take the audit of how many houses we have built. Yes, we are going to be everywhere in every county. We are using also land. Investors are now, and also remember we have the NHC, that is National Housing Corporation, which is another avenue that you can use. I'm saying investors, people with money, you have your 2-3 shillings for investment in housing. Come on board, because we are in a better place with the housing levy. We'll be able to guarantee the offtake because of this fund. And therefore, investors with money now do not have to say, how shall you offtake? How shall you guarantee, especially the affordable ones, because you can see, in terms of paying back, there could be 1 or 2 delays. But we are saying we are in a better place to guarantee repayment, and we believe that it's going to be a very successful program. Thank you very much. And God bless you. Enjoy Mombasa. I now wish to declare this conference officially opened. Would you enjoy after the conference, wear your beach dress, your beach outfit, and swim. But remember, the El Nino is around. So take care of yourselves.
Thank you. So I think we just need to appreciate a little more to the 2 waziris. Now, CS Chelugui has to run, but I will hold potentially the Minister for Lands a little. If you have a few questions that you like to ask, Waziri, I request that you remain for a short while. If you have any 1 or 2 questions that are burning for CS Chelugui, please go like now, because he has to attend another event outside around Mombasa.
Okay.
Any 1, 2 questions?
And also just to pass the mic. Okay, there's a question there. This is particularly to CS cooperatives. Okay, maybe we can just take a quick sample and then the CSs will respond before the exit.
Hello, this goes out to Alice Waume, Honorable Alice Waume. So you said that the process for the digital process. Hello?
We're hoping we can take any question for Chelugui, CS Chelugui, because he has another meeting, or if there isn't, we can release him.
That's right.
And then I can take the questions. I'm sorry to cut you.
Thank you very much. My name is George Araba, I'm an architect from the Architectural Association of Kenya. CS, I'm just listening to you, and you're very keen on tying cooperative activities to housing. And I think there's a regulation that prohibits most of these circles to focus on mostly savings and not investments. So I don't know whether your ministry has plans to change this particular thing, because I feel, actually, I think we've been pushing it, especially from the AAK circle, but to do it unofficially, sort of to support housing. But of course, we know that's not their core mandate. So I don't know whether that's something your ministry can prioritize. Thank you.
So maybe we could just quickly take a sample. Any other questions to CS Chelugui? And also just to open it up to the members of the Fourth Estate, until we have Daily Nation as well in the room. Should their journalists also like to pose any questions and take it up? Jamila, over to you.
Okay, good afternoon. Thank you, CS, for your presentations. My name is Jamila Mbogwa. Just following up on the issue of the Hustler Fund and it being a success story. You're talking about a guy who has borrowed 4.5 million so far. Why aren't you shouting about it if it's this good? Thank you.
Thank you.
It's coming from our comms. Last but not least, thank you. Sis, we'll go over to you.
Thank you very much. I think shouting begins with what you've just said and what I told you on the podium. And we really we wanted to count at least 1 year to have a good story to tell, as opposed to just shouting because of 1 or 2 cases. And I also told you, other than the 4.5 million the ASLA, the borrower, we have over 1 million Kenyans who have also borrowed more than 10 times. I think the highlights, the climax of this ASLA fund story will be on 29, and we have rolled out a number of communication that will be splashed and delivered to many Kenyans. So we'll really be talking about it. And what we are saying here is you can borrow less and repay and build a character so that we replace the traditional collateralization of security from title deed to credit score to character valuation. That is really the objective of the Hustler Fund. Now, the other question that was raised by the architect about our focus on savings as opposed to investment. I think I picked it a bit in my presentation that we have several pillars of cooperative movement. We have the farming and production sector or pillar. We have the savings and which is largely characterized by SACCOs. And we have investment. I think Stima SACCO have another branch of investments. By regulation, the SACCOs are not allowed to utilize savings and cash deposits of SACCO members to invest in homes and long-term facilities. So what we encourage them is to establish a parallel or an standalone investment SACCO that can do housing, can do real estate development, and any other. They can even build a hotel, they can do express highway, they can buy bonds and government paper. What you've been seeing in the last few months is our push for savings, which has been established and running. However, that doesn't stop us from also pushing the housing. The challenges the minister has highlighted here, the teething problems that she has picked are also the same issues that affect those investment, those cooperatives in investment. Once these are unlocked and made seamless, it becomes easy for us, even as a ministry, as a department, to push for housing investments. We already have one. I launched one project in Parklands by Stima Investment. They were putting up apartments and they are selling to their own members in Stima SACCO. But that can, with the sectional, the bills that Waziri is pushing, will open up for many Kenyans to participate in housing. So all these reforms are not just limited to the Ministry of Housing. It will unlock the entire housing sector and create huge opportunities in that sector for MSMEs, for investors, and even for those who are looking for homes they're investing in homes for their residents. So you just bear with us, and we are running this concurrently, what we are promoting on one side and what Minister for Lands is operating on the other side. By regulation, you are right. And the whole intention is to protect savings, to protect diversion and abuse of savings, so that a customer who calls in tomorrow for his savings can access it. We can't tell that depositor that we bought a house It's yet to be finished. It's under construction. That depositor would want to call in and get his money. But for us now to develop this pillar, we are coming up with that. We are now pushing that sector of investment and housing. And I believe we will be able to provide a great partnership with our Ministry of Housing under the leadership of Honorable Alice Waume. Thank you very much. So I really wish and request your Honorable CS to allow me to attend to Kenya Industrial Estates board retreats in here in Serena, and I wish you well. Thank you very much, everybody.
Thank you, Waziri. Thank you again, and I want now to hand over the emceeing to the real MC.
Thank you, sir. Appreciate it. As we see off, CS Chelugui, thank you very much for your time. We really appreciate you, and have a good stay as well in Mombasa. So at this point in time, I'll just want to ask any questions to Honorable CS Alice Waume. There was a question, I think that interrupted you. The gentleman in yellow polo, yep. You had a question to the CS, Elisha, here. On your left, sorry.
Okay, CS, there is the issue about deed files where they were taken to the Kenya Survey for scanning. And will that be addressed when you're dealing the issues of titling and the Nairobi registry? Because that's also another pain in the process, where somebody is doing an application and then they are stuck because of a lost deed file. The deed file can't be found. Thanks.
Okay. Back to AAK. Let's take the one who hasn't asked first. Let's right at the back.
My name is Eugen, and I work for Nation. And I just have one small question. You find that for us to achieve the affordable housing idea that we are having, we really need to ensure that we have land to do that. However, in Mombasa, we've been struggling so much with the issue of land injustices, and more so, many land pieces have issues. However, like the other time I was talking to some developers in a place in Bamburi, and they were complaining that after like 30 years of owning a piece of land, there was the original owner who was presumed to be an absentee landlord who had come back to take back the piece of land, and they had maybe tried to create on that land housing and so forth. So at the same time, we heard that the president had put out and talked about having 1 billion set aside for those lands that are having squabbles in terms of the absentee landlords, so that the people can get the land and invest there. I don't know, Madam Waziri, if you can expound on where you are with this plan and what the people should be waiting to hear from you in terms of that disbursement of the 1 billion that was set aside to pay the absentee landlords, because it is often that the people had already started creating the houses which are now probably affordable than the one that we are waiting for the government to give to them, now that we don't know if all of them are able to get that levy.
Okay, thank you. Explanation. And then last but not least, the two hands right in front. Okay. Yes, please.
My name is Peter Mugeni. Madam CS, I was excited to hear you say that you are almost completing the digitization of the Nairobi registry. At the risk of stones from the lawyers in the room, should we expect now land transfer to adopt a similar approach to what we see with vehicles? I can do it from the office.
There's a lot. Okay.
Madam Bias, there's a lawyer next to him, yeah? But my question is non-related nonetheless. There is, I know as a member of the Law Society, you said that we are good at criticizing, yeah? But I'm here to give coverage. to the ministry for the good work it has done so far in as far as digitization is concerned in Nairobi. And we are expecting this process to take over in other counties in the same way it has done in Nairobi. It has done very well. However, Madam Waziri, there is an issue that is now an elephant in the room in terms of due diligence. You are aware of the landmark case, landmark case that was decided in the Supreme Court recently in respect of dinner management versus the county government of Mombasa, where the due diligence bar has been raised very high. And anybody buying land in this country has been called upon to go beyond what we usually do as lawyers in terms of ensuring that what they're buying meet the integrity test. What is the ministry doing to ensure that you are protecting Kenyans in respect of this particular bar that has been raised by the Supreme Court? Do we look to your ministry to protect us in respect of a search alone, or do you expect us to go further beyond a search in order to ascertain whether a particular title is clean? I know lawyers are worried, and especially so from a professional integrity point of view, in as far as our work is concerned. So what is the ministry doing in that respect?
Okay, thank you. The last two.
Thank you. Thank you for another opportunity. Madam CS, I'm glad to say that I'm firmly in your docket as an architect, and I'm also here representing 8 different professions that are involved in the built environment from my association. And I would like to register the fact that I picked out the fact that you were very confident when you were saying about the plan, and this is to do with the registry. In fact, I was shocked at the numbers of the registry we're looking at, and I'm privy to the sessions when the discussions on digitizing land registry and conveyancing started. I remember attending a session in Naivasha some few years ago, and the same sentiments are still there. Currently, as we speak, an architect, for example, and an engineer and a planner is supposed to register eventually as many as 47 different accounts to be able to register development across the country. One of the things that we've been pushing for as an association is the issue of a one-stop shop. Kenya is currently pushing the agenda that we are very digital savvy. And indeed we are. I am really worried when it takes so long for us to develop this registry, because I don't think it's a matter of lack of skill. It's not a matter of lack of bandwidth. It's not a matter of lack of servers. I feel maybe there could be something else that's at play, which puts land conveyancing and development control as one of the least contributing factor to the ease of doing business in Kenya. If you check right now the index, those two things of issues of land and development control are dragging the rest of the indices. I think this ministry has a pivotal role, particularly when we're looking at housing and, most importantly, urban development, because 80% or more of Kenyan urban development is informal by the issues of land registry. So I'm requesting that if this is fast-tracked, it is actually going to open every other challenges that these affordable housing programs and urbanizations are facing. And if that is not resolved at the quickest time, I think we might have even a bigger challenge as we are trying to fast track the closing of this 2 million housing gap. Thank you.
Okay, last but not least.
Good afternoon. First of all, and sorry, I'll bring a little bit of politics. My name is Samson Gishia. I'm a voter from Karomo Primary School where you vote. So I'm from Kadara. Congratulations for your new position. My question would be, I work with Housing Finance, sorry, HFC. I'm also a civil service scheme fund manager. Maybe to start without complaining, State Department of Housing is doing a good job managing the same. Maybe at the right where that's where we need to do a little bit. So my question is, as you try to raise fees, and now we have the digitization of this, do we expect this platform to be put in a way that even a normal Kenyan can do a search, like if I want to confirm my RAD, it's still registered under my name, and maybe in return, you can be able to do a little fee from the same search, the way we do with CRB. I send a request, they send me my cost of how much I need to pay, and then they give me my feedback in terms of who have listed me. Do you expect to see the same with this digitization? Thank you very much.
Thank you for your questions. Appreciate it. Madam CS, I know that's quite a lot on your plate, but maybe you could just encapsulate that as you give your closing remarks. But I'll also just add a few that we've received on Slido is to Madam CS, how can private developers engage your ministry for adding to the infrastructure improvements, especially in urban centers? So how can private developers engage your ministry for adding to the infrastructure improvements? The other one is practical financing solution. More like a comment is that government should consider collaboration with the private sector via banks to disburse the housing levy towards developer finance. That's from Joy. So I think, yeah, that's a comment. That's a comment. So thank you so much for your questions, ladies and gentlemen. I'll now throw it over to Madam CS for the response, after which she'll give our closing remarks.
Thank you. I will take that most of these questions is a feedback in some of the areas that require clarity. And yes, Karombo Primary School, where you say you went, or you know that it is my primary school as well. And you know, I've done a lot of work in that primary school before being or around being a politician, being the MP. And now I hand over that job to you, because now to make sure that the school continues to be one of the good schools around there. I think that the first question is coming regarding titering center. There was this bad publicity about files being moved from one place to another, to industrial area, and then from there to, maybe you don't know, but to Nyayo House. Then from Nyayo House, last week, or around these 2 weeks, we moved them now to Survey of Kenya, there, the titering center. And we don't have storage, actually, we are quite straining, but we have found a good space for now, waiting to come up with a final whatever. We will arrange those files in order, put them in order, so that the questions of some of the files which are said to be missing could be part of this backlog or these particular files. So I don't want to give like an answer. What we have agreed is that we need to know, some of them were being moved because of the process of digitization. But I think as we came to the end of the last term, things didn't seem to really quite work. I don't know why, but that has been part of the problem, because once you remove files from their registry, and they were not removed in an order that was organized, it has been a nightmare. It's good to confess, but we are coming to the end of that. And we are going to apply our minds and our energy and efforts to streamline that and have some temporary registry at the titering center. But the files are not lost. Even when we digitize, when we put them on board, we don't destroy property files. So towards that, we are thinking of how to come up with with a storage center, so that we can also have the actual files. Should you need to clarify, also systems sometimes can fail. Should you need to recheck or confirm what we have put online, it is your position, and I know you know that we put every document, particularly the title documents, online, so that you are able to access all your documentation, your last transfer, your last transaction. Sometimes you are also able to know, if you are doing a transaction, which particular officer is dealing with that transaction. So it is possible that our aim is that you will be transacting, including now, lawyers are transacting from their offices. The question of whether ordinary, any other, I think ordinary Kenyan can work with that system, I think is relative. I may not be able to tell you yes, because if somebody has not gone to school, even manual papers registering, they normally require a lot of support. So I think this system, we will make it, it is simple, and it responds to you. It gives you the next step. And therefore, for now, but we also are asking, especially for conveyance transactions, transfers, that you give your own number. You also allow the account to be opened. And we also getting your lawyer's telephone number and their full names and contacts, so that we can be sure the person transacting has authority to transact. In terms of security, as we go on, we will be receiving feedback because it is obvious that a few cases can be tricky, but the process is to some extent foolproof, because you also know the officers that are dealing with that. And it's fairly fast even to process a title, because we are also printing those titles, especially the block titles, the GLA, the block titles, block one, whatever. We are able to print, and then, but you have to come and collect your title, and we tell you your title is ready for collection. The last one is the question. There is a question on 1 billion. I think you are referring to some statement by His Excellency the President the last time he came to Mombasa. We are following on this. I have already received a letter from the Office of the Head of Public Service, who follows on the implementation of presidential pronouncements. This will be under one of my directorate, the settlement, Department Directorate of Settlement. Once we are put in funds, we'll be able to deal with some of those issues. But it is not possible to deal with everybody at the same time who requires land or who is a squatter. Kenyans have become very tricky and crafty. They get onto somebody's land or onto public land, they cause problems there, and they refuse to move, they refuse to vacate, and then they call themselves squatters. And many times, and I'm speaking from a platform of knowledge, many times these squatters have owners. There are genuine squatters, people who have the need for somewhere to stay. But there are squatters who have been put in homes, in properties by people who are fraudsters or who actually specialize in stealing of land. So this particular case you are referring to, we are following on implementation of the presidential pronouncement. But sitting here as the cabinet secretary, I'm also going to be asking for money from him. So, so once I'm put in funds, and we will obviously interact with the budget process, because it has to be part of the budget process. I believe we'll be able to deal with it quickly. There is a question on due diligence, the bar being raised above what we knew an ordinary search or just a search. I have seen many cases so far. You know, I've been in that office for only one month, about 1 month and a week or thereabout. I have been now at that office, and I knew also, because my background is that of a lawyer, I know and I am confirming there are people who have altered or people who alter people's titles. How do they do it? They know your particulars. They bring some transfers. They assume it is you transferring, or they pretend you are the one transferring, and they transfer that property to another person. And that's why the need even of photographs for purposes of identities, the need for IDs. We can confirm that we are taking due diligence ourselves to ensure that the people coming to transact are the owners. There are a few cases where you'll find that a register has not been closed and another register has been opened. That obviously is fraud. We are taking very quick action with the support of DCI, despite the challenges of the law, because it is said once a title has been issued, you cannot challenge that title unless you cannot cancel it unless with the force of the court order, blah, blah. But there is also provision. If you find that it was a fraud, it was a mistake, and you are clear that your officers have actually practiced a fraud, we will cancel those titles. Where tutakuacha ukienda mahakama, you will be the one going to court to sue the minister for lands and the owner, the true owner, because we must start protecting the owners of the property. It is easy to tell sometimes when you are looking at the transactions, who actually is causing the fraud. Once we know it is you, we will direct the DCI, we will provide the evidence, but we shall rectify the register. So to that extent, I think lawyers may have to think of further due diligence. I haven't had the benefit of reading the judgment. I saw it in passing. I haven't had the benefit of reading the text, the full text. But I think due diligence is something I have spoken to before myself, and people are relying on searches that are brought by people who are the ones saying, this is my land. You have to do your own personal search. You have to maybe even ask your lawyer to do the personal search and do further interrogation of the register to just be sure, because you are spending money, you are buying. The other question is on one-stop shop. That is where we would like to go, of one-stop shop. For now, we have a Nairobi registry. You cannot necessarily transact from there if your property is in Mombasa. I know Mombasa has a lot of issues, numerous, huge issues of squatters or people claiming land that is not theirs. In terms of absentee landlord, that is another level. And that level means people know the owner of that land. They want to assume they are either dead or they come up with false documents of death and they want to take over the land. So when the owner comes up and says, no, I'm the owner, then we have these cases of what do we do with the squatters? Many times the squatters, I have said, have been taken there by individuals. Wanasiasa wanachangia sana kwa hiyo maneno. And I know there are those who practice in that area. Surveying, I think this question was not very clear to me what you are saying, but I think you are talking of the registries being more effective, efficient, having survey records also, maybe with the current technology, which we are hoping to achieve, so that you can take less time in coming up with your survey plans, approval processes, where we can shorten them through the law, we will. But I think the poor registries, lack of facilities in the registries is one of those things that are priority number one on my desk. Especially the outside registries. Nairobi registry has received a lot of attention, but we have problems in Mombasa. We have RTS files from Kilifi coming to Mombasa, so people have to go all the way. We have the flanking machines all dead. I have only 12 remaining countrywide. They are not they are not available. So we are thinking of what other way do you use to do the flankings? You know, the endorsement for stamp duty, the payment of stamp duty, because those machines which you know, especially the lawyers and their clerks, they know that machine was from South Africa, is no longer available in the market. Some have gone, are not in use. So sometimes we take longer because the pileup is huge. Obviously, we are paying through ADIPay. It's working. There are times when access is a problem, but the reason why we also want to pay through one source, one point, is because of loss of government revenue. And indeed, there has been a lot of loss of government revenue. With a centralized system, we are going to reduce this, and surprisingly, we may even increase revenue by 3, 4, 5 times. So there is resistance also from some of our, not just by ministry, but some of the government departments, but we are dealing with that. But payment should be, and I know we had another system which was possibly, already in place and working according to some of us or some people, was doing very well, but now eCitizen is the one that we are using. Finally, I think expectation. We want to make sure that everybody can understand the process. And I think it is not the end, it's a beginning. Where we are is a good start. The simpler the processes, the better for everybody. The shorter the processes, the transaction periods, the better for everybody. Of course, faster turnover for me means more revenue, faster collection, and also you are able to move from there also to be able to take your document where you are going. So growth is accelerated. So we will work holistically with everybody to shorten the processes, to make them efficient. And that's why we will not stop at Nairobi Registry for digitization. We are going to engage partners, development partners, for the other registries. It's work in progress. Thank you very much.
Thank you, Madam CS, and really appreciate your time. She deserves another round of applause. Just so you know, as we speak, the president is in Kibra inspecting the affordable housing project. This is something that is close to his heart, and seeing one of his right hands here, that's a good indication of how serious this meeting is and the convening power that we actually have. So I'm gonna exit you on stage, of course, escorted by none other than our CEO. You'll be able to enjoy the exhibition stands outside there. Before we join you shortly, let's give a round of applause as Madam CS leaves the room. And we wish you the very best in the achievement of the 746,000 units in the pipeline. Ladies and gentlemen, at this point in time, as Madam CS exits, we appreciate her for her time. I'd like now to invite George Mora, who is the moderator for the next session, really quick before we now officially break for the day one of our conference. So just as he comes up, I'd like to do a short activity just to get us in the mood of it. Shall we all please stand? Maybe we can stand and stretch a bit. I know it's been a long afternoon with the 2 cabinet secretaries joining us this afternoon. I'm sorry to ask developers, financiers, and homeowners how to spell coconut. How do you spell coconut? Somebody already knows my activities. So it's CO, C to the right. So the C to the right is like this. That's C to the right. Okay, see, some of you know my drill. So C to the right. Okay, then O. Then we have C to, then the O. Then there's the N. And then there's the U. And there's the T. So I need you to say coconuts as you do the activity in that quick succession. Are you ready? Can I hear an oh yeah? Good, sir. Are you ready? So C to the right, let's go. C, O, C, O, N, U, N, T. Good job. Thank you. George, over to you, to your panel. You can have your seats, ladies and gentlemen. The next panel will be as brief as we, of course, come to the tail end of the program. Karibu sana, George.
Thank you. Thank you, Laban. And we want to go straight to the last session. I know it's taken a bit of time, but it was very important for us to have that discussion with the CS. I want to call upon our final panel, and I will start with Tyrus. Tyrus is a director at NCBA. Are we missing Tyrus? Okay, I know he's please inform Tyrus that we are starting the next session. Tyrus is a director at NCBA, taking care of SME and retail banking with 30 years experience. I call upon the second panelist, Emmanuel Mwema from Stanbic Bank. Thank you, Emmanuel. Emmanuel is a manager who handles approvals, the approval process, a mortgage approval process at Stanbic, and also handles the developers partnerships. Tyrus, please come on stage. Stella Mutai is our next panelist. She's the head of mortgages at HFC with over 15 years experience in the real estate, both at relationship management level and product development level. And the next panelist is Edward Charo, GM Credit at Imarika Sacco. Karibu, Edward. Edward is also has vast experience in the financial sector, both at product development and sales. And currently at Imarika Sacco, which is one of the biggest SACCOs in this region. So with that introduction, I'll just go straight to the question. I know time is not on our side, and I'll just dive into the discussion. Looking at the challenges that have been highlighted in the affordable housing space, inadequate, affordable and decent housing, which has been attributed to a number of issues and challenges. One of it being the high mortgage interest rates in the market, low income to household, rapid urbanization, with about 39% of Kenyans living in the urban areas, and of course a big percentage of that in the slums. Inadequate supply of decent housing due to fragmented nature of the real estate sector, high development and land cost, focus on the high-end market by developers and financial institutions because they perceive that the sector is more lucrative as opposed to the affordable and the low cost. Of course, occasional delays in the issuing of building plans, approvals, and the titling process, all that. So coming to your four institutions, and I'll start with the way you are seated from this side. Yeah. Tell us how your institution has positioned itself in the affordable housing market, and how are you taking advantage of KMRC offering, and how is the market perceiving or receiving your product? And I'll change the order. so that I can give the lady, the first slot. Stella.
All right, thank you. Thank you very much. My name is Stella Mutai. At HFC, you'll know that HFC is the leading mortgage provider or financial provider with a wide range of financial products cutting across various segments. And for one, that you'll be able to know that HFC was the first first primary mortgage lender to be able to launch the affordable housing proposition, something that was taken very well in the market. Also, HFC was the first was a founding member of KMRC, something that we're also proud of. So with that, noting that being the first financial provider of affordable housing proposition, as well as also being the first, being the founding member, we've been able to launch exciting products and work with various partners in the market. One of them is we've been able to launch, to be able to finance artisans, the Juakali Federation, out of the ordinary. You'll be able to know that HFC is not only financing customers who have salaries, also we are able to go out of the game and finance customers who do not even have incomes or do not have reliable incomes. We're able to look at them differently. In addition to that, we've been able to look at Athletics Kenya, whereby we're able to finance various athletes and to be able to acquire properties and affordable housing. So it's something that we've been able to develop over time, and we've noticed the market is very receptive and happy with our products. And also we want to be able to grow bigger and increase on our financing.
You have a presence in this region?
Certainly, yes. We have our Mombasa branch, and we have the team outside at the stand, and we're able to work with customers as well as also guide the customers through the property acquisition journey.
Cyrus?
Yeah, thank you. Good afternoon, everyone. So indeed, I think challenges abound. I think Johnston is in his morning comment said it's a problem that requires a multifaceted solution, because I don't think there was a simple. As I alluded to earlier, I think the supply side is beginning to get resolved. I think it's receiving a lot of necessary focus. We're a participant in this as well. So developer support. So developers that want to develop in the affordable housing sector is something that we're very interested in. I am actually personally more bullish about anyone building a 2 to 5, 6, 7 million house than the one going for 40, 50, 60 billion. I strongly believe, a 5 million shilling house will always have a buyer. Whether that's an affluent person or somebody in the affordable sector, everyone, or many more people can afford that than say if it was 50. So I'm a lot more bullish on that. And yes, we have a good track record of supporting, players in this sector, and we continue to have appetite for that. On the retail side, I think on now addressing the demand side, NCBA was also one of the founder members of KMRC. We have gone live with 2 products in this sector. One offers up to 105% financing, which really reduces that cost, that amount of money that you're asking somebody who otherwise doesn't have a lot of cash lying around to contribute if you ask for the traditional 5, 10, 20%. And then also another one where if you do not wish to take advantage of that, then you can, or you have some savings, then one can. So we are active in the sector. I think later on we can look at some of the things we need to continue to do to accelerate the uptake of mortgages, which, as I said earlier, is one of the conversations I don't think we've had enough of today, and I'm looking forward to adding my thoughts on that.
Thank you, Tyrus. Edward.
Okay, thank you. My name is Edward Charo from Imarika Sacco. Our major operations are within the Kenyan coast. And from the discussions this morning, one of the major challenges we face is the lack of titles along the Kenyan coast. And to move around this, we partner with developers who take now the major part of doing the due diligence, and they have land that has titles. So they develop. What we do, we market those facilities now to our membership through financing. Now, as a member of KMRC, then we are able to offer them credit facilities at the rates that has managed to help them. So the aspect of land, challenge of land titles is real, because it's a real challenge along the Kenyan coast, but we work through developers. So we have a number of partners. You've seen Gulf, the one doing at Buxton, Junda. I think the challenge that was also mentioned, the off-plan financing, because in most cases, if to give a loan and it takes 18 months for that project to be ready, then what happens with that loan before the house is complete and this member is able now to move in? So as a SACCO, we either finance our members to purchase ready-made facilities or now assist them in terms of developing on their own. Thank you.
Thank you, Edward. Emmanuel, how does Stanbic come into this conversation?
Okay, thank you, Geoffrey. My name is Emmanuel from Stanbic Bank, and what I can say is that as a bank, we come in terms of our product offering. We are known to offer solutions to our customers' needs, which I believe is a very critical thing in terms of the mortgage business. And one of the things that we look at for our customers is we offer the solutions across board for salaried individuals, for self-employed, and also for Kenyans in diaspora, which is very key. So again, just to comment on the women, we also have a preposition called DADA, which we also push the agenda of affordable housing, and it's been going very well. And as per the statistics I have within our institution, is that women are the most borrowers for affordable housing product within our bank. So that's a good thing. So to the next thing on how we are taking advantage of the affordable housing product is, of course, the tenor, which gives you, in terms of flexibility of repayment, and also when you look at the rate of 9.5%, which is a fixed rate and runs up to 25 years, that is also something that gives clients something to bank on, especially currently when we have rates going up to 15–18%. So thank you.
Thank you, Emmanuel. I'll go back to HF Stella. For a customer who is, watching us, listening, or seated at the audience, what is the process? What are the steps that they need to take to get a KMRC-backed home loan?
All right, two critical things a customer needs to have. One is income. As I said, HFC, as long as you've got a consistent and reliable income, that's something that we consider. The other thing that you look at is the property that you're going to be offering as security. So once you have those two and you're able to tick the box, then you're able to support the customer, you're able to finance the customer and work with the customer throughout the mortgage journey. So you find that most of the customers, or when they come into the bank, they do not know where to start. And we're able to support these customers to offer them property solutions. So as HFC, we have our own development, and we recommend customers to either to choose some of those developments or either from some of the partners that we are partnered with. And once they get the property then, and we have pre-qualified them, then they're able to progress the next stage whereby we advance or we approve the facility. And for these, we usually work within a very short time, and we try to offer them the best turnaround time so as they can be able to be confident, or even they can be confident. Once we have approved the facility, we progress to the next stage whereby the customer accepts the offer letter, then there's evaluation, and there's a lawyer stage. But all through these stages, we are able to work with our customers and guide them on the best way, and even to be able to keep the customers updated. But the critical step, or the first step that the customer needs to have, is the income. And as long as it's consistent and reliable, we're able to, those are the two things that we consider. And we don't limit to a customer who has a salary only. It can also a customer who is self-employed, a customer who is on contract, a customer who is in consultancy. And even, that's why I said earlier, we have the HFC Ujenzi na Makao program whereby we finance artisans. So we are very open to our customers as long as they've got a consistent and reliable income.
Thank you, Stella, for that. And Tyrus, we have customers who think or believe that this product only supports outright purchase. Do we have options where customers could actually do constructions within NCBA offering?
Yeah, absolutely. You know, for us and the way we look at affordable, you know, I might have answered Stella's question a little simpler and said the process is the same as every other mortgage. Yeah, it's the only difference is that the price is lower because we target it to a very specific segment of customers. And so to access it, we have multiple mortgage solutions that then help a customer to be able to do that, whether that is plot purchase and then build, whether that is build on a plot that you have, whether that is buy a completed unit. The solution is more in the pricing, you know, and the restriction in terms of that person that can access our pricing for obvious commercial reasons. Otherwise, all our entire suite of mortgage solutions are available, also including someone who might have built. And I have to say at this point, I really struggle with this idea that there are only 26,000 mortgages in Kenya. I think there's hundreds of thousands. I've never known whether the SACCO statistics are in that number. And it's never been clear to me. Is it there or not? It's not. So
it's only
fine.
Institutions that are, you know, through the central bank.
So there's a lot more mortgages out there. I think there's also a lot of our customers that take personal loans. Some of the developers that are here, I heard Mina saying mortgage buyers are only 2% of their product, or rather their sales, only about 2% go to mortgage buyers. I asked my friend Lemmy there, he told me 10%. He's doing a lot better. But then he later said less than 10%. Let's be honest, developers have not liked mortgage buyers because processes take too long. You don't get paid as a developer until the end. And I know one of our models is that if you get paid in part, that helps finance a project. So to that point, a lot of people have taken personal loans so that they can pay developers cash and not have to go through a mortgage. So we also do equity release, where if you built your house the painful way in short-term loans and now you want to make it a much longer, we can convert that into the affordable mortgage, and that provides a significant amount of relief to customers. Thank you.
Just following up on that, there was a discussion about off-plan, solution. Where do you see NCBA playing part in that? And are you looking at, replicating that across the industry? Because it's such an innovative solution that we need to offer to this market.
Yeah. I've just said developers don't like mortgage buyers. We don't like off-plan mortgages. There's just drive around Nairobi, there are too many stuck projects. There's usually a bank with a very upset customer and a developer who, for whatever reasons, did that. In the earlier days, this was a bigger problem. We've gotten a lot better in construction finance. We used to give people money and the first thing they did is buy a Range Rover, and I don't mean any disrespect to my colleague developers, but you know who I'm talking about. We structure construction finance better. So we're getting a little bit more comfortable with the idea of off-plan mortgages, especially because 10, 12 years ago, people were just getting, this was your first project. and then we did off-plan and they got stuck. A lot of our developers now are on their 7th project, some even 10 projects. They've completed and sold. They've gotten a lot better. So we're getting a bit more comfortable with the discussion about an off-plan. But for a first-time developer who has just retired from my banking job, got a little bit of money, has a plot, and decides I can do this thing as well, we remain a little bit more cautious. The discussion Mina showed us, I think is a way to go. I think that's a developer understanding banks have a problem with construction risk. Developers have a problem with not being paid until the end. Customers need to start committing and so on. And I think that was an innovative solution. She's laughing because we have a lot of battle scars over that conversation. I think there were, for different, very unique reasons, I think why we couldn't do it, but that's, I think, a very innovative way to start solving for that off-plan mortgage. Like Johnston said earlier, it's a multifaceted problem that doesn't have a very simple solution, and so that's a great example. And I think you're certainly, leading the way in helping, open up that opportunity.
Moving on to Edward, I think you are quite familiar with this region, the challenges that you have alluded to, especially when it comes to land titling. So from your perspective, what can make this sector work? What innovative solution do you think we should come up with? Or do you as an institution intend to come up with to solve some of these challenges in this sector? And considering that KMRC funding is now available to your sector, and in fact, it was a very deliberate move by KMRC enlisting 55% of their shareholdings actually on the SACCO. So 11 SACCOs are already participating, and there was a very intentional decision because of the input that SACCO has on this sector.
Okay, thank you. On the land issue, just as I mentioned, one, because we have land available, the few pieces of land that are titled, the prices are all equally very high. The prices of land where they have title. So we help the members move through the phases. One, making sure that we support them in the acquisition of the land. At least we are sure of the validity of that land and before we move to the next level of the construction. Because there are members who deliberately opt to do self-construction. So that is the type of support we give them. So we either supporting, we buy ready-made properties after proper due diligence, or we help them also in the acquisition of the land by way of going through that process. We have a legal department at the SACCO that undertakes also to support our clients in terms of due diligence on the land. Yeah.
Thank you. Emmanuel, Stanbic is a very key player in this sector, in affordable housing. Looking at your participation, the access of funding through KMRC, there's a piece that I want you to talk to on customer financial literacy. What are you doing about it as an institution?
Just repeat again.
Customer financial literacy. What is Stanbic doing to enhance customers' financial literacy and the customer journey? Because you understand today, there are competing priorities in the market. When Stanbic is selling both a commercial loan and a KMRC-backed loan. So how do we tell customers that there's actually this nice product that is a single digit that you're offering?
Okay, thank you, Geoffrey. So one of the things that we are doing as a bank is we are offering financial fitness. We have a team that goes to companies, to different forums, just to offer that financial fitness to customers, just taking them through the journey about their finances, what they need to prepare if they want to do like home ownership in terms of readiness of financial. And another thing is preparation for budgets, like the deposit budgeting, and also in terms of savings, because you'll find like most of the people when they come to borrow, one would come and they are married and maybe they can't qualify for that facility as a person. But when you educate them that if they combine with their spouse to get that facility, it becomes a better conversation with the client. So we usually take the conversations to the customers, and I believe most of the Kenyans out here are not really informed in terms of what KMRC offering can do to them and to their lives. So I believe more sensitization needs to be done and make sure that we achieve the goal of affordable housing. Thank you.
Yes, Tyrus, you want to chip in?
If I may just add my thoughts, I couldn't agree more. I think we often say that a mortgage is your biggest financial, one of our individual biggest financial decisions we make. It's true for that. I've talked to people who they've heard about it, they're wondering, but I don't want to be a slave to a bank for 20 years. You know, they think that once you take a 20-year mortgage, it means you must pay until the last day of the 20. I've met people who are like, yeah, sure, I want this, and I really do. And then you look at the payslip and there's absolutely no breathing room. We have been very successful at lending consumer loans, that there's absolutely no room for people to take a mortgage even if they want it. And so I couldn't agree more. I think our teams are speaking to customers, and it's first almost financial therapy before you start selling the product. And it's going to be really important. I have mentioned to the State Department of Housing that I think this will be a big, very big bottleneck to the uptake of mortgages in this market. And I'll give you a few examples. In UAE, the Central Bank of the Emirates limits personal loans to a 4-year tenor. The longest I can give a personal loan is 4 years. And then they also limit the maximum amount you can borrow. The effect of that is that people's incomes have room to take up mortgages when they do need them, right? In Singapore, the way they stepped down, they have a similar limitation, and they told banks in the next 2 years, you've got to step down from giving. We give up to 10-year loans, personal consumer durables, which is part of the other reason why people have found it an easier way to finance property and housing acquisition, because it's unencumbered, it's unsecured, but it is risky and it is not healthy. Singapore said in 2 years, you've got to reduce to 8. In another 2 years, you've got to reduce to 6, and in another, and they continue in the process. I think things like that will begin to create breathing room. How we deal with digital lenders, I don't know yet, and how you can regulate those, because banking is easy. But I think the fact that people need to financial reorganization, education, and then reorganization for us to then be able to insert that loan deduction, whether or not the revenue was reliable, is a real challenge that I think is really limiting the uptake of mortgages in the market. And I think we need to look at it holistically. Personally, from where I stand, I think a customer that is taking a mortgage massively improves their credit profile, their economic standing, their social standing. And so it is desirable. If the trade-off is that we slow down this personal lending engine, I think it's a conversation us as bankers have to have. I know what you guys think about it.
I totally agree with you, Tyrus. And in addition to a home being the most expensive investment one you'll ever make in life, it's important also to be able to encourage the customers. And even one of the things as financials, we need to be able to do across board is to encourage customers to be able to save towards home ownership. You'll note the closing costs that come with the property ownership, they range in between 6 to 10%. And once you include even the deposit, it's a higher amount. So it's important to be able even to encourage the customers as they're looking for that property to be able to save. And even when they're approaching the financial institutions, to be able to have in some equity contribution. The moment whereby you're able to have some skin in the game, it makes you to be committed to the property. And in case of instances whereby there's shocks in the macroeconomics, like currently we have, you find that you still have flexible repayment. So if, for instance, I'm able to borrow an amount of 70% from a financial institution, or even from 80%, in case of shock waves in the macros, makes me to be able to accommodate my income within that range.
Thank you, Stella. And just to highlight some of the benefits that a mortgage gives to the end consumer. Of course, we can't forget the relief on interest. That's a direct benefit. That on the interest that you're paying, you actually get a tax relief on it, which is quite it comes in handy. And of course, the capital appreciation, because as you invest in your property, you continuously it appreciates while your loan is going down or it's decreasing. And specifically looking at the KMRC offering, the up to 8 million, you can actually access a home up to 8 million, single digit, that is less than 10%, fixed interest rate, which is the first one in this market, and a long tenor. We are talking about up to 25 years, especially now that rates are shooting. Rates are increasingly shooting, the commercial rates. It is a high time that we need to give this product the prominence that it deserves, that this is a game changer in this market. And looking at these institutions that are offering this, what would be your closing remarks to the audience and to the listeners? And I'll start from Emmanuel.
Okay, thank you, Geoffrey. Mine is just to say that with the government support in place and of course KMRC driving this vehicle, I believe us as financial institutions, we just need to go out there and make sure that this product is well known to the market and make sure that we also support from our risk appetite side to make sure the customers get what they are looking for and actualize the dream of affordable housing in the market. Thank you.
Edward?
To thank KMRC for this opportunity to us as financial institutions, that we are able to give facilities over a very long period of time. I know that releases liquidity pressure on the institutions. Otherwise, we'll be tying in member savings for longer period. So great appreciation, and we'll keep on pushing this and creating the necessary literacy required to our members. They get to understand the benefits of the mortgage facility. Thank you.
Stella?
Thank you. Thank you for the opportunity. And for me, what I can be able to say is that HFC has financed over 18,000 families in the last over, I think, 50 years in Kenya, and over 500 families in the coastal region. Coastal region becomes the second most vibrant property market after Nairobi. And since it's the second most vibrant property market in the property market, then this shows this big opportunity with the very many infrastructures are coming around. We have the dwelling of the Mombasa Malindi Highway. We have the Dongokundu bypass. That forms an opportunity, and that's you find that the property market will still continue. There will still be a high demand for properties in the coastal region. So we are happy to be able to support the region to be able to grow, to come up to where we are at Nairobi, and then to even to be able to have more master plan cities coming around in the coastal region. Thank you.
Thank you, Stella. Cyrus?
Yeah, a couple of thoughts. One is, I think transformations never feel like so when they were starting, right? Revolutions the same. So I think it's encouraging to look at, this is the third of these conferences. You can just tell people are now coming with solutions. There's a lot more thinking. I think there's a lot more happening. I think the theme this year, economic transformation and social inclusion, I think that's exactly the point. I think because we are early adopters, whether we are the product providers and maybe the product isn't moving as quickly as my business case to my board said, or you as a developer, I think we have to stay the course. I think we have to stay faithful. I think we have to believe in the transformational potential for this. I agree with Stella. I'm seeing the coast region moving mortgages a lot it's growing quickly. When I look at my year-on-year growth, in fact, the Coast Province and I jumlisha Coast Province all the way from, the whole strip is growing, second fastest for us. I also noticed from a sector perspective, mortgages below 6 million were the fastest growing year on year. And those are great early signs. Now, whether that's something we've got to keep celebrating and moving on. I think on supply side, infrastructure will be really important. There's an affordable development about 40 kilometers up this road. I asked my colleague who's in that segment, would you buy? He said, my problem with it is that how much is it going to cost me to be commuting to Mombasa for work, right? Me, my wife, and my 3 children. And so I'm better off renting in Mombasa, because whereas I can afford the mortgage, getting to work will be. So these infrastructure developments, roads will be helpful. But maybe the government needs to start thinking about rapid rail transport and things like that, because that really lowers the cost. And suddenly it creates access and developers will benefit, the market will open up. I'd also like to challenge the developers to be disciplined around who you want. I think a lot of our affordable projects, and I know I'm provoking this, but a lot of our developments in this sector are being bought for cash in full. They're not being bought by people that are intended to be benefiting. And it disturbs me as a Kenyan, because I think when the government gives land in Starehe, in the middle of the city, that land is worth billions. For it to then be bought by affluent people, who are buying 10 units in a go, is, I think, a corruption of that system. I've mentioned it to the State Department of Housing and said, Singapore, for example, if you get a housing development bond from the government, if you buy an individual house, you must sell the government unit. You must sell it. You cannot register a private unit or a second unit if you still have an affordable mortgage, because clearly you've become, now you can afford, if you get my meaning. Policies like those are socially disrupting, but they will be important. Otherwise, what we're going to just end up is, I'm a landlord in Zimmerman, now I'm a landlord in Park Road in Starehe or in Shauri Moyo. I'll just continue making more money, and those people that we wanted to help when we started this social wealth transfer, may not benefit. So I think that's from a policy level a challenge I would give. Bankers need to be braver, me included. I don't know why mortgages have to be for 20 years. No one will anyway ever pay for 20 years. Maybe we could go to 35 or 40. There are markets that do, no repayments for the first 5 years or whatever. I think we need to be a lot more innovative, and I think we need to continue on that. Our other players, valuers and lawyers who have a law that says what they should be paid in this world of an open market, I think we need to be realistic about these things. And I know I'm being a little provocative in my comments, but we're never going to solve this problem when the expectation is every unit must be valued. If you go to Unity Homes, unit D1 is exactly the same as A1, is exactly the same as F5. So valuing it, we're just making money for an industry that I think needs to wake up to the reality. One of the ways you make units affordable is every window is the same, every door is the same, it was made in the same place, in the same way. So there's absolutely no value we create by valuing units. Lawyers need to perhaps work with us and figure out an act of parliament that states what your salary will be is not how an open market operates. So those are my thoughts. I think we are working on it. I think the early signs are positive. I think we've got to continue challenging each other and continue making the progress we've started. Thank you.
Thank you, Tyrus. As I throw it back to the audience for any burning question, of course, standardization is something that is very critical, and you can allude, as you answer any other question, you can actually talk to that standardization, especially in the processes within the mortgage process. How do you see a standardized way of looking at things so that there's the same feel for a customer who goes to HF for a product, and the same feel when they go to Imarika for the same product, that they have a similar assessment, digital assessment? Are you also looking at innovation in the digital space where you can do alternative credit scoring for especially SMEs and all that? But as you ponder on that, I will open it up to the audience for any questions. We can pass the mic.
Okay. I'm also checking those who shared online.
My question is with regards to small businesses. Are there any initiatives as far as alternative credit scoring is concerned? So for example, let's say somebody runs a salon and they've been running this salon for about 5 years. So they have a till number, but then they don't have audited results, or, you know, how would somebody like this be able to access a mortgage?
Let's take some more.
All right. Okay, one at the back.
Good evening. Mine is really a comment. First of all, I agree entirely with Tara's around the issue of off-plan financing, and I'm very happy about that solution by Unity. We do have another solution, which is about custodial accounts for developers. So that way we can link, and when I was listening to her, I can see most of the projects you've listed are under construction. I'm one of us that are currently involved in one where I don't know where my money went and whether I'll ever get my unit. So to manage that risk, what we do is we get you the buyer and we get the developer confirmation that we have got end user financing approved. You can actually, as a buyer, because the developer wants to see if they don't want the mortgage and they want the payment installments, we can hold that money in trust for the developer until the unit is complete, and then we hand over that money to the developer. That way, we are taking care of both buyer risk, because the developer is not sure whether the buyer has enough funding, and most buyers are shying away from that mortgage long term, so they can deposit it. To ask also for diaspora buyers, but also for the buyer, we are protecting the buyer that the developer will actually deliver. And the reason I was very keen on that guarantee, whether that guarantee is actually a bank guarantee or a developer guarantee, is because taking the developer guarantee alone is tantamount to me still taking the construction risk. Thank you.
Thank you, Peter.
Thank you.
We have some more here.
Okay.
Can see Tanui there.
Yeah, mine is a challenge to the banks. We know we have this belief that mortgages take too long to be processed. And I think you guys are also happy with that. Can you for once just make us happy by making a disbursement within 15 days? That I can come, get onboarded, and in 15 days time, I have a disbursement. Because it's all about, because when Stella is selling to me, the promises I get, I'm just giving an example, yeah? The promise I get at that time as a client, I'm telling you, man, I go home saying I'm getting a mortgage. 3 weeks down the line, there's a department called risk. You know, they bring a new department. Oh, you know, it's at risk. Risk is here to give us feedback. Tyrus, why don't you guys work on this thing called risk? And, you know, trust is all about affordability, eligibility. For once, just do a disbursement below 30 days. And I'm telling you, we will grow our loan book from 26,000 mortgages to even 1 million mortgages. Why is it not possible? It's because we all believe ni ngumu sana. Hii kitu ngumu. Mortgage inachukua muda. I throw back the challenge to you guys.
Well put.
Thank you, Tanui. I think there's a final one
Feel
there.
free. Oh, okay.
That we can close it. Then they will take the questions.
All right, my name is Oma. On environmental and social safeguards, what are the financial institutions doing to onboard these principles of ESG in the housing projects? Thank you.
Thank you very much.
Thank you for that. I think I will open it up. I'll allow the panelists to respond to the questions as they deem fit.
All right, maybe I can start with a challenge to the banks, Laban. That challenge is taken. And what I can be able to note is that for a customer, we'll be able to give the customer all the information that they need to be able to give. And once, for instance, case in point, you are employed, and you're able to give your 3 months or the income and property documents, at HFC, I may say we're able to give or to be able to give an offer letter within 3 to 4 working days. So you find the longest, most of these transactions, they take in between 45 to 60 days at the lands office. Now, with a promise from the CS who was just here, if she's able to finalize on the automation process, I believe we'll be able to get to less than 30 days, whereby we'll be able to be transacting from the comfort of our desks. Even for me, I'm looking at the instance whereby we're able to unlock the matters that have been pending for the longest. So if at all we're able to finalize on this automation process at the lands office, because you find that the banks in the home mortgage process, we may say it's in between 90 to 120 days. The touch points from the financial institutions is very minimal, very few days. The longest, it's with now the third parties, whereby we take the longest. So with the automation process, it will go along well. Then to Christabel, and I'll be able to give the other panelists to be able to comment on the informal sector. I'll give a case in point with HFC, Ujenzi, and Macau program, whereby we're able to finance Juakali artisans. And those are out of the ordinary people in the society. Maybe someone will say, I'm not going to be able to finance these people. But at HFC, we've been able to finance quite a number of them. They are homeowners at the Park Road project. And more also, we are also willing to be able to replicate this program to other counties. Then finally, just to be able to give the mic or the comfort to the other panelists on ESG. ESG is something that is coming up and it's been adopted very well. And sustainability is the next big thing. One of our purpose at HFC is enriching lives. And we enrich lives through financial empowerment. And we've adopted ESG as one of our strategies to be able to support our customers. So green building comes in, and green building comes from even as simple as adopting to solar panels, reticulation of the gray water. There's also the planting of trees. The other day we planted 2,000 trees in one of our developments, and all this is still adoption of the ESG in our program, and even supporting developers. Thank you.
Thank you, Stella. Any other taker, Tyrus? Let me comment on the mortgage process. I don't know whether you know this, but if a customer defaulted on December 31, the earliest a bank can legally manage to sell that property is somewhere around October. It takes about 270 plus days of sending you notices 1, and then you send a notice 2, and then you send a notice 3, and then you send a notice 4, and then you tell them, now if you don't really pay me, I'm now actually going to put you in the newspaper. And any one of those days can be interrupted by a guy showing up and saying, oh, I have a wife and she never knew that our house was mortgaged. And that can reset the whole clock. And then you have to now negotiate with a wife you didn't know existed when the mortgage was being taken, to now figure out whether she will agree to pay or not. For those reasons, and the troubles that banks have gone into trying to sell properties that were ostensibly security, processes have been added and added. It used to be you needed to get spousal consent, for example. Then it became, even if you're not married, you have to swear an affidavit that you're not married. Imagine me telling that to a 25-year-old who's thinking, so what proof can I give of the absence of something, you know? So you have to, that means that's a trip to a lawyer that has nothing to do with the bank, nothing to do with the decisions that we made about giving you a mortgage. But if I don't do it, it has come to bite in the end because somebody says, yeah, I was married, you never asked me, or something like that, right? In the affordable sector, medicals are not an issue. There are some mortgages where you have to do a medical. The grief we get saying, so you think I'm going to die? Oh no, we need to know that you're healthy. But why? Because we've got to insure the property. The insurer says, for this one, I want there. So there's a lot of complexity in that because of the size of the financial. Can it be simplified? Obviously. I think Stella has talked about
For example, digitization. I do agree with her, and I'm not shape-shifting to the government, but it's been a pain to register a property. And if you don't, you simply cannot disburse. Because then I'm pretty much disbursing 5, 10, 15, 20, 30 million unsecured. Someone can run to court and say, stop, 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 this is my property, I don't know who's buying it, I never agreed. So our courts have become almost a millstone that we're so afraid of it that you keep layering processes and processes and processes to be able to actually have that security that truly then means something to you as a financier. It is a challenge that I think we are all aware of. We talk through it in KBA and with all those forums that we lobby through, but it remains a real problem. I think to Christabel's question, if I may just add a little bit of what she said, these days, I don't know of any bank that will not take an M-Pesa statement as if it was a banking statement. Yeah. Stella mentioned something called consistency. Consistency is what we bank. You tell us how you've been making your money and how long you've been making it, and that there is evidence of it. Whether that, if that evidence is under a mattress, very difficult. If it is in M-Pesa or bank A, B, C, and you're talking to bank D, we will look at statements, even a SACCO statement, right? If a customer is banking fully in a SACCO, we will take that statement and so on. So it's an often myth that banks are not using. All we want is evidence of the reliability of the income that you make, whether it's a loan or a salary. It has to be going somewhere for it to be bankable, and that's the important criteria to use. I just wanted to add that one of the most exciting things I had today was a risk-sharing framework that Geoffrey and your team, you guys are working on. And I think that stuff is going to help us be a little bit braver to help the saloon person. They've been in business for 4 years. Is 4 years enough for me to feel to do a 20-year bet on a financial arrangement? Maybe, maybe not, right? But risk-sharing frameworks can be very useful because they make me a little braver as I go out, to do these things. Because ultimately, and I whispered to my colleague who was seated, they've left, I said, why do people think banks don't take risks? Our business is actually to take risks. But if we can find frameworks like this, I was excited to hear about it. I'll be looking out for, sharing our thoughts and participating in that process, because I think it will be another one step to help us, I think, demystify this thing and be able to simplify the risks we feel we're taking.
Thank you, Tyrus. Any other taker so that we can?
This goes to Christabel. Christabel, for the self-employed, like the salon person, if it's not a limited company, they're just operating their business, we don't need the audited accounts. So we only request for audited accounts for companies, limited companies, where they're supposed to provide like 2 years previous audited accounts. So I believe that's okay.
Okay, shortening of the process does not mean compromising, especially in terms of the due diligence process. So as much as we'll be working towards shortening, we'll not want to compromise anything. And for the small business SMEs, the consistency and reliability. There has to be also consistency in terms of how they deposit, and there is need to authenticate the sources, whether that business really is the one supporting the deposits that come into the financial institution. Thank you.
Thank you. And just closing points, just summarizing a bit of what I've taken out of that conversation. I think as a customer, you need to have a consistency in your credit history. You need to have a way of documenting what you earn in whatever form, so that you can present that to your banker. I think that is very, very important. I think the next thing we need to deal with as a society is our culture, because we have a culture of borrowing to default. And that's why the bankers will always put layers and layers of documentation, because we need to work on our culture so that this trust that Laban is talking about, you can only be trusted by how you perform or how you behave. But as a culture, as a people, if we have intentions of borrowing to default, then we cannot help it. Yesterday, we were having a discussion with some cultures like in India, where they have done marvelous jobs when it comes to micro lending. And it's because of the culture. Their culture supports that. As a neighbor, I will not allow my neighbor to default, because as a culture, we don't condone defaulting of a facility. But in our culture, how do we take these things? That when we are fighting the bank or the lender, we are the heroes of the village. Watanijua. Yeah. And actually I think the hardest job when it comes to the banks is debt collection. Yeah. So if we can change this, then the lender will look at us with a different perspective, and then there'll be trust. And we can shorten that process by giving you the money before the registration of the security is done, because nothing will go wrong in the process. Lastly, innovation. I think as a people, we need to innovate so that we can come up with better ways of risk assessment, better, faster processes, and all that can be done if we put our minds to it. We've seen a lot of innovation, and I think the risk sharing facility is one of the innovation. And if it comes to this market, it's going to revolutionize how we look at lending, and we'll be able to push down lending to the markets that we're not able to access. So let's put our hands together to these good panelists for a good job. And thank you all. Asanteni sana. I think I take it back to the MC.
Done well. And thank you to Geoffrey Mora. Please, let's give a round of applause to these panelists. And to those who are joining online. I think most of us were even getting worried that, why are we all progressing? I'm appreciative of those of us who also joined us online, and also the questions and comments that came through. I really want to thank each and every one of you for your patience to have been here up until now. It's about 6:30. Thank you so much. We apologize for that bit where we extended the program in taking care of the protocols, of course, with the cabinet secretaries. Tomorrow is day 2 of our conference, ladies and gentlemen. Advice that will not wait for any guests. I think the conference has officially been opened by the CS, so we'll just get straight into it. We'll start at exactly 9 o'clock. Please remember to just come in with your badges as well, just as you did today, and we'll keep to time. I hope there's not any announcement I'm missing. Oh, yes. And another cherry on the cake. We have a cocktail in the evening. So it will be my absolute pleasure to make sure we cleared on time. That's tomorrow, yes. Once we come in, we'll make sure we finish up on the day's programs, and let's prepare for the cocktail reception in the evening. Asanteni sana. See you all tomorrow at 9 o'clock.